Good morning. Yep.
Area focuses on the insurance business. I'd like to see a little more information about what the game plan is and to see the team. But to be candid, Berkshire Hathaway has not had. They're not known for transparency. They're not known for strong communication. I certainly hope that'll improve under this new leadership.
Hey Kathy, just your characterization of the stock being down today and being under pressure on this. It's down 2% this morning for the Class B shares. Class A shares haven't traded, and those shares A and B both closed at all-time highs on Friday. It's not a huge amount of pressure. It kind of feels like this is the natural progression of what people have been anticipating would happen for a while.
Absolutely, but I do think, there are people sitting on pretty sizable gains, and we're heading into a period of uncertainty for Berkshire, but also for the broader economy. And given all of the businesses that Berkshire's in, they're kind of a microcosm for the broader economy. So against that backdrop, and the fact that you no longer have Buffett at the helm to the degree that he once was, it's understandable that the shares would be under pressure, and I think they may be for some time in the short term at least.
Kathy, thanks for your time this morning.
My pleasure.
Well, they're right about the transparency.
Coming up, CNBC out with its list of the most valuable soccer teams in the world. Who made number one?
Who cares?
Figure that out. We're going to reveal it after the break.
Okie dokie.
right, coming up, which soccer team is the world's most valuable? We're going to reveal it next. Squawk Box, coming right back. Welcome back to Squawk Box. I'm here at the NASDAQ market site in Times Square. Becky Quick is in Omaha following the Berkshire Hathaway annual shareholder meeting. Getting ahead of myself. And Andrew Ross Orca is now joining us from Los Angeles. Welcome. CNBC unveiling its ranking of the world's most valuable soccer teams. The average team, kind of surprised, $2.76 billion. That is far below the NFL and NBA average, but on par with baseball valuations. The most valuable team on this year's list, Real Madrid, worth $6.7 billion, followed by Manchester United, Barcelona, I say that right, Liverpool and Manchester City. Join us now, Michael Lozani, and he is the man behind the list and CNBC senior sports reporter. What's this?
Your favorite sport.
I was just telling you, there was nothing on yesterday afternoon. The golf tournament, Scotty Scheffler was like 10 strokes up. So there was a soccer game on. And I told you after a couple hours how it ended.
Yeah, 0-0.
0-0.
It didn't get you all that excited. I got good news for you. Maybe I can get you to go to a Club World Cup soccer. There's going to be a soccer game at the Meadowlands next month, and then next year we got the World Cup coming here, so we got to go.
I told you my other story. I bet on the finals. Ended in regulation, tied. They won on with the kicks at the end. They don't pay. They don't pay out.
Shootout. They got to change that. They're bringing it to the fold.
What determines this? It could be the stadium. I know Barcelona is going to have a new stadium. They'll get vaulted into the upper echelons.
Their value will go up, no doubt. I mean, Real Madrid just did a massive renovation of their stadium. What they call match day revenue, which what we call here is tickets, luxury suites, hospitality, doubled last year to 268 million because of the renovations. A big thing in European soccer is the Champions League, which is the most lucrative annual sports tournament in the world. If you go all the way through, qualify and then win it, you could pull in 150 million in incremental revenue. Real is the most successful Champions League winner of all time.
The UK, how many in the top 10 or
6 of the top 10, Joe.
Six of the top
11
10.
out of the top 25. Richest TV deal, they get
So that's why.
4.2 billion.
It's a TV deal.
Yeah, twice the next, which is La Liga, which is about 2 billion.
What about the United States? We got one, right?
Well,
Kind of.
Major League Soccer's deal is worth about 250 million a year, so that's why only 3 teams, LA Galaxy,
In the
LAFC,
top
and Inter
20.
Miami, are in the top 25.
So we actually do have 3.
Yeah.
From here on out, what would I like? We were describing, my feelings. It's come a long way though, soccer, and I do watch the big games, and they're exciting. But what inning are? Oh, see, there I go back to baseball. What inning are we in terms of? Is it ever going to really be one of the most beloved sports in the U.S., or is it there already? Would you say?
I think in popularity, soccer in general is up there, but the challenge for Major League Soccer is that, for instance, on USA Network, which shows the Premier League, the top European teams still draw the highest TV ratings. So in other words, if you and I have a window to watch some soccer, I'm more likely to watch, Manchester United, Liverpool, or Arsenal play than I am a Major League Soccer team. Major League Soccer changed the dynamics where it's gone to all streaming now for its television. So we'll see. That's geared towards a younger audience, but it's going to take some time, and I know they hope to get a boost with the World Cup next year.
All right, I'm gonna keep trying. I'm gonna keep trying because it's USA, so that's a
We're going to go to a
one
game.
of our sister
I gotta
networks.
bring you
Yeah.
in.
I went in the LA Olympics, the previous one, way back then. Went to the final, so it was in the Coliseum or Pasadena or something. Mike, thank you. You can see the full list of the world's, I think that was 002, the world's 25 most valuable soccer teams at cnbc.com/sport.
Meantime, Joe, we got some breaking news to tell you about right now. Pershing Square announcing it has agreed to invest $900 million to acquire 9 million newly issued shares of Howard Hughes Holdings. We've talked about the potential for this transaction before. It is now happening on new terms. The purchase price is $100 per share. That's a 48% premium of the stock price as of Friday's close. And this brings Pershing Square's ownership stake from about 37% to about 47%. Bill Ackman, who has served as chairman of Howard Hughes' board up until last April, is named executive chairman of the board, and Ryan Israel, CIO of Pershing Square, will become CIO of Howard Hughes. The rest of the company's leadership team will remain the same, and importantly, this transaction is an effort for Bill Ackman to effectively get what might be described as permanent capital to try to create an operating business that then he can leverage off of. He's even described it at some points as the beginnings of a mini Berkshire, if you will. And later this morning at 8:30 a.m., we will be speaking with the man himself, Bill Ackman, Pershing Square CEO, right here in Los Angeles, fresh off a flight from Omaha, where he was over the weekend watching, in fact, Warren Buffett and, of course, Becky Quick and all of us. So we'll be talking to him about his transaction this morning and maybe some of his thoughts about what took place over the weekend as well.
Yeah, in fact, Andrew, be looking forward to that conversation with Bill Ackman, get his thoughts on what he's doing with Howard Hughes and maybe much more on the broader markets and things that he sees too. But we have some additional breaking news right now. Berkshire Hathaway just confirming what we've been reporting this morning, that the Berkshire Hathaway board voted to name Greg Abel president and CEO as of January 1st of this coming year. Warren Buffett's going to remain on as chairman, and that comes after Warren Buffett ended the Berkshire Hathaway annual shareholders meeting on an unexpected note on Saturday.
Greg should become the chief executive officer of the company at year end, and I want to spring that on the directors effectively and then give that as my recommendation. Let them have the time to think about what questions or what structures or anything they want, and then at the meeting following that, which will come in a few months, we'll take action on whatever the view is of the 11 directors. I think they'll be unanimously in favor of it, and that would mean that at year end, Greg would be the chief executive officer of Berkshire.
That announcement came at the very end of the shareholders meeting on Saturday in the final moments. Came as a surprise not just to the directors on the floor and to the shareholders as well, but also to Greg Abel himself, who didn't know the timing of this announcement or when. It was long expected that Greg Abel would be stepping in as the CEO eventually. Nobody knew he was going to call for it now. You can see there Warren Buffett receiving a standing ovation from that packed arena, where Buffett and Abel had just spent more than 4 hours answering questions. Again, Warren Buffett's 94. He will be 95 when he actually steps aside as CEO. Greg Abel is 62, and he's going to be stepping in to take hold of that. And Andrew, you and I have been going to this meeting for a lot of years. It was more packed than I've ever seen it before, which may be a little hard to believe after the passing of Charlie Munger, but the meeting keeps getting bigger every year, and that standing ovation was really something.
I want to know what you thought, because we actually didn't get to talk too much ourselves about it. When he said there was a 5-minute warning, exclamation point, because he was reading down on a screen. And I thought that was the first time I'd ever seen him do that. And I thought, okay, something's about to happen
everybody
here.
Everybody there kind of sat up collectively, like, what? What are we about to hear?
What did you think of that?
I thought it was kind of a classic move, and the more time I've had to think about it, he kind of did it perfectly. It came after more than 4 hours of taking questions from shareholders in an unscripted meeting, not knowing what was coming. And he let all of his partners, all of his shareholders, find out at the same time. He's always treated the shareholders just as he did his partners when it was a small family and friends operation. You know, a handful of them meeting at the National Indemnity lunchroom. This was kind of that same homespun feeling. We're all finding out about this together, and even Greg Abel finding out about this at that same time. And again, if this had happened in a press release, I think people would have wondered if something had happened to Warren Buffett, if he wasn't able to any longer do the job. I think doing it after taking all those questions would relieve people of those questions. You know, he's still mentally totally there. He gets it. He can run through all these businesses. He can answer any question you throw his way. But the way he set it up is he thinks that Greg deserves the title of CEO, that he's been running the non-insurance operations and doing that very effectively and picking up more and more responsibility as time has gone by. We've known since 2021, 4 years ago, that Greg Abel was going to be the next CEO, that was the plan for the board. We found out at that Berkshire Hathaway annual meeting that year when Charlie Munger kind of slipped and accidentally said that Greg would be responsible for the culture. So we've known since then. Ron Olson, the retiring board member who just stepped down yesterday, told us that it was years before that the board had him in mind. So this is a process that's been in place maybe as long as a decade, kind of watching this, the grooming of this entire situation, and the board deciding yesterday that Warren Buffett will still remain as chairman. He can be there to help Greg Abel as he continues to pick up more and more responsibility.
I thought it was remarkable. I will admit, and I know you guys think that I cry at car commercials, which I guess I do, but I got a little teary. I mean, you could just feel it in the room. It was really such a remarkable thing to see so many people who had come to this for so long and to see Warren hand over the reins like that. The whole thing was very much. It'd be very interesting to me to see what the company and what the culture of the company is like in the future, because it was so unique and such his painting. You know, he used to talk about it as his painting, and it was almost built around one single individual in so many ways. So it's going to be fascinating just to watch, what Greg Abel does with the company, and also just even what the structure of the company in some ways looks like, because for so long it's had such little overhead. I mean, that's actually that's been a feature, not a bug. But as we saw, Warren Buffett makes decisions and tells the board oftentimes afterwards. I imagine in the future you might have more infrastructure, more lawyers and bankers and advisors and people and all the kinds of things that a lot of other big corporations have. And so it'll be very interesting to see how that all plays out.
Yeah, I think Buffett's idea would be to maintain the unique structure that is Berkshire Hathaway. Look, you may need some, they don't have legal counsel official, they always just relied on Munger Tolles to talk about some of those things. But the idea of no legal counsel there, no communications department, no investor relations board, they don't do quarterly calls with the investor community. I guess there are a lot of questions about whether that remains, and whether Greg Abel will have the same authority or anywhere near the same authority to be able to make decisions about tens or even $100+ billion acquisitions
Right.
without bringing the whole board in. And I think Buffett would like to see that continue, and would like to very much make sure that Berkshire Hathaway can still be nimble. And I guess the question is winning enough support from the board to do that, and from the general shareholder population, which having Buffett on as chairman for a while could probably be very helpful to Greg Abel in that.
Give him
having him
some
as a sounding board on some of those things too. I mean, Joe had talked about at the top of the show how we've all known Warren Buffett pretty well for a long time. He's been a friend of Squawk Box. He jokes around a lot with us too. I think that's one of the things that Joe was pointing out at the top too.
Yeah.
Mm-hmm.
Yeah. Never had a time when he doesn't have some angle, some sardonic take on things. It's just the way he really does have a joy for the funny aspects of life. I think that's his approach. I looked it up.
I think that's the secret to his longevity.
Joie de vivre. We
Joie
need
de
to
vivre.
use French to figure it out, I guess. Although they don't always seem like they're that happy about things, but.
No, I think that optimism and that optimism for life, that interest in always learning more, was probably the secret to longevity for Charlie Munger, who lived to almost 100, and for Warren Buffett himself. I mean, you can look at anybody who's got an optimistic outlook, and odds are you're going to have a longer life cycle. That idea of constant learning, I think, is one that he's preached to the shareholders and anybody who wants to listen for years and years, and certainly a lesson I've tried to learn.
I read, I didn't hear it, but cherry Coke, I don't work out. He's like the opposite of Maha, is he not? And just sharp as attack and headed for 95. Yeah, sharp as attack and headed for 95. So there's a lot of different.
Yeah, he said that he and Charlie never worked out a day in their life that they didn't have to.
Yep.
Charlie made a point of saying the only time he ever did was when he was required to, when he was in the service.
Right.
He said they were preserving their bodies for long life that way. They never wore out their joints too early by all that exercise. One topic that a lot of shareholders wanted to hear Buffett's thoughts on this week, and that's tariffs.
Trade should not be a weapon. And the United States, we've won. I mean, we have become an incredibly important country, starting from nothing. 250 years ago, there's nothing been anything like it. And it's a big mistake, in my view, when you have 7.5 billion people that don't like you very well, and you got 300 million that are crowing in some way about how well they've done. And I don't think it's right, and I don't think it's wise. I do think that the more prosperous the rest of the world becomes, it won't be at our expense. The more prosperous we'll become, and the safer we'll feel, and your children will feel someday.
Buffett saying that the United States should be looking to trade with the rest of the world, he said we should do what we do best and they should do what they do best. Although, look, he never specifically came out and named any of these particular sort of policies that are out there. He just said, when you're winning, you probably don't need to say nani nani boo boo to the rest of the world. So it was his take on how he does things, on how he would do negotiations on some of these issues. He did say that the trade deficit is something that's concerned him for a long time. He wrote about that in the Fortune cover story back in 2003 and had his own idea of these certificates he would issue that could be traded back and forth. He said Charlie Munger thought it was a dumb idea at the time. But you know, at that point, he said that those certificates would be something akin to a tariff in another name.
Yeah, comparative advantage, no doubt. The only thing I think of is that we want everyone to win, but I don't know if we've ever been faced with a challenge like China before. I guess maybe we thought, you know, in the 80s, Japan or something, but this is the challenge of our generation, I think. And we know exactly what China would like to do, and I don't know whether that changes it and whether you target certain things. I don't know what, it's just nuanced exactly. How it, and you know, along with the hollowing out of, we know what happened if you go to $2 an hour labor and every single thing you do gets exported to do $2. We've seen what's happened. So it's nuanced. I don't know how to fix it. I don't know if this is the right way. And we're certainly seeing that it's gut wrenching to try and do things about it. But I don't know what the actual answer is to try to. I'm not sure we want everyone making sneakers. You know, we've seen that. All right, coming up, New Market Week. Yeah, go ahead, Beth.
No, I just agree.
Yeah. I think we all have delays on where we are. We're, you know, spamming the globe. The New Market Week that includes a Fed decision. Jeremy Siegel is going to tell us what he expects Chairman Powell to do this time around. Squawk Box returns in just a moment.
right, welcome back, everybody. Let's get to the markets this morning. We've been watching, and the futures are under a little bit of pressure this morning. You can see those Dow futures off by about 42 points, I think, if I can read that far. The Dow futures down by close to 240 points. And joining us right now is Jeremy Siegel. He's Professor Emeritus of Finance at the University of Pennsylvania's Wharton School of Business. He's also the Chief Economist at Wisdom Tree. And Jeremy, let's think about what we've learned over the weekend. There was a big interview with Kristen Welker of President Trump, hearing a little bit about how maybe he's once again reiterating that he's not going to try and seek Jay Powell's removal from the Fed before his term's up, and talking about how you could see lower tariffs on China at some point in the not too distant future. You had Warren Buffett talking about if you thought April was anything all that much of a concern, well, you know, you probably don't have the right constitution for being in the investment business if you worry about a 15% drop. And now, by the way, both the S&P 500 and the NASDAQ are above where, or at least on Friday, closed above where they were before the president's announcement in early April of all of these additional tariffs that would be brought on. How are you feeling about the markets today?
Well, Becky, first let me say a few words about Warren Buffett. The last 10 years, Berkshire Hathaway's return has been almost 2% above the S&P 500. And for a value-oriented investor to be above the S&P 500 over the last 10 years, which have been one of, if not the most difficult decade for value investors in the 100 years, is absolutely extraordinary. I mean, I don't think any value investor can touch him. You reported many times, he said, if I can match the S&P 500, you know, once he reached a certain size, I think I'm doing pretty well. And not only did he match it, but he surpassed it, and that's extraordinary. I think we should also, you know, listen to what he said about tariffs, and when we teach a theory of comparative advantage. You know, you do what you do best. You trade with the rest of the world. You know, it's somewhat interesting. I know you know, Becky, but Warren went to Wharton but dropped out after 2 years. But he seemed to learn and he went back to Omaha and finished his education at University of Nebraska. But I think he learned about what, you know, the theory of trade and how it can actually enhance the welfare. And I think those principles are important. You know, Donald Trump went 4 years to Wharton, didn't seem to learn that principle. I wish he did. So, you know, I mean, I wish, I mean, I am worried. I was hoping trade deals would be announced by now. They're not. I don't think the impact has hit us yet. I mean, no one has yet got the higher prices or, hey, that good is not available anymore. You know, so even though, you know, there has been a lot of worry, you know, until we actually see it come, you know, I think that will have a more severe economic effect in the future. I'm not as optimistic as Tom. I love Tom Lee. I think he's one of the greatest strategists. But I think unless we see an unwinding of these trade tariffs much faster, you know, I still see some turbulent times ahead. On the Fed, listen.
Professor, can I just jump in on that point, because I do think that's an interesting one. We have not seen the trade deals yet. There have been reports that we could see the framework for several of these trade deals very soon. But I will tell you, just in reporting this weekend and talking to a lot of the managers of Berkshire businesses that were here, you know, probably 20 or 25 of those managers, you start to compile an interesting perspective of what these tariffs mean for the businesses directly. And it's not something that Buffett's necessarily talking about on stage with some of these issues. But I'll tell you, I spoke with the CEO of Oriental Trading, and that's a business where, you know, they're not getting new stuff that's shipped in. And the CEO will warn you that, you know, you might not see Halloween this year because you're not going to be able to get the costumes or any of the goods that would be coming if this isn't worked out in the next couple of weeks. They're frozen shipments. They don't have anything that's coming in at that point, and it's going to be nearly impossible to switch that over, they're going to have to rely on stuff they have left over from last year, anything else that they can bring in on these issues. They're not going to be able to do it in time. You're talking about back to school, if you talk to other retailers on some of these issues, and then you're talking about Halloween. And if these decisions aren't made quickly and some clarity brought in a matter of weeks here, you will feel the impact for consumers, particularly around some of those big holiday type seasons, big event seasons. And that could paint a different picture. We haven't really felt any of that pain yet.
Yeah, I mean, I think you're absolutely true. On the ground, you talk to, the small owners of businessmen, businesswomen, that smaller companies, they're already very, very worried about shipments of the goods coming in. I mean, you read, for instance, comments from on the Beige Book from the Dallas Fed. Dallas, Texas is a pretty, pro-Trump, pro-Republican area. A lot of concern on the ground that this gets resolved relatively quickly. And, and Powell's not going to do anything. I mean, he's going to basically give pretty, we're happy we are, we're flexible. I did make the case a couple weeks ago, and I still think, given the threat, given that inflation, look at oil down below 60. There's some reports that oil at 57, 58, it's not profitable for over 90% of the wells now to produce at that price. But oil down so much, I think there is a case for lowering. He's not going to lower it. And then what I worry about is then I think the attacks on Powell are going to escalate a lot. Whether this is all tariff induced, but to keep the rates at 4.33%. When inflation is running well below that, when the 10-year is below that, slight inversion of the curve, there's a case to go down, and Trump, I think, is going to step up escalation. So I see a lot of turmoil ahead. I'm very optimistic for 2026. I'm very optimistic for the long run. I'm right with Warren Buffett. He's optimistic for the long run. And I am too, but I think we've got a lot to get through.
Starting maybe with that FOMC meeting this week. Jeremy, thank you very much. It's always great talking to you.
Thank you, Becky.
John?
Coming up, we got a rundown of some of the stocks on the move this morning. Then we're going to get an update on the progress being made on that reconciliation bill. House Majority Whip Tom Emmer is going to be our special guest. Squawk Box coming right back.
Xfinity.
And welcome back to Squawk Box. I'm Dominic Chu with a check on your morning movers. We're going to start with shares of Apple and Microsoft, both lower this morning after Microsoft did overtake Apple last week as the largest company by market value in the S&P 500. It came after Apple shares slid almost 4% after reporting weaker than expected services revenue and saying that tariffs could add an additional $900 million in costs for the current quarter. Now, Apple shares have been hit hard this year, down about 18% so far. Microsoft shares are up roughly 2% right now, but now Apple at 3.0405 trillion, and then Microsoft at about 3.24 trillion. We're kind of starting to see a little bit of an interesting dynamic there in terms of performance. Let's now turn to the energy markets, and crude oil prices are sliding right now below $58 a barrel, $57.54 for U.S. benchmark crude after OPEC Plus agreed to a production level boost for the second month. Prices have rebounded after opening below $56, but it's still hitting shares of some of the biggest oil producers out there. You can see names like ExxonMobil, Chevron, ConocoPhillips, and whatnot are all down on that bit of news. And we'll cap things off with shares of Wendy's higher after analysts at JP Morgan upgraded the fast food company to an overweight rating from a neutral. Analysts there are saying that they see value after a big pullback this year and an opportunity to grow in international markets. So Wendy's shares up 1.5%, partly due to that analyst upgrade. For more on that, other top analyst calls of the day, just head over to cnbc.com/pro. Subscribers get all the access to detail and analysis behind those big calls and stories. Andrew, I will send things back out to you in Los Angeles.
Thank you, sir. When we come back, a social media legal battle is brewing. Conservative activist Robbie Starbuck, you know that name, he's now taking on Meta, but this time in a different way. It's over a defamation lawsuit he is bringing against them over AI responses about him. And then later, right here in Los Angeles, Pershing Square's Bill Ackman is going to be our special guest. He's here at the Milken Institute's annual conference. That's coming up at 8:30 a.m. Eastern Time. We'll talk to him about his big deal this morning with Howard Hughes and a little bit about what he saw in Omaha over the weekend at the Berkshire Hathaway annual meeting. Squawk Box returning after this.
off. Terms apply.
And coming up, there is an effort in a race to get the reconciliation bill passed by the 4th of July. House Majority Whip Tom Emmer is the whip. He's going to give us an update on the legislation, the budget, taxes, and more. Squawk Box coming right back.
Now.
Republicans are continuing to work on a reconciliation bill with hopes of having it passed by July 4th. Joining us now with the latest, House Majority Whip Tom Emmer. Does that sound feasible to you, Congressman?
Oh yeah, we're going to do it earlier in the House, Joe. Good morning.
Good morning. What's it include right now? What can you tell us since last time you were on? And then I want to talk about a very interesting piece regarding Medicaid and sort of the quandary facing Republicans at this point. Pretty interesting, just some tough love from the editorial board about that this is the moment for Republicans to actually face down what has become, really kind of an embarrassment on who Medicaid favors. It favors able-bodied men over pregnant women and disabled people, and yet Republicans are afraid to take it on directly. You're going to get hammered either way by the Democrats. Why not try and fix it at this point and save $880 billion?
Well, unlike you, Joe, the reporting on this stuff is not exactly right down the middle. But first, where we're at with the bill, we've got 11 committees of jurisdiction that are writing a piece of this bill. I don't think any reconciliation process before this one has ever had as many committees involved in the process. We got 7 of those committees done last week. We've got 4 to go. We don't have hearings scheduled yet this week because people are working out the details, and as soon as that's done, the goal that our speaker has is to put this on the floor by the week of May 19th. So the goal is to get it out of the House before Memorial Day, and we're still on track to do that.
That's what makes it big, and that's what makes it beautiful, I guess the president would say. We'll talk about Medicaid in a second. What's it gonna, how are you gonna pay for any of the new tax proposals from the president if you extend all of the 2017 tax cuts?
Well, remember, extending them, we've got differences of opinion in both the House and the Senate as to how you do that as well. On the House side, they have included pay-fors for even extending the tax cuts that have been in place for 7 years, since 2017. Anything additional, they'll have to find offsets for that, and I leave that to our chair, Jason Smith, and his committee. They'll let us know what that is.
You'd be okay with raising millionaires, raising the top rate back to 40%?
Yeah, that's a cute campaign slogan, but the fact of the matter is that 2 or 3% isn't going to make the difference. Our government already has enough revenue, Joe. The issue is we've got a spending problem. We've got to address it. I think extending the tax cuts that have been in place for the last 7 years is imperative. If we don't get it done, Joe, the average American is going to experience $1,600 in increase in their taxes. The average American. And 40 million American families are going to lose half of their child care tax credit, or their child tax credit. So it's imperative that this gets done so that we don't have a $4.5 to $5 trillion tax increase on all Americans.
Then if you're going to extend those and do the no tax on tips and all these other sort of new ideas from the president, you say you're going to have some pay for it. I don't know where you go if you don't go at least look at Medicaid, because the savings you just can't get anywhere else. And you've got something sort of on a platter here. Right now, the feds pick up 50 to 77% of the tab for pregnant women or for disabled people. Yet, the feds pay 90% for prime age adults, eligible to work and everything else because of Obamacare. And it's that way now, and a lot of states sort of entered that Faustian bargain, to pass it, and now they're addicted to it. But that'd be a natural place to start. Is that a possibility?
Actually, the natural place to start is exactly where Donald Trump wants us to start, which is getting the waste, fraud, and abuse out of the program, Joe. According to the GAO, there's about $50 billion in waste, fraud, and abuse in the Medicaid program on an annual basis. That's $500 billion over the 10-year budget cycle. Then you start taking out illegals. There's no reason that illegal aliens should be receiving Medicaid benefits. The stuff you're talking about is under the Biden expansion. There's definitely discussion amongst our members about how you might approach that, but the president has made it very clear that we're not going to cut Medicaid benefits for those that it's intended for.
You're going to be whipping, and I wasn't, we call some people Mr. Chairman, Mr. Leader, Mr. Speaker. I can't call you Mr. Whip. I just don't think that. So, Congressman, does that work for you? Congressman, or what's the proper thing I should be calling you?
It's some of the nicest things they call me, Joe.
Yeah, compared to the other stuff you get called. So, are you going to be able to? How's the Freedom Caucus? How are the people that watching the president's poll numbers? How are people in districts where President Trump barely carried? How do you get all those cats wrangled together for the big beautiful bill? That's a tough job. I wouldn't even accept that job if I were. It's too hard.
Well, keep in mind, Joe, I mean, you're focusing on my side of the aisle, which I expect, because we're the ones that are governing. But there are 13 Democrats that are sitting in seats across this country that Donald Trump won in November. There's another 21 or 22 that won by less than 5 points. So really, the American people voted for this reform, and that's what we're going to do. We're going to perform with this reconciliation bill. We're going to get it done, and it's really going to set this country off on that golden age that Donald Trump campaigned on and has promised.
Yeah, but say what you will about the Democrats, they are, when push comes to shove, they don't break ranks like Republicans do. You won't get a single one of those 13.
That's their choice. That's their choice. Look, our
Just
colleagues on the other
realistically.
side of the aisle right now, they don't have a leader, they don't have a message, they don't know what they stand for. They actually should listen to the American people and join us in trying to put our government back in a position to work for the people instead of rule over them and spend money willy-nilly everywhere. Let's focus on the priorities that the American public expects us to focus on. And I think our colleagues on the other side of the aisle soon will start to recognize that's who they need to listen to rather than their leadership.
Oh my God. Okay, I hear you. I don't know. I always refer to that caucus as the board collective. They vote. They should only take one vote. It just should be yay or nay, just all of them, because there's never any. No one breaks off of that faction. All right. So you think July 4th? We'll be watching. I'd like to talk about something besides tariffs. We will hopefully have you back and do that. Thank you, Congressman Witt. Smart Bucks, be right back.
Now.
Welcome back, everybody. At Saturday's Berkshire Hathaway annual meeting, Warren Buffett answered shareholder questions for about 4.5 hours, including a question about whether he thought long-term the efforts of Doge would be helpful or harmful. He said tackling the U.S. deficit is a tough job, but that it should be done.
We are doing something that is unsustainable, and it has the aspect to it that it gets uncontrollable to a certain point. I mean, essentially you just give up on it. And Paul Volcker, kept that from happening in the United States. But we came close. We've come close multiple times, and we've still had very substantial inflation in the United States, but it's never been run away yet. And that's not something you want to try and experiment with because it feeds on itself. So I wouldn't want the job of trying to correct what's going on in revenue and the expenditures of the United States with roughly a 7% gap, when probably a 3% gap is sustainable. And then the further away you get from that, the more you get to where the uncontrollable begins. And I think that it's a job I don't want, but it's a job I think should be done, and Congress does not seem good at doing it.
He talked about how bureaucracies everywhere are, not good situations, and said the government is the biggest of those bureaucracies and the most uncontrollable because you are spending other people's money. That's something he's always been opposed to. Berkshire Hathaway, a company that's worth about $1.2 trillion, operates with a headquarters staff of 24 people. Just the efforts at going after that, he pointed out, are very, very difficult. Congress is not going to be really up for the job. But he said somebody should be doing this.
Yeah, that was telling, I thought, because you could see he's sort of uncomfortable. It's tough love that he almost signed on to it. So and it's, I don't know. I don't know if it's possible. I don't know. I don't even know if this most recent effort was successful. We don't know at this point. Time will tell.
Yeah.
Meantime, we got a lot more coming up on the broadcast. You don't want to miss this. Conservative activist Robbie Starbuck is going to be here on his new defamation lawsuit against Meta, specifically on the platform's AI responses about him personally. And then Pershing Square's Bill Ackman adding to his stake in Howard Hughes. He's going to join us live here in Los Angeles. The Milken Institute's global conference taking place. That's going to happen at 8:30 a.m. Eastern Time. Squawk Box coming right back after this.
means everything.
Welcome back to Squawk Box. Our next guest has filed a defamation lawsuit against Meta over the platform's AI answers about him. Joining us right now is a name you know, but maybe in a different context. Robbie Starbuck is here. He's a conservative activist and director. Robbie, we've had a number of conversations with you, typically about you aiming at big corporations in relation to DEI and other issues. This is very different. This is about AI at Meta describing you, and in many cases describing you falsely when somebody types into Meta about you. When did you learn about this, and how did this happen?
Yeah, thanks for having me. We learned about this first in August 2024, and we immediately notified them that day. Actually, it is kind of related to the DEI work, because at the time I was targeting Harley-Davidson's DEI policies, which we all know I ended up wiping out. But what happened is one specific Harley-Davidson dealership had an issue with me, and so they posted a screenshot from Meta AI, and it was filled with lies, including that I was a criminal that was there on January 6th and participated in a riot and so on and so forth. And Meta AI, honestly, I didn't believe it said these things, so we went and checked. And it not only said those things, it said much worse. It said I had pled guilty to the crimes of January 6th. It also said I was a Holocaust denier and a whole host of other crazy things, and even suggested that authorities take my children from me in favor of giving them to somebody who's going to be, more accepting of DEI and transgenderism for children. And so, to me, that's unacceptable. And so we notified Meta immediately within 24 hours. And I notified executives, my legal team notified their lawyers, and we said, hey, this has to come down. And so they had this chance to fix it for a long period of time there. 9 months later, we had some of the worst lies that had ever been telling, including still that I was a criminal that went to January 6th. And so we said, this is unacceptable at this point. This is beyond negligence. This is malicious. And so we filed suit this week.
And so you had gone back and forth with them, it sounds like. Did they acknowledge the issue initially? It sounds like now they are.
Yeah, I mean, they didn't deny that they were doing this. I mean, it was something you couldn't really deny. It was all over the place. It was a question of, are they going to fix this and do so appropriately? And they just didn't do it. In fact, their one attempt at fixing it was blacklisting my name, and even that didn't work because they did such a poor job doing it. Because if a news story came up with my name and somebody said, hey, tell me about this guy and give me a bio, you're still getting that stuff. You're still getting all of the stuff about me being a criminal. So obviously that's not fixing the problem. And so I think now, that I've made this public, I filed a lawsuit, the video of me announcing it got millions and millions of views online. Then Meta suddenly got contrite and issued an apology and took accountability. But it's a little too late 9 months later, right? This is a situation where my family has had increasing death threats. My kids got doxxed online during this time. A man was arrested in Oregon who wanted to kill me. These types of things happen as a result of people getting information that is not true. And so it's got to be corrected, and I expect this from trolls online, but you don't expect it from one of the world's biggest companies and for them to continue to tell these types of lies for 9+ months.
So two things. One piece of good news, I checked over the weekend and just checked again. I wrote into Meta's AI system, is Robbie Starbuck a criminal? It says Robbie Starbuck is not considered a criminal based on available information. In fact, he's filed a lawsuit against Meta. So that's now in their system. I then even wrote, has he been arrested? Just to sort of push the issue with it. And he said he has not been arrested, according to the lawsuit filed, and then it goes through that. My question to you is, do you think of yourself as one of many, meaning that there's going to be a lot more information, and I don't know if it's just going to be Meta, but others who are creating and training these systems that I imagine are training or learning information off of Reddit, off of X, off of all of these places, and then effectively repeating these things, and how the American public is supposed to think about that and what they're supposed to do, because not everyone has the megaphone that you do.
Yeah, and that's precisely why it's so important that I'm doing this and not going away quietly, because I think there are a lot of people who could be harmed by AI that doesn't have appropriate guardrails. And don't get me wrong, I'm optimistic about AI. I've got a lot of great feelings about what it can do in the future, but it does have to have ethical guardrails. It does have to have these lines that we say it needs to paint within. And if we can't control it, then that's dangerous, right? I mean, that's the stuff that's kind of dystopian. And the other thing we've got to be really aware of is all it takes is one malicious engineer, if you don't have proper safety controls getting in there and injecting things that can not just hurt people, but can flip elections, right? Because think about what they did to me. If they did that in an election where whoever your preferred candidate is has lies told about them when somebody asks a simple question, what's the difference between candidate A and candidate B? That could flip an election, right? For a company as large as Meta with the amount of queries they get. So this has to be fixed now.
Just to put a fine point on it, are you alleging that an engineer or engineers or employees or others inside of Meta specifically targeted you, put this information into the system, or refused to remove it for this purpose? I'm going with, do you believe that they actually put this in there on purpose, or do you think that this was some kind of a mistaken training where someone picked something up off of the system effectively trained on something that was inaccurate, and that's how this happened?
I'll say this, it's being investigated and we're definitely going to find out in discovery, and I think we'll find out a lot of other things people have been very interested about. But I will say this, people need to understand these models, it's not a simple matter of you went and checked and now you're not getting those responses, right? Well, the problem is when Meta releases models over the course of a year, every model that they released over the course of this last year, when it's unplugged from the internet, once it's downloaded by somebody, it is there forever. They can't go in and change the millions of potential downloads they have and then the thousands of major apps that were developed on the basis of that data, which includes things like, insurance reputation checking and things along those lines. So the downscale effects you can have from AI telling lies about you and it being stuck in old models is lifelong. It's not something that goes away. Right. So we've got to get this right now and fix this. And, I think this is, legal scholars have said the best case of it. I think because they were so malicious in the fact that they didn't fix it initially. So I think we're gonna try to get this right and get it fixed for everybody.
What are you seeking, both in terms of what does it mean to fix it for everybody, and how much money are you seeking?
Fixing it for everybody is probably the most important thing, because like I said, those downscale effects of elections and things along those lines is very important. So that's going to be a big part of our discussions and our hopes in terms of what an ending judgment will be in this case. So that looks like setting those guardrails in place when it comes to people's reputations and making sure that you're using verifiable sources, that you're training AI, that it cannot give unverified responses, because that's one of the big problems here. If it's not citing sources, has no verifiable sources, it doesn't even have the wherewithal to check for those things and say, hey, is this trustworthy information I'm spitting out? That's a problem, and that's totally trainable stuff that you can fix. Secondarily, in terms of damages, that's for a jury to decide. In Delaware, you say in excess of, so we're in excess of 5 million, so it's going to be well above that. We asked Meta's AI. Meta's AI said a settlement would look like something between 50 and 100 million, and that in court, Meta risks over $1 billion. And Meta AI actually says that it believes it is very likely I will win this case against Meta based on all the parameters in the lawsuit itself.
Two final questions. Did you have any reticence about bringing this case, given the fact that Mark Zuckerberg, who runs Meta, has, for the most part, at least over the last year, directionally moved the company around some of the issues that you care about, like DEI, in your direction, and has obviously become a supporter of President Trump?
No, because if he's being honest, he's going to do the right thing here. If he's not being honest, it'll be very clear that that whole thing's been a dog and pony show to escape accountability for all the things he did wrong in the past. And there were a lot of things he did wrong in the past, including his engagement in the 2020 election, which was quite nefarious if you know the details of it.
And then finally, you have settled a lot of your efforts with companies that have come to you and tried to, resolve them amicably, if you will. Is this an instance where a settlement is possible, or for your purposes at this point, you would prefer to go through discovery and the full gamut, if you will, publicly? Meaning, what would ultimately make you happy?
What would make me happy is all the parameters that have been laid out being filled. So, in terms of the possibility of a settlement's always possible in lawsuits, right? But if it happens in this case, it's going to be because I got absolutely everything that we wanted. Everything is, in terms of leverage on our side, because I'm right here. The law's on our side. They were wrong, they were negligent, they were malicious in what they did. So risking going to court, I think, it's a big risk for Meta, right? I mean, this will set precedent not just for them, but for every AI company in many respects. And beyond that, you risk a jury sitting there and saying, wow, we have punitive damages in front of us to decide. We are going to be punitive because that is the purpose here. And right, most punitive damages are somewhere in the range of 1 to 2%. Unless you're in California, you get to 9%. This is a $1.5 trillion company. That could get expensive very fast, and I don't think shareholders would be big fans of that. But you know, a lot of this is going to be in Meta's court as well. You know, how are they going to behave here going forward? Are they going to fix this? Not just for me, because I have that megaphone, like you said. But are they going to fix it for everybody? Because this shouldn't affect anybody. Think about the fact that they're talking about including AI reputation scoring for CPS and how lies about a parent could affect CPS cases for children in custody. You know, that's just unacceptable. We've got to fix this now before this becomes a major issue for the public.
Hey, Robbie, just as an aside, I want to just change the subject for a second. There's a big piece in the Journal today about Exxon. I'm wondering, is ESG on your radar screen as well? Because you saw what BP is doing in terms of finally moving away from the sort of the alarmism that had them with really it's kind of a pipe dream to get to net zero. But this article, it's an opinion piece, points out that Exxon lags far behind most energy companies and is still pushing, peak climate, draconian regulations on carbon emissions. We're going to need Exxon globally to try to help satisfy demand for economies for fossil fuels. Is Exxon on your radar screen?
You say net zero is a pipe dream, but Spain and Portugal just achieved it, I believe, this week. So I think that a lot of countries should be looking at them and the fact that they lost their power for the period of time they did in respect of trying to go after this ESG dream. And I think, yes, ESG is definitely in our sights. And all the oil companies and, fossil fuel companies that have bent the knee to these climate alarmists, they're definitely in our sights, because what they've done, bending the knee to these crazy people, is just insane. It's time to get back to business. It's time to drill. It's time to get our country filled with all of the energy we need again. And, you don't do that in chasing down these crazy pipe dreams of the far left.
Right.
Robbie Starbuck, it's never dull. It's never dull. We look forward to talking again soon. Thank you, sir.
You as well. Thanks, guys.
Appreciate it. Meantime, I'm going to send it back to Becky, who is in Omaha this morning. Becky.
Thanks, Andrew. Let's take a look at what's been happening with the futures this morning. You will see that the market's under a little bit of pressure. Right now, looks like the S&P futures are off by about 45 points. Dow futures down by about 250. The NASDAQ down by just over 200. I want to get over to Mike Santoli at the NYSE. Mike, how are things shaping up this morning?
Yeah, Becky, giving back a little bit of these recent gains. We came into the week running pretty hot. Last week, the S&P 500 up close to 3%. We're more than 17% off the intraday low from less than a month ago. That was April 7th. And what you've done here is eclipsed the close on April 2nd. That was tariff day when we found out all the details. At 56.70 was the close that day. So we're going to test that a little bit. We are operating at what you would probably say is the farthest extent of what a bear market rally might look like. And if it goes up further from here, it's still getting a little harder to call it a bear market rally. I think it's kind of inconclusive. But if the low is in, as a lot of the technical indicators suggest perhaps is the case, you're still a long way down to that low. It's down 15% to the intraday low. So if we have to retest or turn around, I would look for 5,400 as an initial level to say, hey, that's a normal pullback after this run. Take a look at the rest of the world equity markets relative to the S&P 500. That's ACWX, and really outperforming. In fact, it's at a new high for the year and outperforming the S&P on a year-to-date basis by about 15 percentage points. So everything going on policy-wise, weak dollar, sort of capital reallocated outside the U.S. A lot of the fiscal response across the world to President Trump's policies are at least right now causing a rotation around the world. Finally, take a look. Obviously, Berkshire Hathaway also came into this weekend running hot at an all-time high. And I've compared it here to gold over the last 6 months. That's what it's looked most like. It's been the ultimate quality defensive trade. SPHQ is high-quality S&P 500 stocks. That's usually around what Berkshire Hathaway trades along with, and you see the vast outperformance recently. So giving back a little bit in the pre-market this morning, Berkshire is, obviously after the news of the weekend, but even as it's indicated now, it's only getting back to levels last seen about a week or so ago, Becky.
Right, not any sort of real sell-off after news that we knew was coming at some point, but maybe surprised everybody on the timing on it. Mike, you were here with us in Omaha at the Berkshire meeting this weekend, and this was the first time that Buffett's actually weighed in on anything regarding the markets since the meeting here a year ago. Why don't we take a listen to what he had to say about the recent market volatility, and then I want to get your take on that too.
The world makes big mistakes, and surprises happen in dramatic ways, and the more sophisticated the system gets, the more the surprises can be out of right field. That's part of the stock market, and that's what makes it a good place to focus your efforts if you've got the proper temperament for it, and a terrible place to get involved if you get frightened by markets that decline and get excited when stock markets go up. I don't mean to sound particularly critical. I mean, I know and people have emotions, but you got to check them at the door when you invest.
Mike, what'd you think about that?
Yeah, I mean, obviously, really encapsulating his worldview and obviously the benefit of his perspective from all those decades. And he was addressing what recently has happened in markets, right? We get a 15 to 20% decline in the S&P 500 over the course of several weeks. It seems pretty jarring, but it came after 2 years of 20% plus gains. And so I guess his case is, look, if you were really alarmed and jarred by that move that went, we had over the short period of time, you're kind of not thinking about how the stock market meets out its risks and rewards over time. I also, Becky, found it interesting in a different answer over the weekend when Buffett said that he kind of doesn't experience emotions when it comes to financial stuff. He's sort of acknowledging that he's different than the way most people do kind of feel when it comes to their own money or their shareholders' money. And I remember at one point he said, look, $100 billion deal, that's easy to do. Well, it's not easy for most people to do. It's easy for him to do if he sees the right conditions.
Right, he said it's easy to do in 5 seconds even, which just tells you they're looking at valuations all the time, they're reading stuff all the time, and it's years of experience and understanding of these issues that leads he and Greg Abel to be able to make those decisions kind of in a flash. Buffett also addressed the dollar this weekend.
The natural course of government is to make the currency worth less over time, and that's got important consequences. And it's very hard to build checks and balances into the system to keep that from happening. And we've had a lot of fun here in the last, either the first 100 days or the last 100 days, whatever you want to call it, watching what happens when people try to make sure that they aren't running fiscal risks. And that game isn't over and never will be over. And, in finality, if you look up in search the great inflations of post-World War II, it's just a list that goes on forever, and the same names keep popping up and everything. So the value of currency is a scary thing.
Yeah, Mike, he pointed out that when governments really get into trouble, they usually do it through the currency, that's maybe the biggest weapon of mass destruction when it comes to governments.
For sure, and again, somebody who's been investing for 75 years, you've kind of seen these cycles, and somebody who also likes to focus on what can be controlled and the knowing the business that you're investing in, that's a piece of it that you kind of can't control. And so that's your massive risk factor is devaluation, great inflations. That's something that somebody who's an evaluator of businesses, it's kind of at a loss to contend with.
Thanks, Mike, and great work this weekend. We appreciate it.
Thank you.
Joe?
Coming up, thanks, Pat. Coming up, what last week's tech earnings say about the potential for future returns. Investor Dan Niles joins us after the break, and then later, Pershing Square's Bill Ackman will be our special guest after announcing that he's upping his stake in Howard Hughes Holdings. Squawk Box will be right back.
Apple is the largest individual holding for Berkshire Hathaway's investment portfolio still, even after all the sales that we've seen over the last year and a half or so. It still tops 22% of that portfolio. At the annual meeting here in Omaha this weekend, Warren Buffett called out the leadership of Apple's CEO, Tim Cook.
I'm somewhat embarrassed to say that Tim Cook has made the Berkshire a lot more money than I've ever made Berkshire Hathaway. So credit should be given to him for. I knew Steve Jobs briefly, and Steve, of course, did things that nobody else could have done in developing Apple, but Steve picked out Tim to succeed him, and he really made the right decision. Steve died young, as you know, and nobody but Steve could have created Apple, but nobody could. But Tim could have developed it like it has. So on behalf of all of Berkshire, thank you.
Buffett famously was not a huge investor in tech until first buying Apple back in 2016. But interestingly enough, he never really looked at it as a tech stock. He said he saw it as a consumer product stock, and that's what got him so interested in it. Joining us right now in the technology sector is Niles Investment Management founder, Dan Niles. Dan, your thoughts on Apple and the Mag 7 and where things stand right now?
Well, I think the quarters came out kind of what I expected. And I think if you step back big picture, what really influenced this quarter for the Mag 7 is the fact that there was a ton of pull forward in demand because of tariffs and fears of export control. So if you look at GDP in Q1, imports were up 41% year over year for the United States. To find something even close to that big, you have to go all the way back to COVID. And imports were up over 88% in the third quarter, but that's because they were down 54% in the second quarter during COVID in 2020, and they were down, I think it was like 12% in the first quarter. So that's a massive pull forward for companies like Apple or like Amazon, where it's funny, you listen to the conference calls, and very few of these companies were saying that there was much of a pull forward, if any, including Apple. And I think you look at that GDP number and you go, if it's up 41%, how can these companies not be seeing it? We're some of the biggest in the world. So I think there's going to be a big payback coming in the back half of the year, because let's say you bought an iPhone to get in front of tariffs, or a Tesla or stuff off of Amazon. You're not going to need to buy a new car or iPhone in the holiday quarters. And so that's where I think we're going to have a big problem.
Let me raise one more issue that was talked about here this weekend, and that's just the idea that what these big tech companies are, their model has really changed over the last few years. You know, Berkshire has $350 billion almost in cash on hand. That's way more than these big tech companies have at this point. In fact, that's more than Apple, Microsoft, Alphabet, and Amazon combined. We've always thought about the Mag 7, these big tech companies, as being capital light, basically printing money and not having to have a lot of capex. But over the last many years, they've been spending a lot of money on trying to chase the AI boom. Does that change the proposition of what these companies are as investments? Apple would be the exception in that. You know, it's not spending billions of dollars, or 10s or 20s or 30s or 40, $billion or more chasing this stuff. But does that change the valuation or the investing proposition?
Well, the thing you have to remember, Becky, is that you get into these periods of times where people go, well, I can't lose. And the one that's kind of akin to this is the internet. And you spent a good 6 years kind of building that out from the time you got the first web browser out. And my analogy is, I remember John Chambers at CEO of Cisco back in 2000 saying, we think we can grow this company 40 to 60% sustainably. And in fiscal 2000, he grew it at 55%. Since then, for the last 24 years, the company has compounded revenues at 4.5%. That's a lot lower than 40 to 60%, I think we can agree.
Yeah.
And there were negative quarters in there, 6 negative years in there of growth. So, when you look at the AI landscape today, the thing you have to remember is, much like in the internet when you had cost drop massively, And the companies that really benefited were the ones sitting on top of that. So think Netflix and streaming, Amazon and e-commerce, Google and search, Meta and social. Those were the ones where the value accreted to them. You look at today and you're already starting to see a cutback in AI spending. I love the media coverage that it's really strong and companies double down. But if you look at it, of the four that reported, Meta, Microsoft, Google, and Amazon, their AI CapEx was down sequentially for the first time since 2023. And if you look at Microsoft, their AI CapEx, and they obviously were an investor in OpenAI back in 2019 when none of us had even heard about OpenAI, their CapEx was down for the first time since 2022. So you're already starting to see some of these companies starting to cut back on their AI spending. And I think to some extent, that could be good for them, because when you're running over 30% of your revenues is CapEx, you're going to see a massive spike in depreciation, and unless you're getting some payback, that's going to become an issue. So there's going to be a lot of changes, I think, going on for the rest of this year. Don't forget, tariffs were rolled back on semiconductor chips also. And so I think there was a big pull forward in demand there by the hyperscalers as well. And some of that's going to get unwound in the back half of the year. You can't have imports up 41% for the entire United States of America and not expect some kind of payback on the back end of this.
So if you think that we've seen the best of the rally, that things get a little rougher from here, which, if any of these stocks are your favorites?
Well, I mean, you have to look at the big trends. I think with Microsoft, remember for the last, this is the first time in the last 4 quarters that Azure, which is their cloud business, has actually done well. It's disappointed the other prior 3 quarters, and their Azure growth actually accelerated from 31% to 33% growth year over year. You look at Google Cloud or you look at Amazon Web Services, their growth actually decelerated by 2% each. And Microsoft this year is actually getting their spending under control, and I think there's a reason why this is the best performer out of the Mag 7 so far this year. Last year, they were the biggest spender and ramped it up the fastest. There's a reason they were the worst performer of the Mag 7 last year. So I think that one's interesting. The other one, and this is a tricky one, is NVIDIA. Because, when I watch the media coverage, everybody's saying, oh my God, AI spending, everybody's spending a ton. And I think investors want to believe that. Don't forget, this stock was down 49% from peak to trough with the stock price. Nothing will spur demand like saying, you can't have that chip, we're going to put an export control on you. And oh, by the way, tariffs are coming. That has pulled in a ton of demand. They've also de-risked the income statement, because they're writing off $5.5 billion worth. This is going to make it so gross margins can go up going forward. So, I think investors want to believe it's good versus it's a pull-in. That stock probably does okay in the near term, but I think the back half is going to have another set of issues.
Dan Niles. Dan, thank you.
Thanks, Becky.
Okay, when we come back, a lot more on Squawk. The end of an era. Warren Buffett will be stepping down from his role as Berkshire Hathaway's CEO. That's going to happen at the end of the year. We're going to hear what he had to say about his handpicked successor, Greg Abel, when Squawk Box comes right back.
Warren Buffett stunned attendees at the annual Berkshire Hathaway annual meeting this weekend with an announcement right at the very end of that session, after about 4.5 hours of shareholder questions, that his handpicked successor, Greg Abel, should take over, he thought, as CEO at the end of the year.
Greg should become the chief executive officer of the company at year end, and I want to spring that on the directors effectively and then give that as my recommendation. Let them have the time to think about what questions or what structures or anything they want, and then there's a meeting following that, which will come in a few months. We'll take action on whatever the view is of the 11 directors. I think they'll be unanimously in favor of it, and that would mean that at year end, Greg would be the chief executive officer of Berkshire.
Buffett was optimistic about Abel's future success at Berkshire, noting that as the head of all the non-insurance businesses, he's a very hands-on manager of the many portfolio companies that already.
It's working way better with Greg than with me because, I just, I didn't want to work as hard as he works, and I could get away with it because we've got a basically good business, very good business, and I wasn't in danger of you firing me by virtue of both ownership and the fact that we would do pretty well. But the fact that you can do pretty well doesn't mean you couldn't do better, and Greg can do better at many things.
And Joe, we're getting that news this morning. Berkshire Hathaway confirming that its board of directors met yesterday and unanimously voted for the plan that was laid out for Greg Abel to become both president and CEO starting January 1st of next year, and for Warren Buffett to stay on as chairman. Obviously, some decisions that'll have to be made kind of gradually over that period of time between now and then. But maybe the biggest news being, because this was a little ambiguous when he made this announcement on Saturday, that Warren Buffett is sticking around as chairman. And by the way, he says he'll be coming to the office every day too.
You were just as surprised as everyone, but he didn't whisper to you or wink or anything you didn't know.
I mean,
No.
He did tell his two kids. He said he told both Susie Buffett and Howie Buffett.
Yeah.
And so they were the only two directors of the 11 other directors who knew about
Yeah, all the
it.
directors.
And like you said, this has kind of been headed in this direction for a long time. He said now's the
Right.
time.
It's telegraphed that it's been a long process and Greg's always been, obviously, at least in recent years, this is how it looked like it was going to play out. All right, up next, Pershing Square's Bill Ackman will join us live. He's upping his stake in Howard Hughes Holdings. That stock is up sharply on that news. Squawk Box coming right back.
happy with it.
Welcome back to Squawk Box. We are in Los Angeles, and we have some news this morning. Pershing Square announcing it has agreed to invest $900 million to acquire 9 million newly issued shares of Howard Hughes Holdings. Joining us live from Los Angeles is Pershing Square's CEO, Bill Ackman. You're in town for the Milken Institute Global Forum.
Yeah, I'd say for Mike, he puts on an incredible conference.
And you just came back from Omaha, from the Berkshire Hathaway annual meeting, so I want to talk about that as well. But this is big news because this is something that has been in the offing now for several months. You have raised your offer and your stake now. Tell us what's happened and how did we actually get here?
So I think it's been in the offing for maybe 30 years, actually. What I mean to say is, I came into this business. First book I read was Ben Graham's Intelligent Investor. The next thing I read was basically Berkshire Hathaway shareholder letters, and it tells the story of Buffett buying control of a textile company and transforming it into a very valuable business over a long period of time. And Buffett's been one of my most important heroes, certainly in business, and I would say in life. And I always sort of aspired to build a diversified holding company and turn it into valuable enterprise and have big shareholder meetings and all that kind of thing. So I've been working on this for a really long time. Now, this specific transaction started actually, again, a long time ago. We bought 25% of a shopping mall company called General Growth before it filed for Chapter 11. I joined the board, and part of the way to make that company valuable was spinning off all the ancillary assets into a company called Howard Hughes. And then that's now 14 years later, and that business it started with a jumble of assets. And over time, the then management team, and most recently David O'Reilly and team, have transformed it into a great business, but a business that has really gone unrecognized, I would say, by Wall Street. And so it struck us that it would be there was a cover story in Forbes saying that it was going to turn into the next Berkshire Hathaway that was a decade ago.
Well, so the question though is, so you're now going to have almost a controlling stake.
Correct.
Almost.
Correct.
It's a little bit actually like Warren Buffett, almost a controlling stake.
Correct.
The question is, when is it going to produce enough cash, like a Berkshire, effectively, that you can then take that cash and go invest it?
So first of all, the MPC business, let's just back up. Howard Hughes owns these sort of small cities. They're called master plan communities, but they're not small. Like, so for example, we own the Woodlands, which is about the size of Manhattan, right? We own Summerlin, which is a major, 28,000 acre small city in Las Vegas, populations of like 130, 150,000 people. And what we do is we own all the land. We sell lots to home builders. Home builders build homes, people move in. And then the company over time builds the amenities, builds the community. I call it a bit like SimCity, but in real life. And eventually we build high-rise office buildings and apartment buildings. And it's a great business, but it consumes a lot of capital because you have to keep building the cities. Now the cities at a certain point in time get to a level of maturity where they start actually throwing off cash. And that's really where we are with Howard Hughes today. But there's still lots of opportunities to reinvest the cash in the city. So Howard Hughes, as a real estate company today, is not going to throw off a lot of cash, to your point. But 5 years from now, 10 years from now, it's going to produce more cash that it can generate.
Explain how Pershing Square is going to be attached to this.
Sure.
What your role will be, your CIO's role is now going to be effectively involved in this, how you're going to get compensated.
Sure. So first of all, the $900 million is not coming from the Pershing Square funds. It's coming from the Pershing Square management company I own about 45% of it. The rest of the team owns about 45%, and 10% is owned by a group of investors. We sold a piece of the business almost a year ago. That's the $900 million of capital that's kind of going into the business. So it's really the new additions to the executive leadership team that is investing the capital. So it's great alignment. You hire a new executive chair, you hire a CIO. It's nice to hear that they're investing, $900 million when they take the seat. We're not getting any option or stock or actually personally any compensation from the company. The company is getting the benefit not just of Ryan and myself, but I operate with a team. Unlike Mr. Buffett, who seems like a bit of a one-man band, and certainly he was when he started at Berkshire Hathaway. I built a team over time, and we work as a real partnership. Howard Hughes today couldn't afford to hire the 40-odd Pershing Square team members, the 8 investment team members. So we're going to bring all the resources of Pershing Square to Howard Hughes, and we're going to charge we're going to get paid a $15 million fee, and we're going to get paid a incremental fee to the extent that the market cap of Howard Hughes grows at a rate in excess of inflation. We're going to get a 1.5% fee on the increase in market cap, basically above today's market cap. I'm going to finish for a second. And only if the market cap, on a per share basis. So if we issue a bunch of stock to make an acquisition, that doesn't increase our fees. It actually reduces the fees as a percentage.
What kind of, you're talking about issuing stock to buy stuff?
Yes.
Is that how you plan to buy stuff, with the stock? Is there going to be enough cash? And would you ever try to buy, for example, an insurance company, which is something obviously
sure
Berkshire's done?
So we're going to start with $900 million of capital at the holding company that is available to make investments. It is definitely on our, if you look at Berkshire over time, a big part, Buffett's known as a great investor in stocks and companies, but a huge enhancement to his returns over time is that he built a profitable insurance company that generated, as a result, free money, so-called, float. And he built that. The insurance company was embedded in a diversified holding company. And the benefit of putting an insurance company or building one inside a diversified holding company is that it gives you a lot more flexibility in what you can invest the insurance company's assets in. If you're a pure play insurer, you can't take that much risk. You basically buy fixed income securities. So that model has not gone unnoticed by us. I think it's highly likely that we will build or buy an insurance company.
One of the things that's happened is it's become a crowded market, meaning there's a lot of private equity players that are trying to buy up, I imagine, a lot of the stuff that you may want to buy. By the way, they're buying up a lot of the stuff that Warren Buffett used to buy.
Sure.
So what's going to give you an edge in this case?
Sure. So one, we like great businesses, and so do private equity firms. But the big competitor, maybe by example. So I met with Glenn Youngkin, formerly co-CEO of Carlyle, now governor of Virginia, and he was saying, "Oh, I really love what you're doing with this Howard Hughes thing." This is when, again, it was publicly announced, but obviously we had not gotten to the deal done. He says, the biggest problem I had in private equity is I'd have to sit down with Mr. Smith and tell him, you realize, of course, that after we buy your business, you're going to kind of be on the merry-go-round, and every 5 or 7 years, your company that you built is going to get sold to someone else. And I had to be candid with them about this, but that's the nature of private equity. And what Buffett was able to achieve over time is he could sit down with Mr. Smith, who was maybe 70 years old. He built this incredible business. It's an important business in the community. And he can say to him, look, I'm going to buy your business. I'm going to take very good care of it. I'm going to own it for decades. Your employees will be proud. And Mr. Smith found that a very appealing notion after he spent his entire life building a business. Now, the issue for Berkshire today is at $1 trillion scale, buying even a billion, 5 billion, even $10 billion business doesn't move the needle. Whereas for us, of course, we're starting out, market cap today, is about 3.5 billion or something. So we have the benefit of starting small, but we have the similar benefits of being able to be a permanent owner of a company, which is something that, depending on where we have to get our stock price closer to intrinsic value. We can also offer a tax-free execution. We can give someone the ability to kind of sell some of their business for cash, sell them for stock, and go along for the ride with us.
Becky's back in Omaha, where you just came from. Just has a question for you, Bex.
Please.
Hey, Bill, great to see you. Thanks for coming on with us this morning. I'm so intrigued by what you just said about how you guys would either build or buy an insurance company, that the benefit of the float hasn't gone unnoticed by you. First of all, do you think it'd be easier to buy one or to build one? I don't know where you think prices are and valuations are on these things right now. And second of all, over the weekend, something Ajit Jain kind of focused in on and talked about on stage was the idea that all these private equity companies have now gotten into the insurance business, and he thinks are writing premiums that aren't at great prices and that don't make it very profitable long term to do some of that business. He basically said, almost in these exact words, that Berkshire's waving the white flag when it comes to some of that, particularly when it comes to life insurance, I believe. But they can't write that insurance at competitive levels because he doesn't think the pricing is right from private equity.
Sure. So what Ajit was referring to is that the Apollos of the world, Brookfield and others, have issued annuities, which are more financial products than they are insurance products, but they occur in the context of a regulated insurance company, and they take that capital, multiple that capital, and they lend it with their sort of proprietary access to private debt type deals, and they make a spread. And that business is, I would say, getting more crowded over time. But to answer your question directly, I think it's more likely that we will build an insurance company. In fact, we have a person that is a phenomenal executive in the industry that we're just beginning a conversation with that's intrigued by what we're doing. And I like the idea of building from scratch because you don't assume a bunch of other people's kind of liabilities. I think he's a super talented executive, and hopefully we can make a deal with him. But that would be, I'm kind of more intrigued with the idea of building something from a blank sheet of paper.
I'm curious, as you were sitting in Omaha this weekend, what you think the future of Berkshire looks like, and whether you think it ultimately changes in a Greg Abel world.
Sure. So I think Buffett has been very thoughtful about everything in his life, and in particular Berkshire, setting it up so that after he's no longer running it, it continues to succeed. And I think he's achieved that by buying these really great businesses, but I would say maybe even more importantly, building a culture, principles, a governance, thoughts that he's imprinted in the minds of the shareholders and imprinted obviously in the minds of the executives and the board of directors. So I think you've got a principle-based company that's going to stay a principle-based company going forward. Now he's stepping aside with $350 billion of cash on the balance sheet. I think Greg Abel's known to be a superb operator and a very good allocator of capital, certainly in the businesses that he's managed. I think it's yet to be proven that the current management team has the capability that Buffett has had to obviously buy businesses, and it's more challenging now because of the scale. So I think for sure the businesses will be run arguably, potentially even better than they've been run historically, because now a great real operator focused on that, running the company. The question though is, one, I think they're going to start returning capital.
You do?
Yeah,
in the form of dividends?
I think dividends. I think they will be a little bit more aggressive about buying back stock. I don't see Berkshire waking up in 6 months and Berkshire announcing a $100 billion acquisition. I think the new CEO will be, and the new board, not the new board, the new CEO and the current board will be a little bit more careful on the first deals, because if Berkshire's first deal turns out not to be a good one, I think that the market will kind of frown upon that. But I think the business will do very well. You've got Todd, you've got Ted, you've some very capable people, and it's extremely well capitalized. The insurance business, by the way, has a lot of continuity and some great talent, so I wouldn't bet against Berkshire.
Let me ask you a separate question just about the economy and where we are. I was at a dinner at this Milken event last night, and the question was put to the group to raise their hands. This is maybe 100 some odd people. Who's optimistic about the economy over the next 6 months? Mm-hmm. And when that was the question, when I tell you, I think there was maybe 1 or 2 hands that went up. That was it. If you asked the question again for a year, a couple of hands. If you asked again for maybe 2 years or 3 years, then more hands. Mm-hmm. When would you have raised your hand?
So let me be optimistic for a moment. What do I expect over the next 6 months? I expect that the war in Ukraine, Russia, has a pretty high probability of being resolved. I think there's some kind of resolution in the Middle East with Iran, either a deal or Israel and the United States take out their capability of producing nuclear weapons.
You do? That would be, by the way, a very big deal.
Very big deal. Whether it's 6 months, 9 months, potentially by the end of the year. I think those are well within the realm of possibility. I don't think we're going to wait around a lot longer to deal with Iran. It's got to be dealt with in one way or another. That's going to bring down geopolitical risk, in my view, in a very significant way.
It could also increase risk if it doesn't go right.
Could.
Okay.
I'm being an optimist.
Okay.
Okay, and I do think, I think Putin would like to end the war. I think Zelensky would like to end the war. I think Israel would like to deal with the nuclear threat. I think the entire world would like to deal with Iran's nuclear threat. So I think that's obviously a big positive. I think inflation has largely been wrung out of the economy, right? Price of eggs. I think the price of energy is coming down, and it's going to stay down. And I think, obviously very, very good for the economy. What else could I say?
Well, how do you think about tariffs impacting potentially inflation?
So I think tariffs, where they ultimately get resolved, will increase the cost of some, by a percent of some products. But it's not like inflation that will compound. It's more like a one-time reset, and then we won't have meaningful inflation from there. And I think that's a backdrop in which the Federal Reserve, toward the end of the year, could start. You could have a few kind of rate cuts.
Do you think they should be cutting already?
I think a small cut relatively soon, I think, makes sense, because I think what's happened is Q1's benefited by some front loading of purchases in event of tariffs. The uncertainty associated with Liberation Day, so to speak, is caused many businesses to pause and wait to see what's going to happen, and that's going to be reflected in Q2. So I think there's definitely a deceleration economy, now, absolutely. So the question, I think, what's important is that tariffs get resolved in the relative short term, because I do believe if we're still if the tariff thing is still major headlines.
Let me ask you a tariff question, then I know Joe's got a question about Harvard that he wants to ask.
Sure.
But on the tariff front,
sure.
When you say it gets resolved, what does resolved mean? Meaning, do you believe that the U.S. government is going to be collecting lots of revenue because we're going to have big tariffs? Are we blinking and saying, actually, we're not going to have the kind of tariffs we've been talking about all along, and therefore the market likes that, and that actually is a version of resolved? What are we talking about when people say resolved?
Sure. So I would say Trump has gotten the world's attention on trade imbalances and unfair trading practices of our partners. That's what happens when you announce 145% tariff against China, and tariffs, really very high tariffs against the rest of the world. After achieving that, he said, okay, we're going to pause for 90 days on basically everyone other than China, because China responded, so we're going to punish them in effect. That set up the opportunity for deals with our major trading partners. Scott Bessent says, look, we've got 18 countries, the top 18, European Union, etc. We're working out deals. We need to do the same thing with China. My argument is, made the point with China, but 145% tariff against China means we're ceasing doing business with China. That has very negative repercussions for China, even more negative for China than us, but it also has meaningfully negative repercussions for U.S., starting with small businesses, stick with me for a second, and others. The right thing to do, in my view, is we pause on China. Let's give it a little more time. Maybe it's 180 days because we're going to be busy here. What that does is it stabilizes the risk to the U.S. economy and small businesses around the country. But China is now highly incentivized to make a deal. Why? Because of the shock of 145% and the potential for high tariffs against China. Every company that's producing in China and selling to the U.S. is moving their supply chains elsewhere. The longer the tariffs persist and unfair trading practices persist against China, the longer they take to make a deal, the greater the risk to China is they lose all those businesses. And so the dynamic now is not, in my view, ideally favorable for the U.S. because there's economic pressure on the U.S. as a result of China tariffs. You pause for 180 days, the economic pressure comes off us, but it persists on China because of everyone leaving. And I think I'd like for us to get to that dynamic as quickly as possible.
Buffett doesn't like the tariffs, but we can talk about that.
Sure.
I want to go to Joe, though, because I know you've got a question. I want to bring up the topic of Harvard, which you've been very outspoken about.
Sure.
And not in a political angle, Bill. I'm just wondering, you're an alumnus. What should Harvard do where you'd say, okay, to get back in your good graces, what does the university need to do at this point?
Sure. So the right thing to do, or I should say the wrong thing to do, is receive a letter from the administration and write back saying, we're doing nothing. In fact, we're going to sue you. Okay, that's what Harvard did. What Harvard should have done is should have said, President Trump, you make some good points, right? Taxpayer money coming to Harvard, that's a privilege. It's not a right. And taxpayer money, going to an institution, the institution cannot have massive amounts of administrative bloat, waste, bureaucracy. And we're going to eliminate it. We're going to hire Alex Partners, or restructuring firm. We're going to take a 3G, a zero-based budgeting approach to our the way we run our administration. Things that are not inefficiency is causing harm, and we're wasting taxpayer money. Mr. President, you're right. Harvard has become, there is not viewpoint diversity at Harvard. Students are self-censoring their remarks in classrooms. Faculty are doing the same because people are afraid to have real conversations. You can't learn. You go to college to be exposed to a broad array of ideas. And I guess maybe I should be looking at Joe. Broad array of ideas. And that's not happening at Harvard. Free speech is not happening at Harvard. So you acknowledge the areas where the president is absolutely correct, and you say, look, we're going to fix those areas, okay? We want to make a deal, Mr. President. What have we seen from Trump? He asked for the moon, kind of shock and awe, okay? Same thing true for Harvard, the most recent letter. Now, you could argue it's certainly overreaching in some of the elements, but he wants to make a deal. Make a deal with the president, commit to fix these things, which, by the way, your alumni want you to fix. It's in the best interest of Harvard. And treat shareholder and taxpayer money like as a fiduciary, and they're not doing that. And Harvard is not in a good financial position. This is something I think it's not well appreciated. They nominally have a $53 billion endowment. I don't believe the carrying values of their endowment. 80% of the assets are invested in real estate, private equity, and venture capital.
So it's not liquid.
It's not liquid, and they're apparently selling us $1 billion slice of their private equity. Watch where that gets priced relative to the carrying value of the portfolio. My guess is it could be 30–40% below the current carrying value to get a bid. If in my business, if I owned a slice of something and I sold a piece of it at a 30–40% discount, I'd have to remark my entire portfolio. So one, the endowment in my view is massively overstated in terms of what it's really worth. The second thing is no one talks about the fact that Harvard now has $8 billion of debt. I read the prospectus for the recent bond issue. So you have $53 billion of overstated assets that are illiquid, and you have $7.9 billion of debt, which you owe. As a donor, do you want to give money to a nonprofit institution, which is going to go into the institution and going to go out the door to pay money interest to bondholders? My experience is nonprofits that borrow money, it doesn't end well. And then you have, what do they rely on for current funding? Money every year from the U.S. government, money every year from donations. Donations, I don't know, I have to believe they're down meaningfully. And tax-exempt status. Another reason it induces people to give money to their university is they get a tax deduction.
Fair or unfair to try to take the tax-exempt status away?
I think it's fair. Again, the Harvard became, over time, a political advocacy organization for one party. When a university goes from being a university to, affecting becoming a political advocacy organization, it doesn't deserve nonprofit status. I mean, and they have to. Harvard should be a place where students go to learn and the best research gets done. It shouldn't be a place that is allowing pro-terrorist organizations on campus, and that only allows certain kinds of thinking and speech on campus. That's a political advocacy organization. It's not a university. So I don't think we're going to end up there where Harvard loses its tax-exempt status. I want Harvard to succeed. It's been very important to me over time. But really, it got itself to a very bad place, and Alan Garber is a good president, but he's not managing. The mismanagement here is Penny Pritzker. If this were any other kind of corporation, the notion that she's still chairman of Harvard, leading the charge here, and in terms of how Harvard managed everything from COVID, and I know we have to go, but it's an important topic, to endowment management, to waste, to free speech, to who they hired as president of the university. It's time for a change in leadership in the board at Harvard.
It's a longer conversation. I want to thank you, Bill Ackman.
Sure.
Becky and Joe, I will see you. We will all see each other tomorrow, and we'll kick it back to the folks on Squawk on the Street.
I think it's the time has arrived where Greg should become the chief executive officer of the company at year end.
End of an era. Warren Buffett giving up the CEO reins after running Berkshire Hathaway for 6 decades. Good Monday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Mike Santoli here at Post 9 of the New York Stock Exchange. David Fabers at the Milken Institute Global Conference in Beverly Hills. And Kramer has the morning off. Futures red after a 9-day, 10% rally for the S&P. Couldn't quite get to the 200-day on Friday, but there is a very busy week ahead. Speaking of which, let's begin with David. Talk about what is coming up on Milken, not just today, but in the next few days, David.
Yeah, we got 2 days of programming here, and we've got some great guests. Today, let me just tell you, Mark Rome will start things off for us. Obviously, an opportunity to talk not just about the macro environment, the company Apollo coming off its earnings only on Friday, so we can talk a bit about that. And of course, we're going to talk a lot about private credit, not just with Mark, but I'm sure with John Gray a little later in the hour. And in the middle, squeezed in between, one of the biggest banks in the country, and a man we haven't often heard from, Charlie Scharf, will be my guest as well. So very much looking forward to sort of getting certainly a sense where things stand in the macro economy right now from all three of those gentlemen, Carl, given so many different things, even in a short time between when we may have last spoken to them. Things can change, as you guys know, very quickly.
Yeah, obviously, Rowan, we cannot wait after Friday's conference call from Apollo where they talked about sitting this one out, risk-free assets. Their chief economist, of course, continues to post almost every day about the coming wave of stagflation.
Yeah, Torsten Slok has been not shy about sort of sharing so many interesting charts as well and things of that nature, as you say. Yeah, maybe it is a time to deploy capital. It's interesting from that perspective. I'm sure John Gray as well will spend some time talking about the $177 billion in potential capital they have to deploy as well, Carl. So no shortage of topics. I don't know if they want to talk about the oil market, but that's certainly also something that I'm sure we'll hit this morning as well.
Yeah, below 56 today, getting more trims to forecast for the price of West Texas out of Goldman. There's a lot to get to. Let's talk some Buffett this morning, of course, but as we said, Berkshire Hathaway's board has acted on his recommendation, voting unanimously to name Greg Abel president and CEO effective January 1 of 26, and for Buffett to remain chairman. Of course, Mike was there over the weekend. That must have been something to watch.
For something that was, at least to a large degree, expected, it was still pretty jarring and dramatic, the way that he did it in the final couple of minutes of the meeting. And really kind of fascinating just to see this moment that he chose to do it. Now, whether it was intention or whether it was happenstance, the stock had ramped to an all-time high. It's outperformed the S&P just on a year-to-date basis by more than 20 percentage points. There's been this massive recognition of not just the defensive qualities of the company and the capital allocation acumen, but also just this constellation of businesses that he built and the whole thing and how it sustains up. Now it's the big question of, does it live beyond him? It's his company as CEO for another several months. It's been my sense for a while, I've tried to make the case that whether tacitly or strategically, he's been setting up this company with $350 billion in cash right now to have maximum flexibility when it's handed off to the next leader. And that's where it is. Now the question is, what gets done with it? I talked to a lot of investors in Berkshire Hathaway, and there's a real split between those who say, this could be a catalyzing event. There's probably some sort of suppressed value in the company. You could restructure it in various ways. You can deploy that capital in a shareholder-friendly way. And others who say, actually, Buffett's greatest genius was creating this machine that can just sustain itself for a very long period of time, driven by the principles that I think do pervade the entire organization.
Not a fan of tariffs as a trade weapon.
Not at all.
Right?
No.
Even raised the prospect of reasons why they could want to own other currencies than the dollar.
Exactly. He definitely. I don't think that's a surprise that he would say that this is just sort of a kind of an imperfect way to go about trying to rebalance the world. Of course, as shareholders and others have talked about, he had this idea years ago for export credits, and it's a way to incentivize people to produce things kind of domestically. He basically said, no, look, it's a Rube Goldberg machine. It's not going to work. But so maybe even if the general idea of trying to bring manufacturing back is legitimate, I don't think necessarily that he was ever going to be a fan of tariffs. Look, it puts a massive tax on the global economy, on global efficiency. He recognizes that. He's very concerned, more than you might think, about these macro kind of world historical things like devaluations and hyperinflation. And I guess living that long, you have the sense out there that big stuff can happen when you least expect it.
Yeah. Take a listen to what Buffett said about tariffs and the argument that the U.S., far from being ripped off, in his words, is actually won. Take a listen.
Exactly.
Trade should not be a weapon. And the United States, we've won. I mean, we have become an incredibly important country, starting from nothing. 250 years ago, there's nothing been anything like it. And it's a big mistake, in my view, when you have 7.5 billion people that don't like you very well, and you got 300 million that are crowing in some way about how well they've done. And I don't think it's right, and I don't think it's wise. I do think that the more prosperous the rest of the world becomes, it won't be at our expense. The more prosperous we'll become, and the safer we'll feel, and your children will feel someday.
David, echoes of Ken Griffin last couple of weeks saying the trade has made its way to a, quote, nonsensical place, and that we are eroding the American brand.
Yeah, and Griffin obviously will also be in attendance here at Milken, and perhaps there will be some debate around that as well. You know, I did want to come back to Mike, who was obviously in the room. Mike, last night was at a dinner. There was somebody who's quite close to Buffett who was also there, and described the fact that it seemed as though it really was a truly, and I know Becky's talked about this, you have as well, a surprise, the announcement itself. And beyond that, shared their belief that, in fact, Warren may devote himself now to making decisions about that $350 or so billion, and perhaps, well, actually, that will be his final legacy, the investment of said cash at Buffett. I'm just curious to get your thoughts about it.
Well, that's absolutely part of how he even framed his decision and his transition to a new role. I found it pretty telling where he said, look, I'll be around to help any way possible. Now, we know as of today he will remain chairman for a bit as well. But he said, I would be there if, in fact, there was an opportunity to do a big deal, to deploy that capital. That was probably helping to reassure shareholders that, in fact, he would be holding the reins if, in fact, there was some kind of a crisis or some kind of dislocation in the markets or just some grand opportunity that presented itself, that he would be steering it. You know, it sort of seemed a little bit almost like, look, I don't want to miss out on the last one. You know, I was thinking about, like, you know, Jack Nicholson said, look, I've pretty much done everything. What I really like is One Last Romance. And he said that like 15 years ago. I think I don't think he's wanted to build up the cash. I think he hasn't seen the conditions under which he felt he had an edge in putting a lot of it to work in a new business. So we'll see if he does, in fact, do that. But I have no doubt that thinking about what that cash represents and what that potential energy could go toward is a big piece of this next phase.
What about questions of the current portfolio? Does Oxy get most of the conversation right now?
No, I mean, as much as it's a very large percentage of Oxy that Berkshire owns, it really isn't that big relative to the portfolio. You know, the biggest dollar market value of the portfolio is still Apple. Yeah. They own 2% of Apple. I do think that it's fair to assume under Greg Abel that the kind of stock picking aspect of Berkshire Hathaway, the investment in public equities, at least new ones, will become maybe a lesser part of the story. Some of that cash, I think there was some allusion to this in the meeting, maybe is more like bolt-on acquisitions. What Abel has done at Berkshire Hathaway Energy is to kind of cobble together this vertical that makes a lot of sense. So I think I would look toward that rather than, you know, the individual public equity investments as you know, the key to the future.
Yeah, and maybe I'm sure you've talked about it all weekend, but maybe we'll get to as well the impact of current policy on the operating businesses as we speak.
For sure.
That's a huge story as well. When we come back, David's going to sit down with Apollo's Mark Rowan at the Milken Conference as we watch futures here ahead of some 94 S&P earnings this week, a Fed meeting, BOE, and we'll watch for some arrivals or lack of arrivals at the Port of LA. Stay with us.
AI meeting agent.
All right, we're live from the Milken Institute Global Conference. Apollo Global, out with its earnings Friday, saying it is, quote, well prepared for the economic environment ahead. Joining me now is Mark Rowan, the CEO of Apollo. Always good. Good morning.
Thank you for having me.
Our annual sit down here at Milken. You were on our air not that long ago with Andrew Sorkin back on April 9th. But even between now and then, it feels like a great deal has happened. So let's just start off if we can. I want to get to your earnings, obviously, but give me your senses to the macro environment right now. Nothing has really changed in terms of trade, at least in terms of any new deals, even though the market seems to be hoping and awaiting something on that front. What are you seeing?
Look, we were in the single best position of any country in the world. Low unemployment, massive capital investment, massive capital flows. And what the administration wants to do is actually the right thing. Resetting our terms of trade with the world, long overdue. How we did it and how we're doing it, in the short term, we've created uncertainty. Uncertainty slows down investment. Uncertainty slows down hiring. We have ground things to a halt. And we've also, in the longer term, just damaged the brand because we've introduced so many unexpected outcomes for people.
Ken Griffin has said something similar in terms of damaging the brand. What does that mean?
Look, we are seen as a safe haven. For the last 15 or 20 years, investors from around the world were given three choices. There are three big markets. You can go to China, you can go to Europe, you can come to the US. Everyone answered that in US for the past 20 years. All that money flowed into our economy, mostly in our capital markets, pushing our stock indices and bond to record highs. I mean, think about what happened here. We had 10 stocks that became 40% of the S&P. Market cap of NVIDIA alone was more than the stock market capitalization of every stock market other than Japan. And those 10 companies traded at a 60 PE. Hyper-exceptionalism, as I sometimes say. Now, we're just exceptional. That's literally what's happened. Uncertainty has given people an opportunity to rethink. Is the U.S. a safe place long term?
Yeah, although you've made the point, you did as well in the interview I just referenced. All right, where are you going to go? Germany with a $2.5 trillion bond market? You got it. I mean, we still have $36 trillion, not to mention the last I looked, the dollar was still the reserve currency.
We are exceptional. We will continue to be exceptional for a very long time. We are now experiencing a loss of hyper-exceptionalism. And people are adjusting to that.
Is that gone forever?
It's hard to say forever. Look, I want this administration to succeed. The instinct of what they want to do, I actually think is right.
Well, what's right about it, Mark?
Think about it. We set terms of trade following World War II. We are the freest trading country in the world. We are, over the next generation, going to experience massive waves of technological change and other changes in our society. To want more of the jobs here, to prepare for the long term, is long overdue. Where is it written that the U.S. has to be the freest trading country in the world? Can't we be 10? And also, we have not yet gotten the benefit of what we're, in my opinion, what we're entitled to. I mean, I used the example when I was on last. Think of the U.S. and Mexico together. Done the right way, the U.S. and Mexico together should be the most potent economic force in the world for the next 50 years. Add Canada to that, and you really have something of massive size and scale.
Right, which points out perhaps the wrong-headedness of going after two of your key trading partners at the outset.
Interesting. I don't think it's the wrong-headedness, it's how. We should want reform in Mexico. I sit with Mexican industrialists, Mexican financial leaders, and to quote one of them, who will not be named, if it takes tariffs to make Mexico great again, so be it. There are things we should want from Mexico, and there are things that the Mexicans should want to do that are just politically difficult. And if tariffs are the motivator to do that, that to me is a smart tariff.
And you believe that manufacturing jobs can come back in a meaningful way?
I think some manufacturing jobs can come back in a meaningful way here. One of the most interesting stats I've seen over the past month, average salary for a sociology grad of a leading university, $60,000. And average manufacturing, $150,000. We have the ability to do high-end manufacturing here. We have the educational system to do it. We have the workforce to do it. We don't have the workforce to do everything. Low-value manufacturing, I think, is unlikely to come back.
Yeah. All right, you mentioned hyper-exceptionalism perhaps going away, maybe forever. You also said earlier things have ground to a halt. Let me follow up on that. What does that mean, things have ground to a halt?
Uncertainty. How do you make decisions until you know what the outcomes are? And so that's what we're seeing right now. Businesses are holding off on making investment decisions. People are holding off in hiring. the decision as to where to invest, how to invest, under what circumstances to invest, the economics of investing. And I'm talking not investing in stocks and bonds, I'm talking investing in goods and in plant. Until we have resolution, until we know what the path is, I think we're going to have uncertainty. And so in our firm, as you know, our chief economist has basically coined the notion of a voluntary trade reset recession. The notion that we have had things so good and we've now ground things to a halt that it is possible we will cause 2 quarters of negative growth. Different than what I call a real recession, where lots of people lose their jobs. We still have really good underlying fundamentals.
Yeah, and obviously we got a jobs number that was quite good on Friday. Same day that you reported earnings. Let me go there if I can. I'm looking through the analyst reactions. I'd say they're mixed. Good results in a quarter where market volatility began to build. This pressures near-term estimates primarily in retirement services and principal investing. Another saying, missed consensus, FRE though is ahead of the street. Why are you laughing?
It's a tough job to be an analyst, to have something relevant to say on a quarterly basis.
What in your opinion would be something relevant to say in terms of the actual performance during the quarter?
I'd say the following. We are the beneficiary of 2 massive long-term trends. One is the growth in private markets, and private markets is experiencing very, very robust growth. From a business that was funded out of the alternative bucket of institutions, we now have individuals, we have insurance companies, we have now traditional asset managers, we have institutions who are now using privates in their fixed income and other portfolios. Lots of demand for privates. Our job is to manufacture them. Why are privates interesting? Better risk reward. We're limited by our capacity to create better risk reward, and we do this really well. So in the FRE business, we were up more than 20% quarter over quarter, very strong flows. In retirement services, we are a principal. We have to run with a principal's mindset. What we saw for the last 4 months were the tightest spread conditions in a generation, and you're offered a choice. When that happens, you can take more risk to try to keep your spread wide, or actually you can go the other way and say, this is not our time.
Right.
And that's what we did.
Sell and go to cash to some extent. Raise cash.
Essentially, we built a massive pool of cash on the belief that these spreads would not continue. And lo and behold, in the first 2 weeks of April, not in the same quarter, but in a different quarter.
Did you put some to work already, or are you still waiting, given what you're talking about in the environment in terms of uncertainty?
Yes and yes. So we were, I believe, among the largest buyers. We put some $25 billion to work in April alone. More to go.
All right, let's talk investment grade private credit, because you spent a good amount of time on the call as well answering a particular question. And I was reading various things you said, but one struck me, Mark. I think 18 months from now, we will not know the difference between public and private credit in the investment grade market. It won't be the issuers, the size, the rating, the provision of financial information, ability to sell and buy. What are you talking about?
I stand by it. The best way to get at this is really analogy. 25 years ago, the notion that loans would trade, people looked at you quizzically. Some crazy man named Jimmy Lee at JP Morgan stood up and said loans will trade. Well, how could loans trade? Every loan was private. Every loan was different. Loans took 30 days to close. But guess what? JP Morgan made a market in loans, and loans began to trade.
Started that at Chemical Bank.
There we go.
Yeah.
And all of a sudden, JP Morgan was earning widespread, and Goldman didn't like that. They made a market. And Deutsche Bank, and so on and so on. And now we have loan ETFs and loan mutual funds, and we accept that something that is not even a security trades. We're watching the same thing happen in investment grade. So we've launched with State Street the PRIV. Yep. PRIV is a private and public investment grade. Guess what? Private investment grade trades. People will watch us earn wide spreads. They won't like that. Others will come into the market. 18 months from now, we're going to have a market for private investment grade.
You know, the ETF itself has, started off, I would say, somewhat rockily. You got a letter from the SEC sort of questioning it. They approved it, but they also had real questions specifically about the liquidity profile, the idea of how can you possibly offer daily liquidity and something along these lines. And open-end funds required by law to redeem its securities on demand from shareholders. We have concerns with the fund's ability to comply with the 40 Act. And they really did narrow in on that.
Yes.
What have you done to, A, improve liquidity, and what do you do broadly speaking to sort of give people the comfort that if I want out, I can get out?
Well, let's start the other way. Why does anything trade in the fixed income market? Think about what happened in 2008. We changed our financial system On the equity side, we saw Citadel and Jane Street, Susquehanna, Blue Crest, and a number of others step forward. That is who makes our equity markets today. Who does that on the fixed income side of the market? The answer, no one. We have 10% of the trading capital in the world for fixed income that we had in 2008, and markets are 3 times their size. We have a historical, nostalgic view that there's liquidity in fixed income markets. There's not. There's only dealer liquidity. Why should what's happening in a private investment grade be any different than a public investment grade? And the answer is it's not. And that's what we're showing people.
So what, we have to get used to the fact that there's going to be a lack of liquidity?
In every fixed income market. And that is what we're showing. That is what we're showing regulators. That is what we're showing
Yeah, good morning.
We're showing counterparties. All of these markets in fixed income are dealer liquidity markets. And we should expect, as investors, that in big risk off
I'm
moments
here.
and the lack of market making activity, we should see wide price springs in public, in private.
That means if I own the
investment
ETF, PRIV.
In a normal case, you should earn more for the same risk. And in a downside case, you should have no worse liquidity than if you were public.
It's only raised, I think, 54.6 million in assets. Are you disappointed, at least, in terms of how it started?
No, we start for about 6 months with your seed. People watch it trade. People watch how you do, and you grow it over time. This is, for me, a really interesting
For me, for you.
PRIV. This is about making privates better understood and more acceptable. Privates, as you know, we started with the notion that private was risky and public was safe. And when something's risky, you stick it in a little bucket called alternative, and you want really high returns of it. Well, now we have individuals buying privates. We have retirement services insurance companies buying privates. We now have traditional asset managers buying privates. I think what we're watching take place in the traditional asset management industry is a redefinition of what active management is. Active management used to be the buying and selling of stocks. Now I believe it is the addition of private markets to public portfolios. Some of them will come in wrappers that investors understand. Every mutual fund has a 15% private bucket. ETFs have a private bucket. The more acceptance we have for private, the better demand we have for private, the more buyers there are for private. That's where I think we're heading, and it's our job not to grow too fast.
And you believe that the liquidity constraints can be figured out. I mentioned this as well because you're right, Blackstone is certainly moving down this road. BlackRock, I've talked to Larry Fink about that. There's no doubt that they want to try and make a similar offering. So there is going to be more opportunity for the people who are listening at home right now to potentially participate in this market, but
they
what
will.
about the liquidity problem?
Well, 2 things. They will participate, but they're not necessarily going to participate by being a client of Apollo or Blackstone or anyone else directly. They have a relationship with an existing asset manager, and what they're going to do is they're going to participate in the private market through the traditional asset manager packaging public and private. We're watching these partnerships get formed every single day. This market is very, very large. In terms of trading, this is about acceptance. In the investment grade market, I think that is the first market that is private that will become liquid. It will not surprise me to see the levered loan market become liquid. The difference between a broadly syndicated loan and a piece of private credit is only whether there are many buyers or one buyer. It's not inherently a different product. Is it tradable? It is tradable should people want to trade it. There's just no need to trade it at this point in time. Will we have liquidity in private equity? Not for a very, very long time.
We didn't even get to private.
I just want to make sure that we're talking about a segment of the market.
Understood. Finally, let me just end where we started. When you talk about a halt, you talk about uncertainty. Do you have any sense as to when you think things are going to change? And what are you looking for to be a determination that they happen?
Look, I think if we have critical mass of known rules, we will have some more certainty. That doesn't mean it will be as good as it was. I don't think it has to be the same. Same is not necessarily a good direction.
Okay.
The administration
Well, we've
wants to
consolidated here, so the market probably going to go up.
I can take issue with the process. There are lots of roads to Rome, as you know.
5, 10,
But until
15,
we see
20,
critical
25,
mass of
30.
trading
Well, I can
partners
stick
who
the
have signed
time.
up to economic deals, I think we're going to have
Yeah,
uncertainty.
4 hours.
Always appreciate it.
More than
to do
appreciate
our, at least
5,
our
6,
annual
7,
from here.
8.
Thankfully, we get to talk more than once.
Of consolidation.
Oh,
Carl Wellen, CEO of Apollo. Carl, send it back over to you.
All right,
With a
David,
double.
a lot more to come from David and Milken today and tomorrow. Interesting comments. So we'll see how it changes the the narrative and sentiment right now. Mike, I do want to get you before the bell.
562.94 break
Today trims their forecast
on
yet
SPY.
again. It's another multi-year low here, got below 56.
Yeah.
Interestingly, it was Apollo over the weekend and Torsten Slok that looked at the break-even.
Not a
out of
cloud in the
Apollo
sky.
survey,
Yes.
which he argues is somewhere in the high 60s, low 70s.
Yes, at least maybe on a blended basis or for new investment. I do think it's interesting. It's coming from non-U.S. supply push is really what's happening, and then some demand concerns in general. If you want to take the macro takeaway, it's perhaps a partial offset to whatever the de facto tax increase on tariffs is.
No, shut up.
Angles, and I'm not saying you
guys have been wrong again.
But it could have the net effect of that. A disorderly move.
One minute left. I'm having jasmine tea with raw sugar. Have you ever had that before? Oh, here we go. Get my SPX up. So we got earnings coming up this week. Nvidia's down 131, Apple down 194, Tesla down a couple bucks, Amazon down 3, Netflix is down 34. It's overbought. Well, it kind of pulled back already. Huh. That's their baby right now. Mister's down 737. It's had a pullback too. Let's see what Mister here is. $390. Shoot. Yeah, we're down to 2-day support. And the 9th. Ooh, we got support on the SPX right here. PLTR is pulling back a little bit. We got earnings tonight. Now we did break resistance, all-time high. SPX here. We got the 5680s calls, or the 5690s. 5690s look good to me. At 380. We'll get this trade out of the way first. Today's the 5th. Yeah, it does taste better. $56.90s at 380. They went to 430. Okay. There'll be peace in the valley for Bobo someday. So far, I ain't getting much out of it. The volume's low. We got 3 white soldiers. You dummy. Could have had 430 there. I'm going to add, damn, 330. So I'm going to add 2. $320. There's the double bottom, so it has to hold here. Damn, where's my... Well, they're definitely bearish this morning. Might get 2 more or 3 more. And they got 340 average. Got to break the 9. There's 340. 360. Yeah, it's much better with raw sugar in it. Still got a little aftertaste. PMI at 945. Ooh. Well, here we are. What did I type in? Oh, 560, 5690. Ah! Okay. You it's not working so far. Volume's real slow. I don't like that. Yeah. Jasmine tea's hard to drink. AMD's earnings are coming out this week. NVIDIA had a pop. So did AMD. IWM pulled back to my first support that I called. SPY still consolidating. Come on, baby. No can do. I went to the Man Show last night. Funk is back to work. Good morning, Bug. Oh, Funk is live. Slash ES has been going sideways most of the morning. Just got to go either way. Might add me 3 more here if this thing don't start cooking. So far I ain't seeing much. Mister's at 3, new low on Mister. 377. Come on, baby. PLTR's got a snake breakout. Pull back. We've got the earnings watch list right here. I'm going to see what's red. So far, Mara's down. Well, Bitcoin ain't doing too hot. We've got Mara at the first support that I called in the video at 1320. Mara. Listed, I said $2, a little above $2. Oxy down 182. Rivian down good. We'll see how long this lasts. Ooh, my little spy call, SPX calls at 225. So it made it a business decision. I'm going to add, let me see you. I might add 6. Yep, 240. So I got 6 of them now. I got 9. Average of 274. I'm rounding it up. Well, Warren Buffett didn't sound too good. get a pop. We've got a 1-2 freebie. We can go a little bit lower, but there's 265. Oops. There's even 280. And back to even. Come on, break out. Give me a big old fat candle. Now we're at 21, so I got to make a business decision here. Get out even. Get out with 85 bucks. Or 85. There's 95. Now if this thing breaks, 295. There's 3. It'll be peace in the valley for me someday. Yeah, that's why, I mean, he didn't sound good at all. He sounded like an old, shriveled up old man. If I was, if I had, plus he's sitting at what, $350 billion and not investing? To me, that's a piece of shit. There is a double top. I never did like the guy much. I like him, but I mean, he's a nice guy, but I just don't like his strategy. I've learned to trade like him. There's $3. So either sell it. That's $25 a contract. But I know if I sell it, I'll get a nice little pop. I'd rather see for the double top. Now see 320. This is almost getting worth it now. I don't know how he does it, but that James Howard is one heck of a trader. Two-minute warning, so I'm going to get out and watch it pop. Because everybody's been wrong about every frickin' thing. Let's get out, 320. I'll take it. 45 bucks a contract times 9. A minus. That's good enough. Watch it pop. There it goes, 320. I'm out. Just watch it. Watch it. Watch it, you buzzard. It'll be peace. I knew that Washboard Jim. He was one hell of a trader. I watched his hour-long video yesterday. I was surprised. He's a genius. $350, you son of a... Son of a biscuit eater. It'll be peace in the valley for me. Damn it. 370. He tries his best. Now they're at 390. He hit the double top. The crowd's going crazy. $4. Oh, I see why I got an A- now. Now they're 420. 430. Oh, you piece of cotton crap. Damn it. Break to the 63. Right where I said it was going to go. Ladies and gentlemen, that's how you not do it. So I'm just going to take $4.20 and minus $2.74, and that comes up to what? 420 minus 2.74 equals $1. What? Times 9. Whoa, no. I got to do the math again. 4.20 minus 2.75. That's where I made a mistake, I think. 274. 4.20 minus 2.75. No, that's $1.45. That's $145 times 9. Oh my God. I was a lot better in math when I was younger. $1,300. Magnificent. What kind of grade do I get? Joshua gives me an A+. Very good, Joshua. You're my best friend. When I get ready to go on vacation, I'm taking Joshua with me. Because he fought the battle at Jericho. You saw the sweet breakout? Right to the 63. What do you think about that, Chris? Did you ever see the 63 before in your lifetime? Until you met me? Say yes or no.
Affirmative.
Chris must be busy. Where's Chris? Now, you people that are live on YouTube, there's a link down in the content. You can always join the room. But if you join the room, I take 10% of your profit. Okay, prepare ye in the name of the Lord. I typed in the question. I'll type it in again. There's a delay there. That's what you get for being a Spaniard. Oh, that didn't come out right. Now, Funk, don't count your chickens before they hatch. Okay, get ready. Do you see what I see? Do you see what I see at 2:25? Do you see what I see, little boy? It's a dream come true. At $2.30. Funky? Let's get on with the music, baby. Now we want some funk. Got to have some funk. Could be one of them scalping days again. So you're now at $3.10. You can make a business decision. Make a business decision. That's an A+ for sure. $3, it's $90 a contract. Do you understand me? Explain to me exactly what you need done to your car with the parts, and I'll study it on YouTube. I'll talk to Randy, see if he can meet me up there next week, and we can do it together. The year and make of your car also. It's $3.20. So Jim, how did you get in that trade? Well, I'm going to explain it to you. Last night I went to a man's meeting, and I discovered that I was a man. All that time I thought I was a transsexual. So I talked to the preacher. He was from the Kansas City Chiefs. I said, man, I'm having issues. I can't find a girlfriend. So I started wearing a dress, thinking I would become a lesbian. He looked at me and said, son, you're going at it all wrong. You need to grow you some balls. I said, what do you mean? What's these things called balls? I said, have a man voice. Take off your dress. Quit drinking Budweiser. And boom, 340. Now that's the double top. So that would be an exit idea. Where's Spark at today? Good morning, Nikki. I hope the office ladies don't hear me. Good morning, Ricky. Good morning, Franchise. Good morning, Link. Good morning, Jesse. I think I'm going to make you I'm going to see where you are here on your rolls. I'm going to update Jesse's roles to a trusted employee. And I think it's about time he got a color. So let's see. I'll make him green, if green works. Washboardjim's back down to 270 here. $2.50, brother, with another mother. $3.10 here. It'll be peace in the valley for Bobo someday. It'll be peace. For me. There's your 320. Ha 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 ha. Underlay, underlay. Can we take it higher, please? I think we can. That's the plan. I got saved. Yes, I did. I asked the guy sitting next to me, I guess he was, I said, where's all the women at? I said, this place ain't no fun without the women here. Well, they had a meeting, well, they ain't doing me no good. Probably not the right thing to say. I think they've already red flagged me already. You gotta watch that new guy. He's been here 16 weeks and already horny. Make sure you warn your wives. Sue's saying, what a chop. I love chop. I love chop. Chop's a doozy. I'm calling 5671.35 today. That's what I'm calling. Okay, get ready again. We have a 1, 2, 3. Ladies and gentlemen, this is Washboardjim with a sneaky snake trading strategy. I am now looking at the 5690s again on a 1, 2, 3 setup. This is a symmetrical flag. Just promise you won't tell nobody today. You can call your grandma up and tell her. I think it would be a good idea. Jimmy's getting ready to go ahead and buy this call here. We could pull back and hit the 50, but I really like to get it right here and prove these fat cats. I mean, I listen to them in the morning and I just go, won't they ever shut up? It's like none of them's ever run a business before. We do have a pivot point area, so I think we could bounce off the 50 and hold that. Where's the orb at on this sucker? Oxy really looks. So that's the 5 minute. We could hit the 200. I'm going to set an alert right there on the 5 minute. But then it could come back and do a double bottom. So the 5690s. And then the 1 minute or the 2 minute. You see, the 2 minute, it's just Yeah, it could be called a triple bottom. And a 3-minute. It's tweezer bottom on the 2-minute. Jimmy just recognized. Oh man, that's some good stuff. And jasmine tea's giving me a little bit more energy in the day. It's better than coffee. It's like a different kind of caffeine. So what's Mr. doing? Have you looked at Mr. yet there, Funky? You're at a day low on Mr. And we got a wedge. Falling wedge on Mr. Falling wedge on Mr. Falling wedge on Mr. We've got two different kinds here. We're going to go with the wicks on this one. Falling wedge on Mr. Strategy requires 1,000 BTCs for 180 million of Bitcoin ETFs. Bounce back of 1.8 billion. Okay. I'm watching my entry here for the SPX. I want to get in this 50 SMA. Okay, get ready. And Jimmy's going to start looking at this trade here. $2.40. The market's giving me a wedgie. And I'm watching Mr. too. Slash ES not doing nothing. I'm in the SPX at 240. It is kind of we got PLTR tonight. I think it's tonight. Well, I better double check my thing. Hims and PLTR tonight. Come on, you beast. Hey, Nancy. Would you do me a favor? We have a 1, 2, 3 set up here. So I need a Valium and a shot of vodka. It says it's ready. The ready, set, go. So we're going to squeeze here any moment. Right now we got a descending flag, which Jimmy doesn't, well, it could be a symmetrical, but it's broke out of the symmetrical part. So we're going to squeeze any moment. Come on. Oh, shit. Come on. I need you to hold. I'm about ready to add to my 240. Come on. Let's make this thing work. 205. So I got 240 and 205. Divided by 2. I'm getting scared. I don't think this is the way it's supposed to be. Oh! Cancel. Oh, I didn't want to okay it. Undo the... $2.2 free. Yeah, it's starting to get a little bit nervous. I think today for lunch I'm going to have beef stew. Come on. Jimmy's about even. It'll be peace in the valley for me someday. Yeah, I need a breakout. If you know what's best. Break it. 245. We're up to 123. Now, if you're stuck in this trade and you add it on with Bobo, you can sell it now. Or you can see if we break the 1-2 freebies. But you're at a resistance, so you got to make a business decision. If this thing breaks out, I think we can get it up here to this next moving average. If not, we got 3 white soldiers. So you know what I say on the 3 white soldiers, take profit if you're a rookie. If you got money to blow, let her go. $275. At Washboardjim, he will sit there and talk you through the trade and encourage you to stay in it, but then he always says if you're a rookie to get out. We're at 330. We are now at 330. I'm up. I'm up. I'm up. If you know what's best for you, I don't mess around. That Washboardjim, he's amazing. I want to be his girlfriend. $3.30. Does anybody know that? What that means? We're gonna make it to the 200 EMA. 350. $360. Hickory dickory dock, the mouse ran up the clock. That's what you get when you hang around with a bunch of men. You get testosterone, or whatever you call that word. Does anybody know what that word is? See what happens? I was saved. $4. Aha! Now, please, don't argue with me. Uh-oh. What the hell does it do that for? Anybody know why sometimes your screens just clear out? I'm moving this thing around, you know, kind of like this, and all of a sudden they're all gone. Is that natural? I got one of them fancy computers, so it could be. Oh, damn, how'd that get down there? Miss Petalitas is up. And she's froze. I'm just wondering if that's natural. God damn, man. Everything's moved around on me. Up on Easy Street with her dog and Persian cat. Jimmy called a fallen wedge on Mr. I don't appreciate that. Jimmy called a fallen wedge on Mr. with a 1-2 freebie. How do you spell wedgie? W-D-G-I-E. W-E-D-G-I-E. Is that wedgie? That's very unprofessional, James. Is that how they spell it in Spain? If you accidentally do show desktop, all windows get minimized. Well, I don't know what that means. I know I called a fallen wedgie. That's on the 2-minute time frame. We broke to 60. Funky. It's a funky. I don't know if I can call him a punk. He's bigger than me. He sounds like he could fight, so I don't know if I'm getting that man's way. E, welcome to the room. Say hi, and everybody will say hi back. I bet you Whoa. PLTR, baby. So I'm going to go and approach the kitchen. It's about time for me to have my lunch. And I bought some real thin Swiss cheese, and I don't think it's mozzarella or something. I don't think it's what I needed for and I bought a lot of it. So I think I made a bad purchase this weekend. I think I can still use it in my buns. Might have a hamburger. Can't beat them things. But I need to have some soup. So I think I'll have a salad and some soup with a cheese chip. We have 3 white soldiers. Three white soldiers on the 2-minute. Is that telling you anything? It'll be peace in the valley for me. You know, I noticed something on YouTube this weekend. Girls, girls, girls in Blue Hawaii. Elvis movies. And I don't know if that's new or what, but I thought it was cool. I'm going to type in the letter word 3 with a capital WH three racist soldiers, SOLDIERS. Funky said Mr. bounced hard off the support zone. I want to let the room know that I really did appreciate Funky moderating with me last week. It was a different and special week. And I thought it was very educational on my behalf. It was fun. You don't get complacent, I guess is what I'm trying to say, when you have two people on here. You have like a watchdog. Or, you know, or anybody else that wants to improve and learn, but, you know, as long as you're not in my way interfering with my beach trades, because that's when I make my most money. And we're getting ready. I'm going to tell you what, we're going to hit that 5668.86 today. Here we go. I don't mess around, you know what I do. You know what I'm saying? I'm not scared. Last night I became a man. Oh, yeah. I mean, that's like $100 contract right there. Okay, I think I'm going to go have me some lunch. Oh, I better see what she's got to say. She's probably off the air now. Oh, it's a different commercial.
Good morning, everyone. We are about 90 minutes into the trading day on Wall Street. Welcome to Trading
Was there a question?
Hall, live from the floor of the New York Stock Exchange. Got some mixed markets happening right now, but the S&P 500
Jimmy,
remains
look.
under pressure. Coming up on today's show, in our 360 Spotlight, we'll discuss all things Warren Buffett as the Oracle of Omaha announced he will step
It
down
qualifies as a snake breakout.
at the end of the year after a 60-year.
It qualifies as a snake breakout, but not a pullback. It qualifies as a snake breakout on the 2 minute. Not the pullback yet. 10-4. Oh, that ain't the wrong chart. Wrong chart. Wrong chart. This could be a problem. This could be a problem. Nobody type nothing in until I do it. Now you can. One, two, three at the bottom. 1, 2, 3 at the top. So it's a snake. You recognize, now you recognize that we broke out of the snake. So you patiently wait, unless you want to scalp it, or you think you're going to add on. We're now at $4.40, the SPX. Welcome to the room, Spyro the Dragon. I'm going to go in there and start my lunch. Now it's on the 2-minute. I kind of like that time frame. It's a little more cleaner than the 1 minute. And it still gives me what I need to know. We got Ford tonight too. Did anybody watch my video yesterday? Say yes. It'll be peace. Okay, we've got the wedge breakout with 3 white soldiers. Pull back. So get ready for the boom. Target 381.66, the 200 EMA. Do you understand me? On Mr. I gotta go do a couple things. I need to get paper towels today, so I might eat and then run and get some towels.
Drive the market higher here. The other big thing that's been playing out is just the resilience in the economy. We had a really strong jobs report on Friday, and the corporate earnings have been coming in very strong.
Very strong.
Just a very good setup from what was a pretty scary situation a few weeks ago. We're kind of walking back from that, and things are improving.
So what risk remains? So obviously things are improving because there is the expectation for some trade deals to be coming to fruition sooner rather than later. You know, we've heard about conversations with dozens of countries, but among those that are top of mind are, say, India, Japan, even Vietnam. How soon does something like this need to happen for this, regaining bullish momentum what reinforces that? Like, how soon do we need to see a trade deal?
Yeah, we think we need to start seeing trade deals in the coming weeks, months, the next 6 weeks, 2 months, that kind of thing. We need to start seeing, and we need to see continued progress along the way. So, these are things where the market's going to be taking its cues from these conversations and every press release that comes out. So we do need to be seeing progress as we work through the next few weeks, month, 6 weeks, that kind of thing. Or else we'll start to, we do expect the market to be volatile here because this is all about policy risk. And as we've seen, the policies, when they were announced, were more severe. The tariffs were more severe than expected. And then when we saw a 90-day delay, we saw a 10% rally in the S&P. So we do expect the market to be volatile around this. But to answer your question, yes, we need to see progress on this in the coming 3, 4, 5, 6 weeks.
Okay. And let me ask you this, speaking of policy on a different front, the Fed is meeting this week, and this comes at a time where there's all these calls from the White House to cut rates, right? At the same time, the Fed chair, Jerome Powell, has basically indicated that it seems that this is, that we'll continue to hear the theme that it's data dependent. You mentioned that jobs report that came in stronger than expected. Overall, there's been some economic data that's come in stronger than expected, despite that GDP report showing a contraction in the economy. The consensus view seems to be we're not going to get a rate cut this week. Do you share that view? One, do you think it's the right stance?
Yeah, we share that view, and we think it's the right stance. We do think that if the tariffs are implemented anywhere near where they're currently kind of has been announced, they will be inflationary, or at least a one-time adjustment in inflation. So we think they need to sit on hold, see how this plays out. We think there's plenty of strength in the economy, and we've got a little time before they need to start taking any action.
Okay, and then let me ask you this question. You see, your base case is you see rising earnings and stimulative government policies, and you see that as an impetus for leading the market higher. What sectors do you like best in that? And then I'm going to ask you a flip side question to that.
Yeah, we continue to we really invest around long-term themes, so we continue to like technology, and we feel that AI is a very powerful theme that will be with us for many, many years. We continue to like tech, whether you're looking at the AI infrastructure players or the AI to start fanning out into the software players who can start utilizing AI to actually help companies cut costs or boost revenues. We also like financials. Financials here to make a lot of sense. We'll see, but if we do get some deregulation, we feel that financials can win in many ways, whether it's smaller banks that are allowed to be acquired, or whether it's more M&A activity, IPOs, things like that.
And then, Tim, let me ask you this, because you point out that, some valuations are still not cheap. And then the policy uncertainty question, that is still on the table. It's still, somewhat heightened. You say you'll remain nimble, revise as conditions change. So where are you risk averse?
Yeah, well, the way we invest, we use a tactical strategy alongside our long-term equity strategies. Our tactical strategy right now is pretty defensively positioned. And that allows us on our equity side to continue to take risk, and we're pretty balanced in our equity portfolios right now, with lots of cyclical plays, technology, industrials, things like that, financials, as well as the defensive side as well. But the point is, we don't have to tilt our equity portfolios and be too defensive here, particularly with the nature of the policy which can come and go pretty quickly.
And then, Tim, I want to ask I'm curious your thoughts on NVIDIA. It's the last of the Mag 7. We don't get it until the end of May. Given that what we've seen from the Mag 7 this earnings season, what's your overall expectations for how we close things out? And I'm also curious if your final thought that you have on guidance. You point out maintaining guidance as the new beat this cycle. I'd love for you to elaborate on that a little bit, along with your thoughts on NVIDIA.
Yeah, we continue to like NVIDIA. This week is actually, this coming month here is actually going to be very interesting. There is a competing chip from Huawei that's going to be tested. So we're all kind of waiting on pins and needles to see how those tests go. But we continue to like NVIDIA. They're the leader in the space, and we feel that they have a dominant technology and that's going to be hard to erode their competitive advantage in a short period of time. We are watching the Huawei news, and we'll see how that goes. But we continue to like NVIDIA here. And then in terms of maintaining guidance being the new beat, that's been a
snake breakout pullback,
boom here in our firm. That there's not much clarity on how things are going to play out, and so
I think Apple's getting ready.
Their guidance, and the firms that feel as though they've got a path forward to either manage through the tariffs or feel as though the tariffs really won't impact them and they can maintain their guidance. There's been
SPX is pulling back to the 63.
The new beat here at Badgley Phelps.
Okay. All right. The new beat this earnings period here. Tim, thank you so much for your time today. Tim Thomas, Badgley and Phelps. NVIDIA shares right now under pressure, but they've had quite a recovery over the past month. Thank you again to Tim. Plenty more to come on Trading 360. Next up, it's the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the technicals, and Scott Bauer takes us through the trades. We've got TLT, the 20-year bond ETF, in Focus Trade Desk, and Honeywell. That is next on Trading 360 here on Schwab Network.
Oh my God. My throat is tickled. God. Go get, there it is right here. Worth $3. The 5690s.
He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing,
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. I'm Diane King Hall. Time now for the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts, and here to take us through the trades, we've got Scott Bauer, CEO Prosper Trading Academy. It is great to kick off the week with both of you. Scott, before we get into your trades, I'm curious to know your big picture take on the market action we're seeing today.
I think we all have to be very cautiously optimistic. Obviously, this rally back has been
cautiously optimistic.
9 days up in a row. Most it's been since November of 24. There's still a lot of issues out there, but if we can get through the tariff talk, which I know is a big ask. Right, and as you and your prior guests were just talking about, we need to see some deals. I actually think we need to see them sooner rather than later. Overall earnings have been pretty decent so far. So, I think that
They've been excellent. What are you talking about?
the market overall are not as bad, maybe as people think, but we have this tariff thing hanging over everyone's heads.
Scott, I think you make a great point because I know that our previous guest is a little more, I guess, open to a longer timeline. 6 weeks feels like a long time to get a deal.
Sure
That's obviously on the longer end of his timeline. But Scott, tell us about the first ticker on your list. You've got TLT on your radar. I know you've got a bullish eye on this one. What supports that view?
I do. So TLT is an ETF. It's the 20-year bond ETF, and it really correlates very closely to how the 10-year is moving, and it is trending down towards some major support. Obviously, this thing is going to move later this week and then in the coming weeks based on what the Fed says and or does this week. And nobody expects the Fed to cut rates this week, but any sort of guidance that they may give that, okay,
If anybody does, tell me about it.
3 potential cuts coming up here, I really believe can send the bond market into buy mode, which would be good for this ETF, which would send potentially rates lower. So I'm bullish in this TLT ETF, which means the trajectory for rates would be on the downswing. So I'm actually looking to buy a June expiration 88.92 call spread, pay about $1 to $1.10 for that.
All right, and then Rick, you're up. Take us through what you're paying attention to when it comes to the patterns in the chart.
200 EMA.
Well, 92 is a level that stuck out to me as well. If we were to look at our chart here, we can see 92, 82. That's the level where price
200
has
SMA.
large gap to the downside here. So gaps are often filled in trading. Certainly not saying it's going to happen, but this is a level probably many traders would have their eye on, that area near 92, 93. But to look at the broader picture, trending downward off of those highs, holding on to this double bottom area near 84, 89 so far here. But price has once again failed to take out this downward sloping trend line and is now drifting below its 2 shorter term moving averages. Once again, our yellow 21-day and orange 63-day exponential moving averages. We can see our RSI trending downward still, also RSI below that 50 midline here. So if we were to look at our other studies though, volume profile and standard deviation channels, we can see that the heavy volume is right around here at our volume profile point of control near 91. So once again, coming up to that 92 level, there's quite a bit going on there. But we can see now that we are slipping just slightly below another heavy volume area, relatively speaking here, near about 88. So this is another of these lower levels that many traders might have their eye on. Beyond that, we've got our double bottom that we held so far.
So we're at the,
-1
let's make a
deviation channel. So 85
comment
as well to the downside.
My name's Washboardjim. I became a man last night. It took me 64 years to get there. We're at 380 now. We have the 200 EMA. This is a fallen wedge. This is the 63 EMA. Oh, 410. Woo! Thank you. Thank you very much. From here on out, I just can't call it luck. I got to call it skill. Did anybody watch my video last night?
Affirmative.
Did anybody stick around for the whole hour?
Affirmative.
Oh, you did?
Affirmative.
Damn.
for you.
I'm going to go in and make my own little, call it a cheese chip with pepperoni, and then I'm going to have my salad. And then I might just go ahead and nuke up some beef stew that I have in the freezer.
Fascinating.
So I'm quite impressed with today's trading. I just can't stop winning.
It's all fake news. It's phony stuff. It didn't happen.
So I think this is due for a relaxation song. If I can try, but I think I'll wait. But that's called a falling wedge off the 63 into the 200 SMA. And that trade alone went from $3 to $4.10. So I spent $1,500 on the trade, got 5 contracts, and I sold them for $550. Fascinating. In approximately 1, 2, 3, 4, 5, 6 minutes. I make more money than Diddy's lawyer makes.
We choose truth over facts.
Danger, danger, Will Robinson.
So you get out at the 200, right?
Spread. The 210, 200 put spread, looking to pay about $2.75 or so. And the reason I'm giving this one a little bit more time than the other ones is just because it is hovering right at that 200 a little bit, that 200-day moving average.
Okay, and then Rick, take us through what the technicals look like on the chart for Honeywell.
Range-bound period here before we had our tariff news-related plunge. So this is that area near 205 or so to about 220. You can see that 220, that was where we had this gap downward. Price never quite made it up to even really test that level here. And I don't have the 200-day SMA. I do have the purple 252-day exponential moving average. Winds up being oftentimes fairly close here, but the general theme is the same. I'm not going to say they match up exactly, but we had sideways price movement centered around many common major moving averages here. So after our plunge to the downside, we've recovered to the upside. We've broken through this long-term channel. We've crossed above our moving averages once again, but we do still have this notable resistance area that is just overhead here. So volume profile point of control matches up with our sideways range here near about 211 prices. So far holding on above that area here. A break above 220 would be what the bulls would want to see on the road to this next heavy volume area near 228 or so. But to the downside, we could see that if we were to kind of break through all this supportive area, the lower end comes in near our 63-day EMA near about 208. And then the old highs here from this brief volatile period around 202, that could be another supportive area to keep an eye on.
Hey, Scott, I'm curious, what risk are you paying attention to this approach with Honeywell?
I think the risk that Rick just pointed out of breaking through that area of 220. I mean, if we were to get up there, I would take my losses. I would sell out my put spread. So that would be a continuation, and maybe.
Oh boy, here we go again.
Of some big tariff news, like some positive tariff news coming out, which personally I'm questioning a little bit here, and I do think that if we are going to get a big move one way or the other, the odds are it's to the downside here in Honeywell. But listen, if some positive tariff news comes out, we could see a pop to the upside. But that's why I do this with options, and that's why I do this completely risk defined.
Okay, risk-defined approach there. That's Scott Bauer, CEO of Prosper Trading Academy, with some picks on his list, TLT, the Trade Desk, and Honeywell. Thank you, Scott, and that's our very own Rick Duquette, lead market technician. Thank you both. Coming up next, marking the end of an era, we're going to spotlight Warren Buffett after the Oracle of Omaha announced he will be stepping down as CEO of Berkshire Hathaway after a 60-year run at the top. Trading 360 will be right back. Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Bam, there it is, man.
Welcome back to Trading 360. I'm Diane King, all live from the floor of the New York Stock Exchange. Time now to spotlight the Oracle of Omaha, Warren Buffett. The 94-year-old announced this weekend that he will be stepping down as CEO of Berkshire Hathaway at the end of the year. Joining us now for Insight is Christopher Davis, partner at Hudson Value Partners. Christopher, thank you so much for joining us today. I'm curious to know your thoughts. This was a surprise announcement this weekend. What was your initial thought when you heard the news?
He tucked it in right at the end there. It wasn't so much of a surprise that it would be Greg Abel, because that had been telegraphed certainly for several years now, but it was a surprise that he chose to make the announcement that day. I mean, he showed no indication that he was slowing down. His recall was great command of the facts. But I think it shows his just undying love and just doing the right thing for the Berkshire shareholder, and that it's time to get someone younger in there for continuity and to bring energy to it.
Yeah, I wonder if part of that was because obviously, his mental faculties are excellent. But I do wonder if, the loss of Charlie Munger and then the fact that he's 94 years old and, time is undefeated. So, I'm just curious to know your thoughts if you think that was part of the equation.
Oh, I think so. I think he knows that he's definitely not going to beat the actuarial tables for too much longer. Certainly will. Hope he lives another 10 years and continues to be a wonderful mentor and resource to Greg and the new generation of the Berkshire team. But he's a realist. He's a humble man. And I think he wants to do what's best for the Berkshire shareholder. And it was an absolutely breathtaking statement that he said he's keeping all of his Berkshire stock because he knows that Greg Abel is going to do an even better job than he did. It's not a personal decision he's making, an economic decision that it's in his best interest. He made a point in the meeting that stuck with me. He compared the Tim Cook, who was in the audience, and Steve Jobs. And in some ways, Greg Abel may be the Tim Cook here.
It's so interesting to hear that you mentioned that, because one of the other things that stood out to me was when he talked about how Tim Cook, essentially, Apple made him so much money, and we know he was a long-time holdout when it came to the tech sector. What's your thought on that comment?
Yeah.
I think he's very appreciative. I think Apple, it's not just a tech company; it's a very special tech company. It is the best of the best of the high end and a services and integrated ecosystem, and it fits all the criteria of a Berkshire business and the type of things they would want to own, especially in that seized candy tradition of buying a great business at a fair price. And I think it also shows Berkshire and Buffett's ability to adapt over time, how he sized that position and stepped in. He was buying Apple at all-time highs, and it was the absolute right thing to do.
It was.
And then, so we're looking at shares of Berkshire, Class B shares. They are down, and Class A shares down too, down a little more than 4%. But the expectation was that Greg Abel was essentially, that's not a surprise. It's
Greg Abel?
when that was the surprise. What do you think about the impact to investor confidence?
Who the hell is
right
that?
now? Do you think this is just a blip right now?
I think it's a blip. The shares had run up a little bit into the meeting, as they tend to do, because people get excited that there might be some sort of big announcement of a deal or something that comes out in the meeting, which wasn't the case this year. But it's been a wonderful port in the storm this year. Made a lot of money for our clients and our investors this year and for many years, and for all shareholders. I think of the faithful, so to speak, of that 40,000 in the room and countless on the live stream watching online, all of them are willing to give Greg and the new management team the benefit of the doubt. So I think this is just a little bit of profit taking. I mean, coming into the stock was up about 18% on the year.
And what do you know about Greg's leadership style, and if we think that we'll see, a continuation of the strategies of Warren Buffett?
I think every indication is that the culture, the strategy, the approach are going to remain the same. He's worked at Berkshire for over 25 years. The last, call it, 5 to 6 of it very closely with Warren Buffett. I mean, imagine having him as your down the hall business and investing mentor.
Today's lunch?
And I think Greg, talked about in the meeting what a wonderful teacher Warren is and how much he learned. And just from listening and being around him, I think he's been in a perfect position to be the sponge to soak up all that culture and insights. And he knows, just as Warren knows, that the biggest asset of Berkshire Hathaway is their reputation. And they're going to do everything to defend that, because that's what allows them to write the best and biggest insurance policies out there, do deals that no one else can do, and borrow at almost as cheap as the U.S. government.
And then let me ask you, I want to know, so Buffett is obviously staying on as chairman, and Abel is taking on the president and CEO role. How do you think that's going to affect, say, this overall corporate governance? Do you think it really is going to be Greg Abel who's leading, or is it going to be heavily influenced by Buffett?
Well, I think Warren said it himself at the end of the meeting that Greg's going to have the final say. I think it gets to a little bit more of a traditional separation between the chairman and CEO roles, which is good governance. I always viewed it as an exception to my rule of voting for an independent chairman, just because Warren's interests were so aligned given how much stock he owned, about 15% of the company. But I think it's going to be, Greg's going to have the final say, but he knows what to do. He knows the culture. He knows how to make deals, but he's going to bring a slightly younger person's energy to it, help adapt. And, there's a difference between managing the massive aircraft carrier of $1 trillion company versus the small New England textile mill that Warren started with.
And you say that Berkshire is a cornerstone holding across your strategies and portfolio. So do you still hold that view?
Yes, absolutely. We definitely are not changed by having Greg in. We knew he was coming. We're excited for all that they can do, and we remain committed long-term shareholders.
It sounds like it was fun to be in the room, especially for a milestone moment like that. Christopher, thank you for your time. That's Christopher Davis, partner, Hudson Value Partners. We appreciate your insight on Berkshire and the end of an era over at Berkshire Hathaway. Coming up next, the Disruptors. George Silas joins us to take a look at CrowdStrike after a big price target hike at Citizens JP. We see the stock creeping back towards all-time highs. It's up over 25% this year. George will take us through the call and give us an example.
Looks to me like we're setting up again. I'm getting that feeling. There it is. Prepare ye in the name of the Lord. Let's see if we can hold this here support level. Clear. I miss Mike, man. I hate it when I see a good trader leave for no reason, without an excuse.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Trading 360. I'm Dan King Hall live from the New York Stock Exchange. We've got our eye on the streamers for a look at developing stories this morning. I want to bring in Caroline Woods, senior markets correspondent. All right, streamers under pressure. Looks like this has to do with, obviously, with tariffs coming. So catch people up on what's going on here.
Yes, entertainment stocks in general under pressure today. The latest target from President Trump's
I'm working on a building.
Over the weekend, President Trump posted on Truth Social that he was going to impose a 100% tariff on movies produced outside of the U.S. because other countries are offering all sorts of incentives to draw filmmakers and studios away from the United States. Obviously, we have seen that for, tax benefits and, different scenery for international locations. And obviously, some movies are filmed across multiple countries, even if some parts are here in the U.S., others might be international.
I'm going to run and get some paper towels.
President Trump says Hollywood and many other areas within the USA are being devastated. This is a concerted effort by other nations and therefore a national security threat, saying we want
Today at
movies
lunch.
made in America. Again, interestingly enough, we did see Commerce Secretary Howard Lutnick
There's a
respond
bounce.
to the Truth Social post.
$2 to $2.60.
We're on it. But what we don't know is if the tariffs will apply to movies on streaming services or those in theaters. Will they be calculated based on production or box office revenue? Also, some are pointing out that it's not as easy as...
So let me show you something here before I leave.
Good foreign films are actually
This was the previous high.
and part of a global trade of services for which the U.S. is actually
So I call this a pivot
net
point.
exporter versus the import.
I call this a pivot point. You had the triple top breakout. 1, 2 bits, 3B. Then you pull back to that triple top breakout. This was an ascending triangle. It's an ugly one, but it is one. With a triple top breakout. So that becomes a solid support. For this to remain bullish, it has to hold it. But from that candle right there to there, that's $60. I didn't take the trade because I was eating. But I watched it go from a little under $2 to $2.60. The bid, the ask, the bid. I got my little salad in, and I think I'm going to wait and eat lunch this afternoon, so I won't be putting a lot in my belly. I got to
Nothing for you. Danger, danger, Will Robinson.
lose a little bit of weight. Affirmative.
Affirmative.
So I will be back. I'm at SPX. I just put the wrong number in.
Head to 3 and trade with me, but count to 4 to make much more.
We'll leave the, well, my first spin, decline. Ain't got time for you today. There's 260 again.
Earnings growth, and the stock is actually trading extremely well on a relative basis compared to the S&P 500, but also compared to some of its major competitors like Palo Alto or even SentinelOne.
Okay, and George, so essentially this new price target would be a new all-time high. So how would you go about an example trade off the back of this move?
Well, just looking at the stock, it has tremendous momentum. Ideally speaking, in markets like this, which have recovered nicely in the last couple of weeks, particularly with the S&P higher by about 9 days straight, you want to participate in stocks that have relative strength compared to the markets, and this is certainly one of them. So what I'm going to do is I'm going to go to June, and I'm going to structure a bull call vertical. I'm going to buy the 450 call, then I'm going to sell the 470 call against it. So altogether, it would cost you about $9 a share or $900 a contract. So it's a bullish trade. Stock has to move higher, and it looks like potentially it could break out of the highs that it saw back in February because we're getting close to it. But your maximum loss is at $9. Your outlay, your break even is $4.59, and your maximum profit in this trade is $11, and that'll occur if you hit 470 or higher by expiration in 46 days. So it's a bullish trade, playing the continuation, but also again playing the momentum in this name, which is quite strong.
Okay, playing the momentum in this trade. What else do you have to watch out for within this? Is there any anything in terms of event risk that you have to watch out for this example trade?
Well, yeah, certainly. You have to consider the earnings, which are coming out at the end of the month, so that could certainly be a negative catalyst for the stock. So you have to keep in mind that, as you move into earnings, if this trade starts to move in your favor and it's profitable, you could certainly take, that position off and then wait until post-earnings reaction. But the momentum going into earnings right now seems to be quite positive. But what's nice about this trade is you know exactly what your risk is. It's $9 a share. And you know exactly what your reward is, which is $11. And so your risk to reward is certainly close to a 1-to-1 ratio, and that's what you want to see or structure when you're structuring a bull call vertical.
Okay, all right. And right now, shares of CrowdStrike up more than 2%. Thank you, George. That's an example trade for CrowdStrike. That's George Silla, Senior Markets Correspondent. Coming up next, time for our 360 round. Talk all things Palantir ahead of its earnings. Stock has jumped more than 60% so far this year. We'll find out what we can expect from the AI stocks. Quarterly report card. That's next on Trading 360.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Welcome back to Trading 360. Time now for our 360 round. We're taking a look at Palantir ahead of earnings. Those are due after the close today. For that, I want to bring in our panel. We've got Rob Luna, founder of the Lunatech Investor, and Shana Sisto, founder and CEO of Bonuan Capital Management. Thank you both so much for joining us today. Shana, I want to start out with you. These are the consensus views for expectations. Adjusted EPS expected to come in at 13 cents a share for Palantir. Revenues expected to top $862 million. Does your view on it line up with those expectations?
I can't say I necessarily have a view, and also I want to say hi to Rob. I haven't seen him in a while. I can't say it necessarily lines up with that. I would expect that based on its competitors' earnings, that it will probably surprise on the upside, which is what we've seen many of its competitors do that have already reported. What they're doing in the AI space in terms of implementing AI in major government war fighting, things of that nature. The contract they just signed with NATO shows that they have very sticky revenue. But I'm much more interested in what the executives have to say in terms of their forward outlook, because that is where I'm going to get a little more color on how the slowing economy, how the scrutiny on government spending and things of that nature are affecting their outlook. Because what we're going to get today is what happened in the past.
Yeah, I mean, that makes sense. And obviously, especially this earnings period, not that guidance matters every cycle, but, you know, particular this cycle, because if you can guide in a murky environment, that's very important. Rob, I'm curious to know what your expectation is for today.
Well, I mean, look, they've got a track record of beating earnings. I don't think this quarter is going to be any different, especially when you take a look at what's going on with Doge. They're lifting some of these departments completely out of the government. We all know the reason Palantir is in the position they've had is they had those early government contracts, which allowed them to fund R&D, get way ahead of their competitors, build this moat, and it's just really kind of the perfect storm for them to get more government contracts. The private sector is looking to get more efficient, leaner. They're looking to make more use of the data that they have, and Palantir's created this ontology network for them to go out and execute. So when you look at it, you were just talking about CrowdStrike prior to this. There's not very many companies that are positioned better for this type of environment than we're seeing right now from Palantir. The question is, though, to Shana's point, where do we go from here? What does the future look like? Because this stock has had a huge run year to date. It's defied all odds, so I think the expectations are going to be pretty high. You know, if I was looking at this right now and I didn't have a position, I'd be hoping for a pullback, because I think the future looks, you know, a lot brighter. But relative strength, the stock looks very overbought. So in my view, they're going to have to come out and say something really positive to get the stock much higher.
No, listen, Rob makes a great point, Shayna, and I think you're especially like alluding to this. I mean, the stock is up more than 60% year to date. On a year-over-year basis, up nearly 400%. It's grown in market cap to, what is it, nearly 300 billion now. Like, what justifies it going higher from here? They do have, obviously, the strong government foothold, and there's questions about, are the changes happening within Doge beneficial to Palantir, or will it hurt Palantir? What are you expecting to hear on that front, especially what relates to its government business?
I think that overall, this is an area that the government is very much focused on and being a leader in. So I don't think Doge is affecting it that much right now, but I do agree with the fact that the government contracts have given them the moat, but the future growth of the company lies in the commercial business. They really need to find ways to translate the government contracts and the government success into the commercial markets. Now, the good news is companies are spending money. The one thing they are willing to spend money in an uncertain economic environment is AI. And more companies have to prove that they can monetize any AI solutions they're putting into the market. So the commercial market is really ripe for the types of products and solutions that Palantir offers. But we really want to see that be an area of focus and an area of growth, because if the stock is going to go higher, the thing that's going to justify that is going to be the commercial drivers to their earnings.
That makes sense, Shayna. And we have seen like the growth trajectory be faster with commercial, although in the past, government has accounted for a larger, to Shayna's point, the moat when it comes to Palantir. Rob, what are you expecting on the commercial front really quickly? Final thought.
Yeah, to Shayna's point, that's exactly where the growth has to be. And I think one of the other things is, on the commercial side, are they just these one-off projects that Palantir is getting this huge front-ended revenue for? Are these going to be ongoing, continual projects? So not only are we going to look at the transition into some of these commercial products, but what's the sustainability long-term? Because as you know, that's what the market's looking at. Is this one-off revenue, or is this something we can count on going forward and increasing from there?
That's a good question. Right now, shares of Palantir actually fighting back under slight pressure right now ahead of earnings after the bell today. Thanks to both of our panelists today. We've got Shayna Sissel, Bonran Capital Management, and Rob Luna, CEO of Luna Venture Partners. Thank you both. You've got mixed averages right now. S&P 500 still in danger of snapping that 9-session winning streak. Thank you for joining us on Trading 360. You still got the Dow higher. Download the free Schwab Network app. It is available in the Apple App Store, and tune in 24/7 on SchwabNetwork.com. But stay with us. We've got Fast Market with Kevin Hinks and Tom White up next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me. And my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Good afternoon, traders, and welcome to Fast Market here on the Schwab Network. I'm Tom White. We've got a great lineup for you today. We're going to discuss markets. First down day in 10 for the S&P 500 if it holds here, and then we'll have some option strategies. We're going to cover earnings. Palantir up over 60% so far this year. They report earnings after the close, and Datadog, which is down nearly 40% from its recent highs into their quarterly report. And then Likefolio has sentiment data in Celsius. The beverage stock is down about 55% over the last 12 months into earnings tomorrow morning. Now let's take a look at those major indices, which are far off of session lows, but still in the red. The S&P 500 down 0.3%. Dow now popping into the green, up 60 points, or just over 0.1%. NASDAQ 100 off nearly 0.5%. In the Russell 2000, the small caps down over 0.2%. To help me break down all this market action, let's bring in my co-host. That's Kevin Hinks. Kevin, give me your take here. Pretty good run for equities over the last couple of weeks, but a little bit of weakness, and not surprising, and probably warranted at this point.
Well, after a 9-day rally and a soft opening, you're seeing markets, Tom, very similar to what we saw early last week, which was down opening, strengthening during the day, finishing higher on the day. You've already got the Dow positive. I don't think anything from last week's gauntlet has changed into this week's gauntlet, Tom. I think we still have a lot of data, not as much as last week, not as high profile as last week. We got a lot of earnings, not as high profile as last week. We got a couple good names to chew on this week, but not as big as last week. But this is still a market firing off of headlines. And Scott Besson speaking this morning in California at the Milken Global Conference. He's making some headlines there. There's more headlines. You just got to be watching these markets for headlines as we sift through some second-tier data, not top-tier data this week, Tom, and some earnings of Disney and Uber and AMD and Palantir after the bell. I think will be a big one that we're going to talk about. So good solid week of earnings, solid week of data, lots of headlines, very similar to last week. Last week was on a scale of 1 to 10, a 12. I'd call this one about an 8, Tom.
Yeah, we'll see if we can hold these, bouncing off those lows. Commentary, optimism on a trade announcement. I think that's been driving markets also, along with earnings. But let's expand this conversation, bring in our next guest. It's going to be Joe Mazzola, head trading and derivatives strategist at Charles Schwab. Joe, I wanted to get your take here because I just feel like, 9 sessions of positivity in the equity markets. We're due for a little bit of a pullback, even though we've got no further clarity on any of these potential deals that I think the market's kind of hanging their head on at this point.
Yeah, it seems like those are priced in. When you're looking at kind of the action that we've seen basically since the April 7th bottom that we put in. It's been pretty powerful, but it hasn't been spread across a lot of stocks. I think that's something to kind of key in on. Look, we hit low points not only that pushed us back a couple of years worth in 2024 in the S&P 500 with that print, but at the same time we were also looking at breadth that had pushed us into 20% of stocks above their 15 200-day moving averages. These are kind of what you call those flush out capitulation type days, right? A couple other things I've been kind of paying attention to, what's been happening over the last couple of weeks is you rewind back to those same days, you're looking at not only selling in equities, but you saw selling in fixed income, you saw selling across the board. Those are days when margin calls come in. Those are the days when you see that capitulation. I'll use that word again because I think it signals what you saw back then. And it gave a really nice bottom and a really nice bounce to the market. But I think what everybody's asking now is, look, does this rally have legs? And that will be the question that needs to be answered. We got a nice little boost last week from the tech stocks, which absolutely had to come in, at least in line or better, give decent guidance to kind of keep the market moving. They did that. You saw a nice follow through with Microsoft, a nice follow through with Meta. Even Apple, which pulled back, has pulled back the last couple of days, wasn't enough to kind of overcome some of the strength we saw from some of those other names. But I think, this week we got the ISM services this morning. We'll get the Fed announcement on Wednesday. Probably going to be a nothing burger, but what you're really paying attention to is maybe some of the commentary that comes out of that. Still want to keep an eye on claims. So jobless claims came in a little bit better, but it's the continuing claims that I think, from a macro environment, we need to keep an eye on those because at some point, the Fed right now is kind of sitting in I don't want to say pole position, but at least they're sitting in a position where they don't have to move right now because the job market's holding strong, at least in the near term. If those continuing claims numbers start to continue to tick back up, you start to see unemployment start to tick back up, that might be something that would force the Fed to move. But as of right now, I think they're probably just going to sit and stay back.
Yeah, I've kind of been, harping on that also, that, you have to start wondering the outcome from these tariffs. A lot of the CEOs are starting to say that, hey, we don't know the full impact from them, and they're probably not going to show up until the end of May, early June into July. But Kevin, Joe mentioned that ISM services number better than expected, but prices paid continue to move higher. New orders were pretty good, but this also provided a little bit of lift today.
Yeah, I think that, the data all along has been fairly firm. Now, both numbers stayed above 50, right? So, which means that expansion level, that key 50 level in terms of PMI and ISMs, Tom. But listen, tariffs will dominate a conversation when it comes to higher prices and prices paid. And that leads directly to a discussion on inflation. I'll give you the other side of the inflation discussion, Tom. April 1st, crude oil was trading what? $71. Tom, it's 20% lower than it was. That basically takes the inflation discussion and wipes it out because energy prices that led us higher in terms of inflation when we had the war in Ukraine start and COVID and all the different problems and OPEC cuts that are now reversed. 20% crude oil is lower since April 1st. That's going to show up in inflation data, Tom, and it's going to crater the inflation data. And that, in turn, should give Jerome Powell what he needs to start reducing rates so as the Fed funds rate doesn't become too restrictive, Tom.
Yeah, I don't know, Joe. Are yields too restrictive at this point? You got the 10-year at 4.35 or so. It doesn't feel like they're restrictive compared to what we've had recently. A lot of people are predicting that rates are going to go higher. But to Kevin's point, crude oil coming down, that's a big component within inflationary data. But at the same time, this might be a slowing economy type of situation where OPEC Plus is hiking production, but then at the same time, if everybody's right about the economy kind of pulling back here a little bit, where the consumer's not, doing the things that they were 6 months ago, that's also going to impact inflationary pressures, and maybe we're not going to get any, hike in inflation.
So a couple things. Clearly, Kevin doesn't live in the Bay Area where gas prices haven't come down in years. So yeah, we are not benefiting from that. But a couple other things about crude. Remember, now they're starting to kind of switch the blend into the summer blend, the more ecologically conscious blend, if you will. So that keeps prices up a little bit. And in all honesty, Saudi Arabia is adding crude oil to the market because they're trying to squeeze out the other countries that are cheating by oversupply. So Saudi Arabia can still continue to make money at $25 a barrel. Maybe the rest of the countries can't, but they have the ability to do so. So I think that's something to keep in mind. But yes, as Kevin does mention, that will hit the headline CPI data. And now if you strip that out for core, maybe not as much, but just something to be mindful of. What's interesting about the 10-year yield right now is it seems to be a bit range bound. We got close to like the 4.1 print, even closer to 4. And then on the high end, around 4.5. So to me, it's not necessarily the headline number itself; it's the range, right? If we can just kind of see some stability in that, then I think the fixed income market can find stability, which in turn can lead to equity market stability. I think that there's a relationship, a push and pull between the two. When you see bonds moving all over the place, that's kind of that tends to spooked the equities market a little bit. It also kind of spooked the White House, right? Once you saw rates start to ramp back up very quickly, that's when you saw the announcement of the 90-day trade pause, if you will. So these are some of the things where investors have to be very mindful of the news flow that's going on right now because it's moving markets.
Yeah, and Besson, he's always pounding the table. He wants lower rates, and they haven't moved. And I think that volatility that we've seen in the bond market and the yield market kind of dissipating a little bit, lending some support here to equities. But Kevin, I saw some comments from Jan Hatzius out of Goldman Sachs. They expect 3 cuts this year. A lot of people aren't expecting any cuts. If the economy can keep humming along, earnings have been good so far. And some of the hard data is still pretty robust. Joe mentioned those jobless claims on the continuing claims. Those are 1.9 million. That's the highest in I think over 40 months or something like that. But I mean, when you start looking at it that way, and there's no rate cut expected this week or in June at this point, those keep going down. But July seems to be when people are expecting rates to start coming down.
Well, it's interesting. We May was never on the table, but June has been on the table and has drifted a bit lower. Why? Probably because of Chairman Powell's comments that he's going to wait, and then some of the comments he made of all places at the Economic Club of Chicago. Now, what does he say Wednesday is key, because one thing he can't argue with is the fact that the inflation data, the hard inflation data, being wages, CPI, PPI, and PCE, have all shown improvements in the fight on inflation. So those numbers are giving him that. The U.S. economy is still strong. No one can argue that. The numbers are still coming in. Jobs are better. Unemployment staying at 4.2%. That's not the reason. But inflation coming down is the reason that he can ease rates out. I'm not talking about taking a machete, but he can do what do they call it, a maintenance cut in rates, because you don't want, I don't think the 10-year yield is restrictive, but the Fed funds rate might be restrictive if you leave it there as inflation continues to come down. So I think he's got a little more of a picture, though it's not going to happen this week. What I would hope, if you're trading these markets, what you would hope is he goes to this press conference and guides towards a June that would then turn around that percentage that has been, you're right, it's been sinking into the, last time I looked it was in the 40s, which is, less than 50-50. So it went from much higher to less. So we'll see what happens. I think a lot of it has to do with Wednesday. Remember, I don't think we've heard from Jerome Powell since that Economic Club of Chicago took the Dow down 1,000 points.
Right. The expectations for a June cut were 40% on Friday, now down to below 30% according to CME FedWatch tool. But Joe, the big, the big news this morning was over the weekend. Warren Buffett's going to step down at the end of the year. Not surprising. He's 94 years old. Give him a break. Yeah, give him a break. Let him go off into the sunset eating his Dairy Queen. I mean, what was your takeaway from that? I mean, everybody follows, the Oracle of Omaha. And, he's been at the top of that company for 60 years.
Incredible man with an incredible portfolio and in terms of his returns and in terms of he's also an incredible educator. I think that's important to remember as well, too. When you read his reports, it's not just here's what happened in the portfolio. It's an explanation. It's a look at the economy. It really is the event of the quarter for many of the Berkshire Hathaway stockholders, and it's just something to be mindful of. It's something we'll miss. The succession plan is in place, so we understand where that's going. But yeah, I mean, it's as a person who's kind of grown up in that style, in kind of looking for value. I mean, this is the person that derived a lot of the kind of the valuation and the value studies that we look at in terms of kind of how he has built his portfolios. I've learned the concept of selling puts, by looking at what Warren Buffett does in portfolio. So it'll be sad to see him go, but yes, he has clearly earned every single minute of his retirement that he will have, and best wishes to him.
Yeah, Kevin, that was a funny thing because I remember reading over and over again, latter stages in Buffett's career, he was calling options, something, not positive, but he used options all the time. I remember I was in the S&P 500, the SPX down at the SIBO, and there'd be these big orders, and he was selling puts to the downside. He was used in the option market quite a bit.
Yeah, I'll give you two of my favorite Warren Buffett quotes, and they're very applicable to today's market. And the first one is, be greedy when people are scared, and be scared when people are greedy. That's one of my favorites. But the other one is, the stock market is a device for transferring money from the impatient to the patient. And there sums up what we've seen in the last couple months here, Tom. I think, listen, and the other my favorite Warren Buffett story, during the financial crisis, when the banks were in trouble and Warren Buffett had offers out to several banks to loan them money, he was on the phone and he said, I'm taking my grandchildren to Dairy Queen. Let me know what you think about some of his offers. Yeah. So that is a man patient when times were rough. So, yeah, I'm a big fan. He does it the right way, always has, frankly.
Yeah, and he's got that huge, massive cash position, nearly $350 billion. That's a record for Berkshire Hathaway on the sidelines after selling a lot of Bank of America and Apple shares. They sold half of their Apple shares at this point. All right, guys, let's take a quick break. We come back, we're going to take a look at the stock of the year so far. That's Palantir. The AI analytics stock's up over 63% this year. They report earnings after the close. Stick around.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Fast Market here on the Schwab Network. We're talking earnings today. We're going to kick it off here with Palantir. Joe or Kevin, I'll go to you first here on Palantir. The stock's up over 480% over the last 12 months, up 64% this year. This has been the big winner here in the S&P 500, and expectations really high.
Yeah, Tom, you know, the more you read about this company, the more impressive it becomes to you. That is, I think, what I learned. I learned a new term today. A digital twin is basically what they do. They replicate your company and your systems digitally, and then they figure out how to improve that, right? And they were doing that. Here's I think what really was the game changer. They started out by doing that for single companies. But now they're creating a network where these digital twins are all talking to each other and interacting and making their process even better. And when you think about it, it's kind of mind-blowing when you see the service that they can do for companies by replicating these systems, comparing them to other systems, and finding the most efficient way to do business. When you take that from the government, which is where they started, to now small and medium-sized businesses, kaboom, Tom, you're talking about incredible returns. And that's why when you see this stock doing what it's done, that's why it's done that, Tom. The more you read, the more impressive it becomes.
Yeah, and their growth rates have been growing, Joe. Expectations for this quarter, nearly 36% on this. And Kevin made a good point. You know, this was a heavily, involved in defense contracting. Now it's just above 50% of their revenue. CEO Alex Carr, pretty secretive about the things that they do, but everybody's talking about, hey, the forward-looking PE is really expensive, but they keep growing at a pretty spectacular rate. That has thrown maybe some of the bears in this stock out the window, right?
So you were talking about year to date, it's up 65%, and then basically up 480% in the last couple of years. How about this? Here's a stat for you guys. It's up 90% since April 7th. I mean, that is a huge, huge move. Right back to the highs that we saw in February. I think, maybe the difference this time is that, expectations, for a beat of about, I think 13 cents on the EPS is what they're pricing in, at about 862 million in revenue. That would be a 60% earnings per share year-over-year jump from what we saw last year. So it's priced for perfection, and I think that's what it comes down to. If you look at what the straddle price is pricing, it's pricing in about a $16, $17 move. So it's a lot of volatility in a 1 week move on a $124 stock. So in essence, when you're looking at trading something like this, the market's telling you they're expecting a big move, and it makes sense, right? One of the things that, if we want to talk about kind of the overall market as a whole, one thing I found very interesting when you were looking at, the April data is implied volatility relative to, actual realized volatility. Well, implied volatility on the market as a whole was around, right now it's around, 21, 22. That's kind of what you see in the VIX, that's forward expectation. But the realized volatility is about 45%. So, if you take that and kind of look at Palantir and you're saying, well, implied volatility is expecting, about a $16, $17 move, why would it expect such a high move? Well, because the stock rallied 90% from its bottom. Yeah. So, I mean, it's it's priced for a big move because it's had a big move. So now what you need to think about as a trader is that big move, is it right? Is it priced correctly? Is it going to be the upside or the downside? So how much of that is already priced in? I think that's what you kind of have to figure out when you're looking at this.
Yeah, and I think, everybody that's really bullish on this name, it's because of their growth rate, the monetization of their AIP platform at this point, and it's not going to be cyclical, maybe like NVIDIA in the AI space, where we're probably going to have competition coming in, prices going down. This is, a platform and an analytics firm that might continue to grow, right, at this point. So I think that's what a lot of the bullish sentiment is on this company. But Joe, you got an example trade with the RSI about 72, so it's overbought on a technical level, but that doesn't matter sometimes.
No, it doesn't, and I would have loved to have kind of seen it kind of roll back down. That's kind of what I was looking at this morning when it got back down to 69. It's not the overbought that I pay attention to. I pay a little bit more attention to, once it is overbought, moving back down into that range below 70. So we're kind of, we're vacillating right around that level right now. I'm actually selling an upside call spread, believe it or not, even kind of given the bullish sentiment that we've seen. Here's a couple of reasons why. Number one, the implied volatility percentile rank is still around 63, 64, which is actually kind of low heading into an earnings, but it still is enough to make the case for selling volatility as opposed to maybe buying volatility through time spreads. What's interesting about Palantir right now relative to maybe the last couple earnings cycles, and I thought that this was something that I definitely wanted to call out, is the puts are more bid than the calls. That hasn't been the case, for too many of the last earnings cycles. Traditionally, what you've kind of seen with this stock is people have been bidding up the calls. That's not the same right now. Right now, you're seeing a little bit more of a bid on the put side. That's why selling calls, you're not collecting as much as maybe you had the last couple of earnings cycles. But we're still looking at a call spread in this example. So we're looking at the expiring this week, the May 9th, 135, 140 call vertical. I think I showed you guys a price of around 120 at the time that I sent it to your way. You can probably get about $1.30 now as the stocks continue to rally. But that's in essence what this is. You can make that credit, that $120, for every one that you do, but you're going to have about $380 at risk. That's the spread between the two strikes minus the credit that you collect. Your break even, if you collect a $1.20, is going to be up around 136.20 or so. Now, the trade-off is this: when you're looking at about a $16 straddle, kind of given where we're at right now, that is kind of pricing in a move beyond this. So if you believe that $16 straddle is priced correctly, then you might want to adjust those strikes upward or to a higher level. The reason, like I said, I shifted this down to the 135, 140 is because of the 90% rally that we've already had off the April 7th low. I mean, my thought is that, or I guess my hypothesis, if you will, is that how much of the expectations for the move have already been priced into the stock. So that's what you as a trader kind of need to figure out, if you think that that's already been priced in. If you don't, then you might want to either adjust that up or look for a different type of trade. But just something to be mindful of when you're looking at this trade.
All right, yeah, let's break this one down. Stock trading just under 125. May 9th, weekly options expire in just 4 days. Really short-term positioning on this example trade. Sell the 135 call, buy the 140 call, short neutral to bearish. Call vertical, collecting roughly. We've got $1.20 on there. That's what you can make on $120 with $380 in risk. Trading closer to 135, so you might get a little bit more. The stock has moved up with the overall market. But Kevin, when you look at a trade like this, you start talking about probabilities of success on these trades where, yeah, this is just at the, a little bit within that one standard deviation move, that plus or minus $16 move. The option market's pricing in for tomorrow, right, at this point. But you still got a decent probability of success on that short 135 call.
Yeah, there's a lot of things going on here with this trade. Number one, the expected move for the day is $15.80. For the week, $17.90. You're only about $10 above the market in terms of your short strike, but it's a 70% probability of finishing out of the money. So it's a high probability spread that you're doing. Now, Joe mentioned if you want to move it to the 140, 145 or something like that, remember, all these are new highs. So that's why maybe Joe was being a little aggressive with his short strike, because it's got to grind up to a new high to get up to that level, and that's going to have to be some spectacular earnings in a stock that has run as far as it has. Can it? Oh, I don't know about that. Yeah, of course it can, but there's a 70% probability that it won't with where the vol sits right now.
Yeah, as you said, the bar is extremely high in this one. You better hit every metric, beat on EPS, maybe on revenue, guide a little bit higher. Maybe the whisper numbers are even higher than what the guided numbers are at this point. But good look at the short call vertical there in Palantir going into earnings. High volatility thanks to Joe Mazzola, head trading and derivative strategist at Charles Schwab, joining us from the NYSE. But coming up after the break, we're going to be joined by Andy Swan from Likefolio for a look at sentiment data in Celsius Holdings. The beverage maker stock has been hammered over the last 12 months. It was a big winner in 2023, 2024, early stages of that year. But we're talking Celsius when we come back.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in our next guest. It's going to be Andy Swan, co-founder of Likefolio. Welcome back to the show, Andy.
Yes, thank you for having me.
All right, so the previous high flyer of Celsius Holdings, you guys were spot on. I remember talking about this stock in 2022, 2023. It's just fallen off a cliff, down over 50% from year-ago levels. What's going on with this company? Do you guys still have decent data on this one, or is it starting to fail also?
Yeah, I would say it did fail, but now we're seeing a really strong resurgence in Celsius. If we, really, I think the data kind of speaks for itself on this one. If we look at the web visits versus stock price for Celsius brands, you can see on the blue line, really looking at the 90-day moving average, we're seeing an explosion in consumer interest in what Celsius is putting out there. Something that we haven't seen in terms of increasing demand for quite some time, and it's really happened over the last 2 or 3 months. So we think that the company will have reason to be pretty optimistic about what's going on with the consumer, maybe got their footing back a little bit as the stock has recovered as well. But the main thing I think that's going to be the story here is, Celsius's acquisition of Louisville's own Alani new company. The Alani drinks are extremely popular energy drinks, especially with a very key demographic, and that's women and young teenagers, female. They've got that market pretty much locked up. If you look at their marketing, their follower base is about 92% young women, and so this brand is in exactly the right spot. They're targeting essentially a demographic that the energy drinks tend to have overlooked. If you think about Rockstar and Red Bull and Monster Energy, they've really gone after men and young men and kind of extreme sports enthusiasts and kind of left the ladies out to pasture, where Celsius, through its health conscious approach, and Alani through its zero sugar approach, has really kind of embraced that female demographic in a really compelling way that is resonating with consumers, and we think will resonate with investors as well very soon, because these two together makes up a pretty nice powerhouse to go to the distribution centers with and to get that coveted shelf space. So we're starting to get bullish again on Celsius here.
Celsius and Alani Nu, they're basically 15.4% of the market. That's a big.
I noticed a new high about 3 minutes ago.
Relatively new companies, and so that is also added to what's adding to their growth right now, which is international. So that's helping them. There's a lot of reasons to be excited about this company, but I mean, the focus with Alani Nu and women and wellness and fitness and that energy, this has got a whole different tone to it. It feels like a Facebook and Instagram kind of a purchase where they really added to the company by making this purchase.
Yeah, I think that's a really great analogy. I think that, Alani is kind of under the radar player, privately held, now doing, I think, over $1 billion in sales. And like you said, they're picking up that market share really quickly, and we can see that in our data. We can see that they're outperforming all of the peers in terms of consumer adoption. And I think that they've got a nice tailwind from these, GLP fat loss, weight loss drugs that this type of product fits exactly into that lifestyle, which is a very growing, very popular lifestyle. So I really think that Celsius and Alani as a combined entity is in kind of the right place at the right time once again, after having, lost their footing clearly in 23 and especially 2024. So I think 2025 is looking right from a consumer adoption perspective of this company's brands, and we think Wall Street will be following suit.
Yeah, they announced that last February, their last earnings event, the acquisition of Alani Nu for $1.65 billion net of everything else. So maybe that's the lift here, Andy. But when you look at this and just your data, are there any changing habits within the space where, it was really hot for years, now there's too many brands out there? I mean, are you still seeing adoption from, people that are still going to these products, or is that starting to wane as a whole just due to maybe competition or changing habits?
Yeah, I think the biggest challenge is that, there was a period of time there, let's say 2020 through 2023, where the energy drink shelf space as a whole was growing. And now I think we've kind of reached that saturation point, because in every gas station, every supermarket, etc., there's only so much space on the shelf. And energy drinks have taken an enormous portion of that away from typical soda drinks and waters, etc. So we feel like that's probably reached a saturation point, and now it really is a very bloody battle for who's going to control what that now confined shelf space is. And so we like where Celsius is, we like where Alani is in this battle, but the days of ever expanding distribution opportunities are probably behind this industry, and now it is kind of one of those classic who's going to win type of stories rather than a rising tide lifting all boats.
What's your earnings score going into this one? Because the stock is actually up 30% so far this year, but it was trading $21 just a few months ago. What's your earnings score on this one?
Yeah, our data shows that this balance is very
Hello.
justified. We think that there's more than every reason for the company to be positive with their outlook with these two brands combined. So we have a positive score on this. We'd want to be risk defined. We'll leave that up to you guys because there is, like you said, there's been a bounce. We'll see if it can hold, but we think it will, and we think that the stock has plenty of room higher.
All right, great stuff. Great data as always, Andy. Appreciate it.
Thank you.
All right, that's Andy Swan, co-founder at Likefolio, breaking down Celsius. I mean, I remember, Kevin, when we were talking to those guys in 2022, 2023, they were, they caught that rally up to nearly $100 a share at the beginning of March in 2024 at this point, but it's been a falling knife since then. But making some inroads, I got some positive data. How do you want to look at this one from an example trade?
Well, Tom, I want to pivot off Likefolio's data and do something in the call diagonal space. I want to do short term. So I looked at just the 1 week, the May 16th, buying the 34 call, kind of the at the money call here, and then looking at the expected move, $3.70. I'm going to sell the 37 call. So let me get it up here. Yeah, the 34, buying the May 16th, 34 call, selling this week, May 9th, 37 call. In line with that expected move, Tom. Now, can you do the 38? Yeah, you can. But in this case, you're spending about $1.35 for a $3 call diagonal. The expected move, like I said, it's 378, not that big of a number, but that's 10%.
200 SMA, you dick.
$34, Tom.
Yep, let's break this one down. Really short-term positioning on this call diagonal. Only $3 wide on this one. By the May 16th, monthly options that expire in 11 days. The 34 call. Sell the 37 call in the May 9th. Weekly options that expire in 4 days. Paying roughly about $1.35 debit. Might be about a nickel more than that. But if you pay that $1.35 debit, you're paying less than half the width of this call diagonal. But you can see here from the risk profile, you want it to go at or near that 37 strike, but because you're paying less than the width of the call diagonal, anything above about the $35 level is going to be potential profitability on this. And you ask yourself, hey, why is this thing priced a lot less than the width of the $3 call diagonal? Well, you're buying about 105% implied volatility in that 34 call in the May 16th options on aggregate, and then selling about 147% in the near-term May 9th weekly 37 strike call that you're selling. Kevin, when you look at this, this is short-term positioning. If you expect the stock to rally, this is the type of strategy that takes advantage of it. And you don't need a monster move. You only need less than $1 to get above potential profitability for this type of trade, right?
Yeah, exactly right. The break even is about just under $33, Tom. So but why is that? Look at the premiums in that front expiration. If you sell the 33 call right now, or the 37 call right now, Tom, that's $1.15 roughly is mid-market. Think about that.
Think about it.
3 times the price of the stock. It's 3%. If you sell the 38 calls, it's almost it's about 90 cents, 88 or 90 cents. So big premiums in this front month really make that diagonal less expensive than it would be.
Yep, anticipated market maker move, option market price in about a $3.80 move either way in the shares. But setting up with the data that we got from Andy Swan there at Likefolio, bullish look at a call diagonal in there. You got your risk is the debit you pay, so $135 per spread on that if you pay that debit on that. You got some assignment risk on that short option going into expiration over the next 4 days. Also, keep that in mind. All right, let's take another quick break here. When we come back, we're going to take a look at another stock reports after tomorrow morning they report. That's data analytics firm Datadog.
So this is kind of neat.
About 25% this year into their.
Everything looks really pattern. Patterns are reflecting respect. So you have a fallen wedge on Mr. Breakout to the 63, pulls back, double bottom, triple bottom. So you have another flag right here. You got a squeeze. So you got the pattern, the snake, breakout, pull back into another flag, boom, to the 200. I mean, that's what I like to see on a good day. Oop. It's a wedge, and two wedges, not one but two. So two fallen wedges, one fallen wedge breakout, another fallen wedge breakout to the 200, and out of the trade. Well, they call that a double wedgie. Is that what they call it? Yeah.
Like Tesla down over 2%, Apple down over 2%, Amazon off 1%.
That's worth putting on.
Fractionally also. So some big names still in the red. We'll see if the S&P 500 can eke out a 10th straight day of gains. Not looking good so far, but it's getting better. All right, let's get into a discussion about our next stock.
How do you spell wedgie?
Earnings. And this is tomorrow morning. That's Datadog.
W-E-D.
Hammered off about 37% from
G
we saw in December.
I-E, right?
George Tillis, senior markets correspondent here. George, give me the lowdown.
There is such a word as a double wedge. There's not a double.
Going into results.
There's not such a word.
It is, and I was just looking at the chart on this. I mean, it was trading around $170 just going back to early December. So this is one that's fallen quite significantly, irrespective of the market sell-off that we've seen since February. So there's something else going on here with Datadog, and I think if you look at the underlying business, this is one company that I think is spending quite a bit more than anticipated. R&D expenses over the last year have actually increased. And in fact, if you look at the fiscal year 2025 earnings estimates, they've actually come down since last quarter from $1.77 to $1.70, but they are moving the earnings estimates higher for fiscal year 26 from $1.98 to $2.11. So it looks like there's some additional expenses that have been priced into the stock, with it still down year to date around 26%, but a meaningful decline since our early December. Now, if you look at their technology, this is certainly one to consider when it comes to small and medium-sized businesses. They actually deploy their observable technologies and data management technologies across about 30,000 small and medium-sized businesses, 150 countries. But they seem to have actually spent a little bit more money than perhaps anticipated previously to kind of keep up with some of the major competitors, which include companies like MongoDB and Elastic and V. If you actually consider the quarter they're about to report, they're expected to report a slight decrease to 42 cents. That's down about 4.5% compared to last year for the same quarter at 44 cents. But their sales estimates are actually expected to increase by 21% to 739 million from 611 million. So what we're seeing here is based on these numbers, based on the chart, based on the higher R&D expenses that I discovered, this might be priced into the EPS in this particular quarter. Stock is actually rebounding nicely alongside the market off of the early April lows, trading above the 50-period moving average. And like I said, the estimates for earnings seem to have actually been pulled back for 2025, but pushed forward into 2026. So for what it's worth, this will be an interesting play because this one could move pretty significantly because essentially the major pullback since December has already occurred, plus the estimates for this quarter report is already down relative to where they were last year.
Yeah, George, it looked like they had record bookings in the fourth quarter of $1 billion, but they guided weaker.
Yeah.
And that seemed to really hurt them on their earnings release. But this is a company that really, the adoption is multi-product. Here's the stats. 83% of their customers use 2 or more products. 50% use 4 or more, 12% use 8 or more products. So the retention is there. The products, people get in this system and they start using more and more products. But if that growth and that observability starts to waver, that growth starts to decelerate, like they basically guided to in your numbers represent, then there's the risk in this name, correct?
Well, there is, and that's the thing. The market environment's still, iffy. Obviously, we've had some really good trading in the last 2 weeks, or at least 9 or so trading days. The market's higher. This one has rebounded, but a lot of times you look at the stock. It started moving down prior to the market, so that's telling. There's something idiosyncratic or internal to the business going on. I don't think it's a bad thing, but if you just look at the sales growth, and this is the thing, they seem to be moving forward in terms of revenue retention, which is high, over 20%. Growth is expected to be, on a forward basis, 24%. I just think that
I didn't know they aligned the back end.
R&D expenses that may have been incurred in the last 2 quarters that were higher. With those guidance last quarter, EPS guidance lowered last quarter when they reported. Sales growth seems to be intact. So you have to have top line growth to make bottom line income. That's just the measure of income statements. So if they come out and demonstrate either a beat and some guidance, which is slightly higher, that'll push those earnings in the next 6 quarters higher, and it could be pretty meaningful for rebound. But it's too soon to tell. From the standpoint of the movement in the stock, it is trading above its 50-day moving average, but it really hasn't sort of retested and then resume back from a trend reversal standpoint to the upside. We see sort of a V-shaped bottom. A lot of times they'll come back and retest before they make a move, but it also could gap higher because of what we've seen in other stocks, like for instance Microsoft, which just gapped higher out of nowhere.
Yeah, and just this morning they acquired. They didn't give any details on how much they paid. EPO, a feature flagging experimentation platform to integrate into their current analytics platform. All right, great stuff as always. Appreciate it. That's George Tiller, Senior Markets Correspondent here, giving us the backdrop here on Datadog. Kev, I'm doing the Kevin special as an example here in this trade, or in this stock, Datadog, using one strategy to help finance the others, both kind of bullish in stance, but 4-legged spread here, Kev. I'm going to look at the May 9th weekly options. We're going to sell an out-of-the-money put vertical, sell the 100 put, buy the 95 strike put. That creates a credit. And then against that, we're going to buy the 1 week wide 115 call calendar. So buy the May 16th monthly options that expire in 11 days, the 115 call. Sell that same strike, the 115, and the May 9th weekly options. And as a package, you're going to collect a credit of about 60 cents. It's actually trading a little bit higher, above 80 cents right now. But if you collect that 60-cent credit, you can see here, you want it to
Looks
go
like we want to go to new
the
highs.
upside. Your break even is that 60-cent credit you collected minus the 100 strike that you sold in this strategy. So 98 or 99.60 or 99.40 is going to be your break.
I'm here.
Downside. You definitely want it to go up, but Kevin, this is one of those.
Anybody have a
strategies we
question?
talked about
Anybody
quite a bit
stuck in
where
a stock?
You're combining two different.
Anybody in the room has a question or stuck in a stock? Lunch lady's taking profit on Tesla. Guess what? We're going higher. We have, you see this right here? Does anybody know what this is? Does anybody out there? Does anybody know what that is right there? High volume on the 5700s. Sure enough. 52,000 contracts. Can anybody tell me what this is right here? It's resistance, that's correct. Can you count to 4? You might make a little bit more. Now if you can count to 5, let's not take a nosedive. So we have the 5690s at $3. I didn't take them, I should have. Okay. Always Clean Janitorial. May I help you? Retail traders, you are now live on YouTube. Is there a question about a chart that you may be interested in? Or can I date your mama? Well, they didn't want me dating their mama. But that was kind of rude. Well, there's the number right there I was looking for. Very good. What kind of car do you have again and the year? Okay, we're at 265. I'm keeping a close eye on these 5690s. We're coming down to the 200 here, and what is it? It's 1 minute till noon here in Springfield, Missouri. And if you went to the East Coast, it would be almost 1 o'clock. So these 5690s at 265, I didn't get them, but I should have. I kind of want to get them. Let me scratch my ear first. Oh, that's Mr. I'm looking at the SPX. You idiot. Now I have to reassess my trading strategy. We do have an ascending triangle, and we are starting to squeeze out of it. So we could pull back and hit this previous resistance, which is right around 5,66948. Okay? So I, as Washboard Jim, is going to take the trade off the yin yang off the 63. Now the 5690s are at 230, so watch this. Randy? Paging Randy. I miss having Randy in here. These are the SPX calls. And we're going to be scalping these son of a guns. And it's called a lotto. It means same day. And this is the month of May 5th. 5690s at $2.30. We can get it. I think we can get it a little bit cheaper, maybe. So, Nancy, quiet. Nancy gets a little bit tipsy and she kind of gets a little bit. Okay, here we go. Get ready. Get ready. $2.10. Now, right now. I made them at $2. And the crowd's going wild here at the sports arena. We got a yin yang. Anybody know how to spell that? Say yes. That's right, Joshua. You are 100% right. Ain't that right, Francesca? What Josh just said. She knows. She knows. I used to be a stand-up comedian. And that's a fact, Jack. Make new plans, Stan. Don't need no corduroys. Just listen to me. Get off the bus, Gus. We don't need to discuss much. Just set yourself free. VICTORY.
Are you so bored without me you're talking to yourself?
What's that?
Are you so bored without me you're talking to yourself?
Oh yeah, I do that, yes. Yes, I am. I'm a lonely man, but last night I became a man. I went to a conference.
I was gonna say I don't think I'm gonna ask a follow-up question there.
No, I went to a conference of an all-man conference, and the speaker was the preacher for the Kansas City Chiefs. So it was all about being a man. He more or less says a lot of people these days weren't men like we were when we were younger.
Yeah. I'm just freaking set myself to a way to go to lunch, and I saw this 3 and 9. I was like, let me get in this. Still hadn't touched my trend line that I got drawn, but
This is like a triple top, and we came back a couple times. So I'm thinking if we can come up the second time here, we'll break a triple top. This is almost like an ascending triangle, almost, but it is in a way. It is ascending triangle. If you take this trend line, if not, it's not going to hold. We're going to stop the left extension here, and we're going to put this a dotted line. That's an ascending triangle. Well, remove. I got 5 contracts, so I got $1,000 in this trade. I don't know if I want a hot chocolate or not. I think my papers went down a couple bucks a case. Come on. I need it to break. It's not complete yet. It's got to break that 200. Right now I'm up 165. I agree, we've had a ton of rain, but it's about 10 inches high right now. We'll see if they cut it in a day or two. Yep.
Below the 63 on the 1 minute on ES. The 2 minute could tap the 63.
You know, I've been studying the 2 minute today, but I should look at the 1 minute because I'm familiar with it real well.
Yeah, we lost the 63 on the 1 minute. That don't mean anything because
We're at a pivot point. Yeah, we're at a pivot point area, but we've tested it 1, 2, 3, 4. And we got higher lows right now, so we kind of got a little flag on the 1 minute. But that pivot point's the only thing, and then we got the 1, 2, 3. So I got like 3 confirmations on this trade. We should hold. We got the 1, 2, 3 going up, the low trend line. Then we got the pivot point, And then we've got well, we had higher lows. Just, you know, it's see, now we broke that, but we're still holding up, so we'll see.
Yeah, you haven't broke through the 21 on the 5 yet.
Or the 200 on the 1 minute. And they could easily drop down and hit the 200 SMA. So, I mean, it's an iffy trade right now.
I would definitely jump in it if it came down all the way to there.
To the 200?
Yeah.
Or to the top of the orb.
I mean, I've got Thursday's high on ES at 56.82, and that's where it bounced the last time. So if it hits the 200 SMA, you're only 4 points away from where I would absolute buy.
If it pulls back, you might not even hold the 200. It might pull back to this head and shoulders on top of the orb. On the SPX. God darn it, 165. Okay, what do I got to do here?
Yeah, you lost the 200 on the 2 minute. I mean, you lost the 63 on the 2 minute. So your next stop is going to be this 200 SMA on the 1 minute on the S.
Yeah, we've lost all the support, even the 3 minute. The 5 minutes got the 50 SMA.
Freaking buy more contracts. Get down there and touch that 200 right there.
I have garlic breath. Come on, baby.
Yeah, I usually don't get multiple contracts, but this one's looking like a pretty good little R size about to get hot.
After I get done here, I'm going to call Big Old Tire and see what they charge to do front and rear end alignment. It's still in. I should have grabbed some more of them at 150. That'd have been probably a good deal right there. Okay, well, we're at the 63 on the 5 minute. So we held the 5 minute on the 63. So we got a hammer. So it's tight. I mean, it's, well, now it's not. I thought we'd hold that. have to make a business decision soon. If I keep the hammer going here, I'm going to stay in it. This volume's real slow. Let me look at the SPY real fast here. VWAP. Yeah, I'm going to stay. What is that? What is this? Simple moving average. It don't look like my color. Oh, that's the EMA. Stay in it, Jim. Don't become a chicken. I think I paid $2 less for my case of paper towels. That's the first time I've ever seen a decrease. PLTR.
Price spent more time. Those are more of the speed bumps for the fast moving prices here. And we don't really have a lot to work with here. The biggest volume node.
No, we don't.
Yearly chart right around here near 84. So this is the heavy volume area, but we're far beyond it at this point here. So really, I mean, the best you could do in terms of using volume for some kind of supportive idea, maybe around 115 or so is where we saw the heaviest trading activity in the short term here. But in terms of the other indicators, those may be a little better for support in this case. We've got our yellow 21-day EMA right on top of our linear regression line, our line of best fit for the previous year. Those come together right at 105. So this confluence presents perhaps one area to consider. To the upside, our +1 standard deviation channel, one standard deviation to the upside from that linear regression line could be another boundary. 134.29 is where it comes in. So if we do start to get that upside push, maybe look for consolidation around there. Quick glance to it, a 5-year chart, just because it's so impressive. I just want to kind of show it here. I mean, we've seen very, very strong, fast growth here without really looking back too much here. Price above its weekly +3 standard deviation. So an extreme move in a short time.
And if you pop back to this, illustrates it as well. But the point I would make is sometimes, and I think that last chart really hones this point in, when you add more time, it gives you the picture, but it doesn't necessarily help these indicators. You're almost looking at two separate volume profiles here. You're looking from the 6 months at the beginning of the chart below, and then the 6 months most recently or so above here. And it's almost like this would probably be your point of control if you lopped out some of this area. So you keep things consistent, which we like, and it keeps things sort of normalized across these. But when a stock moves like this, you know, it was $20 here. It's $120 some now. It's really hard to compare those price points, but we really appreciate the technical setup in a stock with a lot of eyes on it when it gives us its earnings later on. So what I have for you is an example trade that leans into that excitement that this stock sometimes brings, which is volatility. And what we're looking at here is a double calendar spread, buying a call calendar, buying a put calendar, but doing so kind of outside the market maker moves here.
I don't have any moving averages on my linear.
2 minute on ES is completely irrelevant at this moment. I'm using the 1 and the 5 because they're the only ones with markers left.
It did finally break out, didn't it? Hey, we're gonna make me a hot chocolate. Better warm up that beef stew. I think I'll do that instead. I'm still in this trade. I got the /ES over here on my other screen. I got 4 monitors I'm looking at.
Yeah, it got way down hard. I think they're going to try to pull it to that 5682 level on ES. I really do. I don't think they're going to stop at 200. That was a huge seller week.
If it gets down to 120, I'll buy 10 of them.
Yeah.
Maybe. We ain't to the 200 yet, but it was a pretty good pivot point earlier.
Yeah, we're dancing right on it. We probably need another, what is that, 1.5?
Couple bucks. I actually should have probably added there at 130.45.
I'm just seeing a lot of hand fighting right now. $121 over 84.
It can drop. I mean, we could have a pretty good little drop. We got a megaphone here. And I'll put them in different color. Let's see if I can find some kind of crazy color to use. Yeah, these things ain't powering up like they should. Caroline, help me, I'm in trouble. Thank you for hiding your freckle. Should do anything for me. There we go. I should have added 140. I'd be almost even right now. Well, if I'd have got 10 of them, I would have been. Big up $150 if I had 15 of them. I'd be up more than that now. Let's break. See, now we're at another resistance right here. You see this here trend line? And back to even.
Just popped into a resistance zone.
Yeah. Yeah. That's what I'm afraid of.
Take a bigger look. Have they just been playing in this zone the entire day?
Yep. Well, not really.
Yeah, we got through 2 zones. Man, I wish I'd have saw that a while ago. Ah, dude, look at the 63 on the 3-minute on the S. God, we would have gotten the call so good.
It dropped right. Oh, on the ES.
Mm-hmm.
Wow,
Look
that's
at 63, and look where it reversed. Wish I'd have seen that earlier. Damn it.
I think that's why we got to keep kind of rotating back and forth, like you said the other day, in time frames.
Yeah, I'm gonna have to make a chart with 4 time frames and just do the 1, 2, 3, and 5.
Yep. Yep, bounced right off 63 3 times almost. 4 times.
That's what I'm gonna do. Alright, so we're gonna do 1 minute, 2 minutes, 3 minutes, 5 minutes.
Yeah, because it retested itself that last time on the 63. See that double bottom on the 63?
Mm-hmm.
Just right within 3 minutes of each other. Or not 3, but 9? Lower 9. FOMO Apple. Well, come on, you patriotic. Yeah, I had a good time at the man meeting last night. I've never been to a man's thing. Well, back when I was a kid, Boy Scouts, and basketball, and baseball. I didn't play with women back then. I used to have another club my dad used to go to. I can't remember.
Okay, I got every time frame imaginable now. I'm staring into infinity here.
All but the tick.
No, I ain't using the tick.
That's,
Use that 3 minute. I would have been good.
so let's see what. I'm still in these suckers. See what the tick looks like.
Literally, it's been respecting the 63 on 3 minutes since 9:30 this morning.
So we got the 100 tick. And we're going to change this to 25. $25 tick. Well, it should have changed it. It did not. God. To me, it's just, I don't like that. Well, potential support. Sparks is here. Thanks, Washboardjim. Done for the day. Oh, I didn't get to say goodbye. I'm gonna blow a kiss. Don't get jealous, Sue. That's a good idea. I'm here Jake Paul, I'm here. Well, we're at resistance again. I keep thinking we're going to break, and we just might not. So I think next time I get up here, I'm going to sell it. If I do. I should have got out of it. And then if I would have added on, it would have looked pretty nice. 15 times 25 bucks. Which is 15 times $25 equals 375 pesos. I'm going to go over my watch list here for earnings that I did. I was going to pick out 5 good ones this week. And I ain't got around to it. Crocs is up. AMD was one of them. I think AMD was a little oversold. Yep, there she goes. AMD breaking out.
So is SoFi. I think SoFi's running before earnings. I think somebody knows something.
Is Sophie on earnings this week? Or was it already had it?
Am I wrong about that?
I think you're wrong. Let's see.
No.
I thought
it was one of the ones that was coming up this week.
Yeah, they already had them last week. Richard's on it.
I'm real interested to see what PBTS does. That one is a weird mover. But between it and RGTI, they both move really good when when quantum moves.
I'm hoping PLTR pulls it back.
Yeah, I can't remember a single, that was one that I had all my money invested in last year. I walked them like a hawk. I can't remember a single earnings where they pulled back.
No, but they're at an all-time high right now.
Yeah, but they're just not, math doesn't even apply to them for some ungodly reason.
Watch Trump deliver major sports announcement in Oval Office. Okay, Jimmy. I really need you to break out. Your reputation. I'm going to go put my bathrobe on. It's nice and warm outside, but it's not in here. It's 75 degrees, but it don't feel warm. Okay, I'll bury that out again. I think I'm throwing money out the bad money into this, good money into bad, if I do it. We'll be right back.
Now, I did see your segment earlier with the chart, and it does seem like we're tracing out a clear 5-wave impulsive pattern. After 5 waves are complete, we should see a larger correction. To me, that implies the stock could get as high as, let's say, the mid hundreds. I'm not saying that's going to happen today after earnings, but it does look like it's in the cards. And I think afterwards, I think you'll see a longer pullback, consolidation period, maybe a time for the company to grow some revenues into the valuation. Maybe some longer term investors will start to come back into the stock. But it's just been a tremendous, meteoric rise. But to me, it does look like a 5-wave impulsive pattern. Investors are probably signaling that for the long term, this is probably the first 5 waves up, and there'll be more upside in the coming years. But it's clear we've kind of pulled forward a lot of the valuation just given the multiples that the stock's currently trading at. So for today in the earnings call, I really want to hear about how they're generating revenue.
Yeah, and we know it's sort of two facets, right? They've got this really kind of core, comfortable position where they've generated a lot of money through government contracts over the years. But the exciting part to the street over the last few years, Paul, has been the expanding enterprise or non-government contracts. What are you most specifically looking at when it comes to the performance from Palantir? What would you like to see?
Yeah, I've seen Alex Karpa's interviews. He's always very bullish. One thing that he has mentioned about onshoring U.S. manufacturing, which obviously ties directly into the rationale behind some of the Trump tariffs that we're seeing now. They did announce one partnership with an aerospace manufacturer called Nautilus that's going to be using their operating system to reshore.
Yeah, see, this thing ain't game.
Back into the U.S. and scaling production to meet.
Am I looking at the right one? Man, it should be at $2.
Sustainable aircraft. So they are beginning to do that. He is.
It has to break for me to get back even.
Uniquely positioned to be able to provide that product to companies that have manufacturing overseas. So that could be a big business for them. And
that or there's a delay with
very complex thing to do.
Tasty Trade.
There's a lot of local knowledge that needs to be transplanted. He thinks that a lot of companies don't really know how to do that. So that's one area I think they can really get a foothold on and be sort of first mover in that regard. So that would be really interesting to see more deals like this Nautilus partnership that they announced.
You mentioned sort of the good. You talked about the kind of the dynamic leader that always is, talking up the stock. You see that in other names, the Elons, the etc. Steve Jobs in the past. So those are things that can help it. You talked about the fifth wave, perhaps sending this stock higher if they have the catalyst and that pattern unfolds.
Again, I could have got in these things.
Are you worried about the
Be up
220
again.
times forward earnings, the 80 times forward sales? Or is this company just growing so rapidly in such kind of futuristic technology that you can kind of plug your nose and look past that?
I mean, I'm not, I'm not in this thing just for that concern. Like I said, I think there'll be a better opportunity to pull in. I think if the company was smart,
we're at the 200 again, so it's either sell it, take a $50 loss. And I didn't get in there fast enough. Right now I could get out of it at 190. Let's see if we break. I could sell them here at 190 and start fresh. It'd be a good idea. If you're in this trade with me, I'd think about it. I had a couple times there. I'd had 15, 167, 1.90 minus 1.67, $23 times 15. That'd be $340. Small gain, but That's pretty good though. What to do? There we go.
You're at the top of that resistance zone now.
I should get out at 220.
Yeah, I mean, you could break that zone, but I wouldn't bet on it.
No. I had a chance. I should have sold them. I think I would have got out at 220. Schwab. They gave me $100. No, we stay above the 200. I got a chance to get 50 a contract. Yeah, I don't know. Should I sell? That's the question. $205. Thank you very much. Well, oh well. Next time, maybe.
Yeah, I've been waiting all day for a big pullback. I ain't got it yet.
It's better than loss. $25.
How many contracts you have?
5.
That'll buy dinner.
Well, I don't know. After taxes. Speaking of dinner, I went to go have breakfast here at the Waffle House, and it took them 5 minutes, and they still didn't get to my table. So I got up and left, and I went to George's Steakhouse, and I looked at the menu, and I said, "Damn, $16.75 for breakfast, $20." So I ordered what I thought would be the cheapest thing on the menu, would be 2 biscuits and gravy and a coffee. 4 years ago, that would have cost me about $6 to $7. When she handed me the receipt, it said $11.50 for 2 biscuits and gravy and a coffee. And the coffee was $3.50. And I only had 1 cup, but I didn't even need the coffee. I just ordered. I said, God, I ain't coming in here ever again. It's my lifetime restaurant. I mean, 2 eggs, sausage, and hash browns with a coffee would have been $17. And that used to be my spot, man. I used to go in there and get that for $4 back in high school. George.
As we move into the next earnings coming up in 3 months.
And we've certainly seen in recent years that just because the market's moving higher doesn't mean these stories have to move with it. We can have a concentrated market. We've had one. George Tillis, welcome back, and thanks for joining us. It's going to do it for us here on Next Gen Investing. The watch list is up next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Whether you're an experienced investor or just getting started, Charles Schwab offers.
I don't see any bullishness either.
It's just chopping dead in the middle of a resistance zone, but it's still above the 63. The 63 has been pushing it up all day.
Yeah, and we've been battling that 200 ever since
Like if you just stare at the ES 3 minute, you can
10 o'clock.
63 pushed into this resistance zone. I think it's going to push it through it.
We've been battling the 200 SMA for 3 hours.
On which time frame?
3 minute on the SPX. And we're at the point of squeeze, and we got a rising wedge. This thing drops to 120. I'll look at it, but I gotta go get that tea going. I was gonna make chocolate, but it sounds awful. But that's more calories. Tea's a lot less. And I've had to. You ever had raw sugar? Me neither, not until just first time I ever bought it. But I was reading about, I got jasmine tea, and it's kind of hard on you. But I like the little pick-me-up it gives me. A lot better than coffee. Okay, here we're at 1:30. So I'm going to go get that tea going. And I was reading about raw sugar, and I said, what's raw sugar? So I bought some this morning. little packets of it.
We're gonna get another 300. I mean, another 3-minute touch here.
We're at 120 right now. I don't know if I can get it. There it is. I can get it now. But I'm going to wait. I'm just going to wait. Hey, Nicole. Showing a little cleavage. Sorry, I can't take you to church looking like that. Magnificent, close your eyes. Nicole's showing a little cleavage. I think we should go for it, but I'm not. I'm going to wait. I'll be right back. We hit the right shoulder almost. There's 150. That'd have been a trade. 125 to 150.
CEO of Berkshire Hathaway for 60 years. So the stock is down about 4%. Now you can name what reason is it that the stock is down 4%? Is it because they had a pretty significant earnings miss, only $2.13 versus about $4.80 expected? Is it because Warren Buffett announced that he's stepping aside, or is it because, Greg Abel is going to have about $350 billion in cash to use, and the fact that they didn't put any of it to use, or a very small amount to use during this recent sell-off, has investors overall somewhat disappointed or less than excited, even though the stock traded, under $503. It's already $15 off its lows, but still down 4% on the day, with a little disappointed in the earnings, a little disappointed that Warren Buffett is stepping aside, although it's not terribly surprising, and a little surprising that they didn't put more cash to work during that sell-off, Nicole.
Yeah, and the question is, what will they buy? What will they do next? How they have to be so cautious in their next moves and what they're going to buy and trade. I mean, Greg Abel has to make some serious decisions and not mess it up, and really build confidence in himself in the new role, and as they do this in January. So the stock was at record highs. There was some talk too.
Close your eyes, Magnificent.
They do have an age limit for people on the board. I believe it was 80, but it was eliminated.
Magnificent, close your eyes.
And the chairman role really makes people feel better for the Berkshire Hathaway investors to know that Warren Buffett's still being there, and he will continue to, follow this closely in his chairman role. Don't you think?
Exactly. He said he'll take a diminished role, and that Greg Abel has
He'll take a
been doing
diminished
a
role.
lot of the work on the non-insurance portfolio part of the business anyway. But Greg will take over the leadership role, and Warren Buffett will step back. I don't think he'll step back completely. I think he'll always be involved, just not as high.
He won't be involved. He's too damn old.
What about Powell Palantir. Looking forward to hearing your thoughts. I know the options markets are pricing in some pretty good moves here for Palantir after the earnings.
Yeah, exactly. Palantir, if you see the numbers, it doesn't look very impressive. They're expecting about 13 cents per share in income and earnings per share on about 862 million in revenue. That's
not good.
A penny less than last quarter, but you know,
Jimmy Carter pulled back.
% higher than a year ago when they only made 8 cents. This company, though, has captured the imagination of a lot of investors because of what they're doing with AI, right? What you're gonna hear this term, it's called digital twin, where they digitally represent a company's outcome and systems, and then they're able to implant their AI model to help make that company more efficient. Now, they were doing that for the government and single companies, but now they're combining it into one big infrastructure system where they're comparing notes with companies, and the fact that they've been able to do that to small and medium businesses and not just the government is what really has taken this, it's made this company stock explode on the upside. Now, the numbers are gaudy, how much they're up for the last 3 years and year and months, but this company is doing amazing things with AI, and it should be an interesting earnings release at the end of the day, Nicole.
Yeah, I saw they were pricing in about a 13% move. Some of the guests that we've been speaking to are expecting even bigger moves. Jan Ives, who's a bull on this one, saying that this is part of the puzzle. The missing piece of the AI puzzle is Palantir, and so many deals.
Jan Ives is pumping it.
Are military, so great stuff there for Palantir. But let's see what they say on the earnings, and then the call, and the guidance, which is such a big part of it. Kevin Hanks, great to see you. Thank you so very much. Let's take a look at the bigger picture. Raj Patel's with us, Head of Asset Allocation at Fiduciary Trust International. Raj, good afternoon to you. We're seeing the markets claw their way back after 9 days of gains. We haven't seen that for the S&P 500 since 2004. Pretty impressive, and sold off. And look, the Dow's managing to come back.
There she goes.
Come back. What do you say when you see a market just
I did it again.
to go even on a down day?
Thanks for having me. I think that's
150 to $2.
Perspective you bring up, and I think that the markets are trying to price in a little bit of optimism. I think we're getting some really good earnings data as the first quarter earnings season unfolds here. We've got a package of economic data that's largely backward looking, but still remains intact, so to speak. And then we've come off the boil on some of the trade tensions and trade talk, it looks like. So no real deals, carve-outs, clear exceptions, but it does look like the tone and rhetoric out of the White House and Trump administration looks like it's a little bit better and off the boil. So I think the markets are looking to claw back and reassess what it looks like from a prospective situation. And I think that while the backward-looking data remains intact, as I mentioned, there are some risks prospectively as the longer the trade tensions kind of play out and kind of unravel themselves. There is the potential for the forward-looking soft data, which is already weakening, potentially catching up with the backward-looking hard data, which remains stable. So it is a pretty interesting perspective here where, if you look at this range here we're in, between 5,600 to 5,800 for the S&P 500, we've pretty much recaptured the levels from pre-Liberation Day here, and that is a little bit of a surprise to us. And there's a lot of moving parts to kind of unravel and unpack. But I think markets are trying to basically here tell us that they're pricing in the best case optimism here from trade, macroeconomic data, which remains resilient, and first quarter earnings, which remain solid, if not stable, and then guidance, which remains a little bit mixed in the out quarters and for the remainder of 2025.
Yeah, and that's the whole thing. I think a lot of folks, when you ask them about how do you think the economy is going to do now in the next 6 months, and you get sort of this mixed bag, but then you say longer, and people jump on board and say, yeah, pretty good, it's just going to take some time. Are you in that camp that maybe, the volatility and the uncertainty in the near term is more prevalent, and then later in the year and next year will be better in many ways?
Yeah, so our view is pretty straightforward in the sense that we had decent momentum from a macroeconomic perspective and a corporate fundamental perspective. And what I mean by that is the economy was chugging along. We had decent economic growth coming into the trade war, so to speak. We had decent visibility into corporate fundamentals. Obviously, earnings got revised down.
Revised down.
After the trade war started, but our view is that we had decent buffers in place from a corporate fundamental and macro perspective. Household balance sheets are healthy, corporate balance sheets are healthy. So we think the clock has started, so to speak, on that prospective data that I'm talking about, where there is a lot of uncertainty. As you mentioned, there is elevated market volatility in both equity and fixed income markets. So there are buffers in place where we can withstand the trade shock.
Stifle. Washboardjim is going to go over a few earnings here. We got tomorrow morning. Let me pull up my earnings thing, please. So we got after hours. We have HIMS, PLTR, and Ford. These are my three favorite for tonight. Do you understand? Someone say yes. I'm not sure. Oh, God. Always clean, janitorial. This is Washboardjim with a sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now. You are being recorded on a YouTube channel right now, so what you may say will be held against you in a court of law. I would suggest you say nothing and get a lawyer, please. If you know what's best for you, you'll do what I say. Don't you agree? Good cleavage will wake you up. I was kind of getting a little tired there, and I can always count on Nicole. If you know what I mean. You know, I didn't even think about her last night. I should have. The Kansas City Chiefs preacher did have a good point. Do you have the heart to be a man? Oh, man. These things are at 225 right now. I'm about ready to have a shit fit. Can you believe that? I'm so pissed off. No, I did not listen to the song you posted. I didn't see it. Cody Jinks, snake bite. Oh. No, that ain't the one you posted. Look at that. They went to 225. I'm glad you closed your eyes because YouTube might have banned that. Nicole does have nice cleavage. Man, this is really not that bad now. I can actually drink it. And it don't dry your mouth up as much. Jerome Powell. You need to get these interest rate lower.
Whether you're an experienced
so we can pay off the
or
debt.
Just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern
Tom White.
on the Schwab Network.
I'm Tom Baldheaded.
Welcome back to the watch list. It's
Close your
time
eyes.
for Options Corner, where we analyze unusual options trades that we're seeing throughout the day. Real trades. Tom White has been looking over these, host of Fast Market here on Schwab Network, and has found a few trades that he's going to share with us. It's interesting because these airlines have been leading the S&P 500 today. You found a bullish call, a bullish trade that you have here for American Airlines. I'm curious to hear about that. You want to give us one market thought before you hit these names?
I got a market thought.
Yeah, the market's trying for that 10th day in a row into
I
positive
can't think.
territory. I just think the optimism out there for potential trade deals. The Besson came out and said that they're still working on some. That's, I think, what's driving a lot of the optimism. And then on the flip side, the hard data is still good. Jobs number, non-farm payrolls was decent last week. So some of that data is still good. There's still some outliers in there, continuing claims, continuing to rise on those weekly jobless claims numbers. That's probably not a good thing. But then on the flip side, earnings has been pretty good so far this season, Nicole. We've had some decent beats, especially from some of the big components within the major indices. So all lending some optimism. I don't know how long it's going to last and whether it should last. Maybe some consolidation warranted at this point, but it's nice to see stocks rebounding from those lows that we saw on April 2nd through
So
the
this is what I posted on
Yeah, without a doubt. And now you have industrials and communication services, real estate.
X. I can't think.
When we started the day, all
Anyone want to take a guess?
and even consumer staples is trying to squeeze out a small gain. So market breadth has improved some. Tell us about American Airlines. You found a trade there, a bullish one.
Yeah, crude oil down nearly 2% today, and that's been pretty significant drop. So far this year, crude's down about 21%. All that goes right into margins for these airlines. So you're seeing a nice day here from the major carriers based on the fact that we're seeing a pullback in some of those fuel prices, most likely, with oil continuing to fall. Their last earnings report in April, they basically withdrew all their guidance for 2025, the rest of the year. The current quarter estimates, they dropped those also from to 50 cents to $1, and the original consensus was over $1 for the current quarter as far as EPS goes. So some of the airline CEOs talking about the uncertainty that's out there. I did see a stat earlier today that flights into the U.S. from abroad were down pretty significantly from year ago levels. So maybe the travel industry, I know domestically that these airlines are getting hurt a little bit with competition. They've had to drop fares recently, and that's put pressure. I mean, this stock's down over 40% from those highs in January, above $19 a share. So yeah, it's been a rough stretch here, first quarter here for the airlines. But I did see some bullish activity in here. And this was out in the June monthly cycle. The 12 strike calls, trader
Golly,
this
man.
morning bought over 3,000.
This thing ain't giving up.
Debit of about 45 cents. So the break even where they start to profit above $12.45 over the next 46 days. That's about.
See, these are the days when the option prices don't go up much. I mean, up here it was at 225. And then it went up here again. It was right around 205, 210. And then we get up here and it's back down to 190. So I could have got these at 180, 175 and sold them at 205 maybe. We ain't gonna play around in that game. AAL.
The treasuries and all that. That's not what it was. It's not sell America, it's just buy less America. So, you're seeing the travel, you're not going to have as many travelers here this summer. That's becoming evident to us.
Yeah,
Let's talk about Home Depot. Yeah, go ahead.
And that's going to hurt, big cities like where you live in New York and me here in Chicago, because we rely on a lot of those dollars to come in, especially during the summer months when people are traveling. But it also could be reflective of a softening economies around the globe at this point. That could lend some support to that. And remember, 2024 and 2023, where everybody started traveling again more and more because they hadn't been able to travel for a couple of years, that's probably also leading to the difficult comparables this summer.
Right, understood. Thank you for that. Let's talk about Home Depot, because this one you found a bullish trade, and this can go either way, because we've gotten some prints pertaining
Now
to
look,
housing, which actually
she's covering it with hair now.
home sales. If you have a rate that comes down, but lately right now it's not coming down.
How disgusting.
So let's see, not today, not this moment. Let's talk about the bullish trade you found, please.
Yeah, if you looked at their past couple of quarters, they weren't great reports. They had same-store sales that dropped like 1.8% last quarter, and that's not positive. And they're expecting only an increase of about 1% this quarter from year-ago levels, and they report earnings on the 20th. So I think they've been getting a pass. A lot of these home improvement stocks have been getting a pass. Maybe they've been used as kind of a safety play because they're really shareholder friendly. They pay out nice dividends. They reinvest back into the stores. But yeah, it's been a rocky and roller coaster ride for the housing market in general. And when you've got the 30-year mortgage rates, still just below 7%, you're not going to spur a lot of activity, and home prices getting at or near record. So yeah, maybe the consumer stretched here a little bit, but the stock's still down about 17% from all-time highs that we saw in November. So it's pulled back some, off about 6% this year. And Bernstein lowered the price target on the stock today to $380 from $421, saying the tariffs are going to impact their business. They just don't know how much. I think that's been the thesis around here. Wait until the end of May into June to kind of get the impact of what tariffs are going to have on a lot of these businesses, and the uncertain macroeconomic conditions that the CEO highlighted during their last quarter was also something to kind of take a hold of. But did see some bullish activity in here, and it was a trader getting out of one position in the May options out of the 440 calls, and they bought into The June 20, the monthly options on the 390 strike calls. Trader bought 5,000 of those, average debit of about $3.25. So that break even.
Well, I got a good answer.
Here,
I think it was brilliant on X. I mean, I didn't even think about it, but that's a real good answer. Squeeze. Oh, yeah, I said, I can't think. Anyone want to take a guess? Squeeze. I think that was a pretty good answer. If you want my opinion. An excellent answer. I don't think nobody can beat that one. What do you think, guys? You know it's the dang truth. New high, and we are now at 210. I would have made $50. Oh, look here. Sue's got a couple of them. The SPX Lottos at 5,700 strike. At 65 cents. Snap. In the name of love, before you break my heart. Okay, we're at 160. I'm going to be ready to make a business decision here. And I still don't want to. I'm really not that bullish on these things. Not at all. So I'm just going to be patient. Might get them back down to 120. They're at 145 right now. Yeah, that tea, that's good stuff. We got a megaphone. So I'm doing a paper trade at 160. Could have went to 145. Well, not really. It's not a megaphone. Well, it is. It is and it ain't. So 145 to 170. I hope Nicole doesn't block me now. $185. Shit. $190. That would have been a good trade. Now we're starting to get something out of these candles. That's 1, 2, 3, 4, 5 times. On a 1 minute, 3 minute. So 3 times 7 is 21 minutes. It's been in a flag. And it's now 1:32, 2:32 Eastern Time. I've had a pretty good day, so I really don't want to ruin it. Always clean janitorial. May I help you?
Hi, this is Harriet with Home Security Promotions. How are you today?
Oh, I'm not doing too good. I got stuck in this trade, and I've been sitting on it and finally got out of it.
Okay. So I'm calling because we're offering a new state-of-the-art wireless alarm system with a free doorbell camera, and I just need to confirm, are you the homeowner?
I'm the homeowner, but I live in a 2-room shack.
Perfect. Let me get my home security specialist on the phone for you.
No, you don't need to do that. I'm at work. I could get fired talking to you. We just broke resistance. And we're still at 195. We're only 2 notches from in the money. I am Shiba. Do you think I'm very professional? Meh. What's that mean? You know I'm professional. I have a great phone voice. That's what my college teacher told me. My college teacher, she asked me one day, it was a she, and she said, she says, how do you settle a contract? And I looked at her in the eye and I said, I settle it with a handshake. And she said, no, you don't do it that way. I said, what do you mean? Every deal I've made, I made sure it was secure with a handshake. I said, oh no. Women don't like to be touched like that. So I had this girl that I worked for one of the companies I worked for, and I got this other contract. And I remember her saying that, and I forgot about it. But when I approached her, I gave her a big hug, and then I realized that probably was not appropriate. Because I wouldn't hug a guy after I got a contract. It was definitely not appropriate. I knew once I'd done it, I said, oh shit. What did I just do? It has to be seen. That's right. Yep. Someone in the room says, because once you do that, it has to be sealed with a kiss on the lips too. So I remember I was at a bar. I'm getting ready to trade again, but I was at a bar. And it was kind of packed. And this girl comes walking in, and I had a seat empty next to me, empty. And she comes walking in with her husband or her man or something. So I jump up out of my seat and I said, here's your couple chairs here. You can take, you two can sit down here. And she says, Jim. I said, what? I didn't know who she was. And it was that same girl that I hugged that gave me that contract. And she says, I can't believe you're one of the nicest guys I've ever met. And I said, do I know you? She said, yeah. And she gave me her name. I said, oh. I said, well, that looks good on my resume. She was kind of happy about that I gave her that seat. Because I had friends and I could go there and sit at that table, another table. So we're breaking out now. We're at 210. Yeah, these things just ain't going nowhere. I could have got in them at 180. Because it kind of shrunk, I'd sit up here at the top. It went from $2, 205 to 180. I just don't feel like trading it if they're not going to hold their value. And something about that I don't like. All-time high, and they're still at 190. 180. There's 185 right there. See, it doesn't hold its value. It goes to new high and it goes to 190 from 195. Burning up calls. SPX puts are burning up calls. So guys, when you're out doing a contract, make sure that you don't hug the female, because that could be, there they go, 240. Now I could have got 190 to 240 there, $50 a contract. Now we're at the top of the megaphone. So I'm going to look at puts here. Do you hear me? The 5670 puts at $1.15. Yep. $1.15 to $1.25. $1.35. Just in case you don't know who I am, I'm Washboardjim with a sneaky snake trading strategy. This is a 3-minute time frame. This is the SPX 5670s at 115 to 135. Where I talk about chart patterns, moving averages, and being in the know. Now, this is a paper trade. I didn't trade it. May 5th, strike 5670 from 1.15 to they hit 140. Richard, can you hear me? Richard. That was a paper trade, YouTubers. I gave a hooker a hug one time. That was very professional. Okay, it's time for chap lips. Right now it's 1:46. We have approximately 14 minutes to power hour. I think I'm getting ready for the big play at the end of the day on the puts. I'm gonna walk up to the store and buy me a Powerball ticket tonight. How does Mr. look to me? It's a good question, and I'll answer it with the best answer I can come up with. Well, I liked how it bounced off the 200 on the 1 hour time frame today. And let me see if I put a trend line there and see if I'm right about that. And I can barely see it. Yeah, I think we bounced off the 200, so right around 372.77. Oh yeah. I like how it bounced off the 200. And we just broke the orb on the 1 minute. I have a resistance of 390.75, so we're close to resistance right now. I called this thing out this morning at the lowest possible level. Not the lowest, but right there, and that'd have been about the same spot where it broke out of the second wedge. So Jimmy likes it. Jimmy's going to go to the 5-day, 5-minute. There's a lot more room it can go. If we break 390.35, next resistance is 394.13 or 394.30. Support to stay bullish is right at 386.69. So the question is, do I like it here? I'm not sure I'd jump in it now. I'd wait for a pullback and see if it held 386.69. Is that a good answer? Yep. And I'll put the chart in the room. Was that very professional? Yeah, that jasmine coffee, man, that jasmine tea can really get you wired up. I wouldn't qualify. I think Nicole would tell you different. She's not very professional today. Look at that guy smile. I'd be happy too.
Pretty bullish right now. I mean, I think bottom line is what the market's telling you is we've already priced in all the bad news with tariffs. Now you're starting to see deals negotiated. And if you look past tariffs, you know, I think you have a relatively strong economy, right? We had a strong jobs market.
Exactly.
That came in on Friday. If you look at wages right now, they're still going up. We have
Exactly.
a labor market. You know, people are still spending money. You know, if you look at retailers all the way through April, you know, people really haven't dialed back on their spending, even with the fear of tariffs ahead. So I think we plow through and get some trade deals done. I think this economy looks very good, and I think right now the stock market sentiment's very negative, which I like. It's a bullish sign.
Yep.
And fundamentals are very good. It's time to be bullish, Nicole.
All right, very interesting. I think a lot of bulls out there will like that perspective. Corey, what do you think here? Because we heard from On Semi, and they did talk about the signs of stabilization that they're seeing, particularly in the industrial market and such. And they had some good numbers, but the stock sold off with the market today, too. It's down 7%. What do you think of it?
I wouldn't call these good numbers. I mean, they were better than expectations, but all that tells you is that the expectations were wrong. These were bad numbers. The numbers were down. The revenues were down 22% on a year-over-year basis. They warned us that automotive, their biggest business, could be down as much as 25% on a quarter-over-quarter basis. It was down 26%, so even worse than what their lousy guidance was last quarter. So
You don't sound too excited.
Challenging quarter for this business. That's so interesting. On something used to make all kinds of chips, and they've really drilled down, if you will, on focusing on automotive.
So that's the 3 minute.
Silicon carbide chips for EVs. So for electric vehicles, these are the chips that allow the charges to happen faster.
Yeah, there's 110 to 135.
And they've got a lot of design wins there. But overall, this has been a very tough business for them, and you can see why the stock's down, because they just, 22% decline.
Well, that would have been a good trade. 110 to 140. The 5670 put.
I think you explained that very well when you talk about
145.
the automotive, the fall off.
Bam, out of the trade right there.
Decline. So,
150.
They beat the street's estimates,
5.
but the estimates were lowered or whatever, or not.
Okay, we're at the bottom of the channel right here.
Picture, but then how come the rest of the semiconductor market, if automotive
180. Unbelievable. Man, I'm slipping here. I could have had a winning trade right there, Nicole. Right to support. Look at that. Bam. Right on the double confirmation of the megaphone pattern. Let's look at calls. 170. Ooh. That would have been a good trade. $1,100 invested, and I would have made $600 bucks. $650. $110 to 170. 180. Fuck. $185. $205. No. There it is. There's $1,000 right there. 135 bucks. A contract. I knew it was coming.
We just tapped the 63 on the 2 on the S.
Yeah, I see it.
We're going to tap the 63 on the 3 is what we're going to do.
Well, you know what? I would have tapped 1,300 bucks on that trade. 100% gainer. 120%. from 110 from the. I looked at it and I just didn't push it. I kind of felt like it was going to pull back because the way these calls were.
You were in a resistance zone on the NQ.
Yep. Well, 4 minutes to power hour.
Yeah. I really want this last little 3 minute 63 tap like it's been doing all day. I think I'm going to grab it at the bottom of this resistance zone at 56.97. There we go. There we go.
Yep. Went to 320 now.
Already 160. 56.85.
We're at another resistance here, or support, off my trend lines. That'd been $2,000, 200% gainer. One more minute to power hour, less. Never going to come down and hit the 200 on the 2 minute.
I don't think so. That would be losing the whole zone. You know, RSI on the 1 minute's already hot.
We're at the 63 on the 3 minute. A little bit below it now. It could come back down and hit 56.71. Here we go. There's 460.
What about the 63 on the 5 minute?
550. That'd have been $4,000. I can't believe I called that out. Called the top of the megaphone out. I said I should get a put. Now we're definitely at a 1-2 freebie. We're at a solid support here for the calls. It's $6.10. 670. This is a high. 740. That's $6,000 on that trade alone for $1,000. Now I'm going to look at the calls. The 5680s at 220, 215. So we'll see how this works. I'm in them. 220. This is risky, so keep that in mind. $56.80s at 2.20. Almost got 15. I'll be right back. Gotta get some water. Back to even here. Yeah, that was a good trade. Them puts.
Probably stopping here. Oh shit, we're stopping here because NQ was hit freaking support zone. That's why.
What's that?
NQ hit a support zone. That's why we reversed. I mean, to the penny is on my support zone for NQ.
I wonder what minute this was on when I drew that line. I'm gonna look at the 2 minute. It was a 2. Well, one minute. I drew it on the 1 minute. No, 1 or 2 minute didn't matter. 1 minute. Right now I'm up $35 a contract. There's 270, 290. All right, $3. Jingle bells. It popped back. Dashing through this. Oh.
Just went back into an ES resistance zone.
We're at the 63 right now, or the 200 EMA on the 1 minute and the 9. So it's a hard resistance here. It can pop, but I should get out. I think Bobo will. Just to be safe. 295. Oh, yeah, look at it. 330.
Mm-hmm. Yeah.
I did the right thing. Caroline. You almost exposed that freckle. It's real close. She's within probably a quarter of an inch of showing it.
They're going to try to push this thing to that other zone.
Back down to 215. Always clean janitorial service. This is Washboardjim with a sneaky snake trading strategy. Did you just see that last trade I was in? You hung up. Very unprofessional.
Very. Extremely.
Warren Buffett stepping down as Berkshire Hathaway CEO at the end of the year. $208. Someone in here's
95.
Well, I better not write that in there. I don't like writing good things when people are having a hard time. Although I did lose, I didn't take that put. I mean, dadgummit, I'm still pissed off about that. 56.70s. $5.70. Okay, if we're at a pivot point again, they can go a little bit lower, drop another candle, but this, I got this 56.69.48. These are the 56.80s at 170. Oh wait, there's 190. 5670s at 170. Calls. Tomorrow's Tuesday.
Jasmine.
I think it's about time to go long in these. Could have got the 180. Let's see if we get that again. The 5680s. $185. $165. $175. We're going to find out. $175. $220. Yeah, everybody's wanting to throw their money in Europe. Okay, we're at 180. Come on now. These are the 5680s at 175. I'd like to see a nice little bounce here, maybe. Maybe watch the boxing matches this weekend. I thought they were a joke. I don't know what kind of fights they're putting on. Ryan Garcia really sucked. I wouldn't fight him, but I mean, I'd rather fight Jake Paul. In my prime, I'd have whipped Jake Paul's butt. You're at 205. Dadgummit. There it is. I got to get out of this trade. Or funniest thing ever happened to me last week. After we had that big storm, I couldn't get my radio station in, so I turned it on the Bible channel, and I haven't switched it yet. I've been going to sleep with that Bible channel on. Dad, tell me about Grandpa. Well, how did he leave us that $10 million? Oh, there's 150. Well, this ain't working. We could drop more.
Yeah, especially if you lose the 63 on the 5.
Yep. We got a fallen wedge. We can go down one more big candle. 5668. If this doesn't hold. And I'm down a couple $100. There it is.
You're gonna drop it more.
Mm.
It's gonna come to this support zone that I have on the S at 5682. Or either it bounces off the 200 on the 2. Jesus Christ, never mind, just cut through it. They took it to the support zone.
Yep. So we're going to see what I can do here. $0.85. .80. Let's make it back up. Give me 128. $56.70s went to 7 puts. Probably went higher than that. Might better stop out of this and take this big loss if we don't get a bounce soon.
If they push ES to 5683, 5684, I'm gonna jump in 5675 calls.
Yeah, I got to get out because I'm too far out of the money.
Matter of fact, I might take a 5670. They've come down to 250.
The 5670 puts went to 860, 880, 890. $9 probably. That'd have been $7,000. 8,000, I mean.
So basically, none of the moving averages held. So I can switch over to the scalpel grid. Just wait for it to come to me. It's getting pretty close. I don't want to be too greedy and miss out on a good one.
Get out of here. I'm going to take a good nap. Good half hour. Sitting here all day is starting to get to me. I might have to retire soon.
Mm-mm. Nah, it's not on the cards. Don't you dare pop yet.
Yeah. Come on, baby, bounce. Give me back my money. I should be a little bit more shook up, but I don't feel it. Well, actually, I'm doing better than that. I got the wrong number down.
Come on. There you go. Not 100% sure on this. I'm gonna swap to the 56.75. I'm gonna take it at 135.
Right back.
A minute. See what happens. Keep going.
Under 135.
Mm-hmm. Yeah, I got him at 135.
Got to break the 9.
I see a trend line forming. She looks strong.
Yeah, I got.
When she comes down.
We'll know in a minute. We got a symmetrical flag out of the bottom here.
Come on, help.
What you got going on, Mr. Green?
the least here. We're still holding up above that 50-day moving average, which once again I think is going to be a win for the bulls for this week here. If we do see any type of meaningful breakdown, first area of support I'm looking at is 5,600, and anything below that, you start asking yourself, will we get back towards that 5,400 level? Right now, there isn't any indications that that's going to be the case, but we did see market breadth kind of expanding based on what we saw earlier this morning, where we saw very light participation when it came to the S&P 500. Right now, we have a little bit less than 50% of the stocks in the S&P 500 in the green here today. So we're holding up. Obviously, we have a lot of economic data points going to hit this week, as well as the FOMC meeting. So not surprising that we actually saw a consolidation day, and that's actually a pretty decent thing. If that happens for the next couple of trading sessions, but we do not see any further breakdown or any type of breakdown here, I still think that the confidence right now is for the bulls to try to get us to that 200-day moving average, which is sitting at around 57 and 50, give or take.
Okay. And then on a more intraday level, the low of the day was what, 56.34. So we're at least trading above that. We have seen a few sectors turn positive: communication services, industrials, consumer staples essentially flat. So what stands out on the intraday chart?
Yeah, for the close here today, we'll focus on the market on closed order. That actually has been moving some markets over the last couple of trading sessions. We're actually testing a pretty key area here, the 56.65 area, looking for a bounce off of this level. And if not, we're probably going to go down and potentially test that 56.50. But it appears that we're trying to at least hold this level up here for now. To the upside, looking at 56.85, I'm not seeing anything above that here to really give us some confidence that we're going to see, the squeeze going into the close. It probably will be a little bit more of a muted, close to say the least here. But the market on close order, the imbalance number, has been a major driver, and it has been more of a driver to the upside rather than the downside here. So we're losing a little bit of steam for the most part, but once again, consolidated day, everything's for the most part holding up here. Volatility is actually something to watch. We did see the market actually get back to more of a normalized VIX curve for the most part. Still in backwardation if you're looking at the VIX futures, but if you're looking at the spot VIX minus the front month VIX futures contract, we were actually in the negative earlier on today, or the positive earlier on today, meaning it was normalized. That's kind of reverting and getting close to inverting here a little bit. So something to keep on the radar, but nothing, once again, too scary. I think we're probably going to have to wait until Wednesday to really see some fireworks in this market.
Yeah, of course, that's when the Fed will not just give the interest rate decision, but we'll hear what they have to say in terms of the outlook. But speaking of the VIX, we have been seeing some bouncing around, some reversals, but overall the moves have felt pretty muted compared to what we've seen in the past. So a VIX around, 23 is normal?
It's not normal. It's still a little bit elevated here, but it's actually really good for traders or intraday traders when it comes to scalping. When you're looking at around a 23, 24 VIX, you're pricing in around a 1.4 to 1.5% implied move or implied range on a daily basis. That's actually a pretty decent environment for trading. But a normalized VIX would be more towards a 17-ish level, 17, 17.5.
Big break.
To go to the downside.
91.11.
There's still some uncertainty over the next couple of weeks when it comes to tariff policy. If you look at some of the commentary over the weekend, there might be some bright spots that we may see some tariff adjustments over the next 2 to 3 weeks. From the White House ahead of Bloomberg.
Come on, baby.
Interview actually earlier this morning that kind of hinted towards that, and then President Trump over the weekend also had that type of commentary. If that were to be the case, probably would crush volatility a little bit more to the downside here. The biggest risk that you have for volatility this week is obviously going to be the Federal Reserve. What type of commentary can they actually provide to the market that would give them a little bit more enthusiasm to continue to buy? And obviously, it's not going to be on the interest rate front, but it might be on the quantitative easing front.
Got a buck.
Some more commentary about potentially just ending the overall balance sheet runoff. That would be the first signal, or first sign that the Fed is willing to step in and try to provide some liquidity, support the community and try to market in. QE is actually probably a lot better policy than interest rate cuts at the moment here. So that is really kind of be that bull sign for from the Fed. And if not, that's probably where you see a little bit of a volatility spike and equity markets.
Let's see if I can get.
Okay. All right. Noted there. And finally, I know you have a chart for Palantir, which we'll be discussing after the close when it reports earnings. Pretty muted action in shares today, only up about 0.1%, very close to all-time highs. What stands out in the chart there?
Yeah, it's not so much the chart. Obviously, it's kind of
There's your dollar.
contesting those all-time highs as you're talking about going into the earnings announcement. But it's obviously the bullish trading activity that you're seeing on the call side here. And I wanted to highlight two trades that I thought was
Give me a
actually
little
very
bit more.
interesting for our viewers here. One was actually $1 million premium trade into the 133 calls. This is an outright purchase here, expiring for this Friday. So very aggressive. Somebody's taking the tone or taking the trade that they believe that the move is going to move to the upside, or the stock's going to move to the upside here. You also saw a lot of activity in some out of the money calls, some really out of the money calls. The 165 calls.
Yes, soup for me.
Pretty much all day here, expiring on June 20th. So
I cannot accept that course of action.
Boom shakalaka! Boom shakalaka! Boom shakalaka!
I just need a little bit more. Come on, Mr. Green. Wonder how Buffett did on his OXY. No can do. Let's move on. No can do. It's traffic jam. Well, hell. I sold some, but not all of them. I want more. I don't think I'm going to get it. We got 20 more minutes left, and I'm going to go get my hot chocolate. Not one of my best closes.
That's fine. I'll grab some more. Not that it's my zone.
You're about to double bottom.
The only way I'm taking another trade is if it hits my zone. I won't
Yep.
get another trade unless it does. I'm looking at 56.70s now.
Gosh. Always clean. It's getting too late for me to trade. I got like 6 minutes.
It's there. Just bought one for 150. We'll see what it does.
$140.
Mm-hmm.
Got a hammer. Could go a little higher. These are the 56.70s. Ooh, nice drop.
Cool. Bought another one for 95.
Be careful. We're now at my support level, 56.85, 57. I feel like swinging them for tomorrow. Let me see what they're at. Nah, I'll wait. I'm not paying that kind of price.
I'm in two of them at an average of 80. I'm at a 90 now. 95. $1. I'll take 20% profit.
We have 12 more minutes left. It's around here and done hardly nothing for the last 2 hours. I wish I'd have stayed in them puts. They went to 1,000, 1050 right now, 1,100. That would have been a good trade right there. 10 times 11 been $10,000.
I'm gonna load up a put just in case they push it through the bottom of this zone.
They might.
They might go for the top of the orb.
We've got 11 minutes left.
But it should, like it's been in a support zone, it should have come back up by now. There must be some strong selling.
It'll probably be up in the morning.
Boom shakalaka.
Right now you're at a support level. Real strong one.
Ugly.
Nine minutes left. I'm not going to take no chances. I'm done.
There it goes. On the orb.
Boom shakalaka. Boom shakalaka. Boom
Push this bit from 125 to 190.
The bottom megaphone. Now the 5660s right here at 110, 115.
Boom shakalaka.
Thank you very much. That's really nice. Thank you.
You're welcome.
Oh, you're welcome, MA. If it touches the orb, I'll take that call you just called out, just to see if it bounces real quick again.
5650s, 60s.
Yeah. But only if it touches the orb. Have a knife through it, obviously I'm not taking it.
Yeah, I'm not going to do it. I'm done. I don't want to. I already screwed up one trade.
Damn, they lost a lot of value. Maybe I gotta move up to the 55s.
tomorrow, can you?
I dare ya. A double dog dare you. Oh, you took me up on my dare, see? Alright, and I'm at 95 cents. Let's see what it does.
What one?
The 56, 55s.
We're at the 21 on the 1 hour. We're at the 21 EMA.
$1.20 from 95. I'll take that. That was only a few seconds work. Could go up more, but got a lot of downward pressure on it. The orb held long enough to make it $30 a contract, so.
There's really no support. We broke past what I would think would support would be at 56.55.
The orb on ES is what's holding. I'm not going to touch a call as long as that EMA cloud looks as ugly as it does.
Yeah.
That thing's almost a straight drop.
Boom.
Mm-hmm. Wasn't worth it, me. I may get money today. I ain't losing it.
Nope. If I'd have held them puts, I would have had an excellent day.
I didn't take that many because I've been working so damn much, but I took 1, 2, 3, 4, 5, 6, 7, 8 and hit all 8 of them.
Yep. These 56.70 puts went pretty high. They're 18, 19. I think they went to $2,000. Had 10 of them, so it'd been $20,000 a day just in the put.
Jesus.
10 of them at 110. Called it perfect, it just didn't hold.
1 minute left. You just had a 9 tap. Do they push it into the 5661 ES zone to end the day?
Boom shakalaka!
Really?
Boom shakalaka!
1 more minute.
They call them dumps, big massive dumps.
Yes.
They love to park ES in these freaking zones every day.
Alrighty, I'm done. I gotta go do some work, it looks like. So, yabba dabba doo. Hope you all have a great weekend. See you later, Funky.
See you, buddy.
Yep. And I'm going to get out of here. I got to take some video. Greed is not always good. That is correct. Sometimes you just got to sit it out. So we'll catch y'all later, YouTubers.